कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance, where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit with me, Neeraj Shah, and my colleagues Alex Matthew and Hiral Dadia. And in the midst of a very busy week, we had the details of the India-EU FTA yesterday, and we'll talk about it in detail today, of course, through the show. But Fed decision or Fed commentary, if not a decision, to come in, and then we brace ourselves for the budget. So it's a very important next 3 or 4 days, guys.
Yeah, I mean, macros it is, I think, across, and the kind of impact you're seeing in terms of the dollar index and the way the rupee has been looking like as well. I think all of this probably is somewhere coming together for the Indian markets.
Particularly important yesterday towards the end of trade, right? The last 10 minutes, the vertical up move and the close above the 200-day moving average for the Nifty 50. I wonder if that momentum carries through today.
Something that the bulls would be hoping for. We are oversold market. Let's see if that lasts.
Yeah, and will this be that pre-budget rally is the question. And that's a piece that Somit will get us as well, that whether the budget is good or bad, how does February actually stack up? Usually in the past as well. So that's going to be the February seasonality.
And remember what people said yesterday, no negatives is positive in the budget.
I mean, that's the consensus that we're seeing right now. But let's take a look at, what are the global cues that we are watching out for as well, because it's been a pretty mixed year of trade in the US markets, and that's, in terms of S&P 500 and NASDAQ, both of them actually closed in the green. If you see the kind of closure that we saw, a pretty good day of trade. Treasury yields inched higher, and this was ahead of the Fed interest rate decision. So that is something that we will be eyeing in today's session. That is the Fed decision tonight. Interest rates, again, are widely expected to remain unchanged. If you talk about crude oil as well, it's actually surged by around 3%, and this is on the back of the winter storms that actually crippled US crude exports. You're talking about Brent, which is trading nearly $67 per barrel. Again, in terms of commodities, you have no stopping that comes in when it comes to gold and silver. You have gold, which has actually hit record high peaks. We've gone beyond that $5,100 as well. And if you talk about this year itself, gold is up nearly 18%. How much more steam from here on when it comes to gold and silver is going to be the key question. Overall, if you see in terms of Asian markets as well, a pretty good day of trade is what you're seeing, at least when it comes to Hang Seng and Shanghai. Nikkei, again, you're seeing mild pressure to the tune of around 0.4%. So that's what you are watching out for in terms of the Asian markets as well. Dollar, again, as we were discussing, this is at a 4-year low. It's a 5th consecutive session of fall where it's near levels of around 96. And this is the lowest number that we've seen. And again, this will become positive when it comes to emerging markets like India as well. If you see in terms of historical, the highest level that we've seen is around 114 on the dollar index, average around 101, and the lowest is around 89. So we're inching towards those highs as well from here on. Now, what's causing this fall? You have Trump, who's gone out and said that he's not concerned with the dollar's decline. Yen is already putting pressure from there. And you have economies which are trying the dollar debasement trade. So that's what is actually acting out in terms of where the dollar index goes. And in consonance to this, if you look at the rupee, there is more strength ahead probably because you have your India-EU trade deal, which is on the completion edge. This is stronger versus the dollar in the last session as well, if you have to compare the rupee. And the RBI interventions have also continued. So all of this probably is working in favor of the Indian rupee. You have the dollar index, which is coming under pressure. Probably things getting into the right direction, Alex. And that was somewhere inevitable in that last hour of trade that we saw yesterday.
Yes, absolutely. And I wonder whether the rupee move up, if it does take place, is that launching pad for foreign institutions to come back in force. I think the options data suggests that at least they're not as short as they were before, and that's a positive, certainly heading into the new series. Of course, in previous series as well, we've started out in this manner. I wonder if that will pan out over the course of February again. Reminder, we'll take you through the seasonality factor in February. But let's talk about what happened in trade yesterday. And it all has to do with the last hour, in fact, the last 15 minutes of trade, because you had the Nifty 50 move above the 200-day moving average. Take a look at that. Very sharp up move towards the end. It's actually the Bank Nifty that led this. And take a look at the Bank Nifty as well, because you will see that move up. It closed 1.3% higher. Heavyweights, HDFC Bank, ICICI Bank and SBI, if you pull up those charts, you will see a similar move in all three of those stocks as well. They saw late gains. In fact, you had the Nifty 50 that traded in a pretty wide range, 300-point range, and it hit the day's high of 25,246.6 just minutes before close. In fact, so the closing price would have been higher if not for that volume weighted average price. That's how it works, right? The last 30 minutes, the volume weighted average price of all of the trades that take place there is what you see towards the end at the close of trade. India VIX actually cooled off from those intraday high levels of 16 and closed very close to that 14.5 mark. And the broader markets also saw a similar late recovery. Gains for both the broader market gauges were a tad bit more muted though at the end of trade, but they also recovered, remember, from having intraday losses, and they ended in the positive. Market breadth, and if we can pull up that chart through the trading session, you will see the kind of swings that took place, and we ended just about with the advances nosing ahead. Auto was the big loser sectorally, and you had M&M which led the losses. It was one of the, if not the top loser on the Nifty 50. Maruti as well as Tata Motors PV also losing ground. possibly on account of the increased competition that is perceived with the signing of this new deal with the EU. Metals and PSU banks as well as defense were the top gainers on the other side of the spectrum. Metals in particular gaining over 3%. Hin Zinc was one of the stocks that gained quite considerably, and of course it might see just a tad bit of a downside based on the announcement that came post-market hours. We'll talk about that. I've got it in my list.
Yeah, no, it's interesting, right? The first major green shoots and suddenly the supply comes back. I think the persistent problem with Indian markets of late, the supply. But anyway, I mean, from a market's perspective, I wonder if IT also has a bit of a bugbear today. There was a post from one handle on X. I haven't verified it. I don't know if either of you got a chance, but apparently US consulates have pushed H-1B visa stamping interview dates back to 2027. So I wonder if that has an impact on the IT sector today. But from a trade setup perspective, benchmarks continue to stay in oversold territory. Never mind that bit of a late pull back yesterday, very oversold, and therefore need a trigger. Now, was the EU deal a trigger? Could the budget provide a trigger? I think remains to be seen, but I think that is one thing you got to keep an eye out for. And sectorally, I think if you break it down, FMCG is starting to show some spark. I'm waiting to talk to Parag Thakkar. He's been unequivocally bullish on the FMCG space. I wonder what he makes of some of the numbers. And by the way, the numbers, to an extent, there is a chink in the armor in some fashion or the other. If, as Alex said in GCPL, it was the commentary, and maybe Hiral will speak about one more FMCG name today in Marico, but the snacking companies have come out with good numbers too. So FMCG per se seems to be doing the right thing. And guys, I just did a little bit of reading and thinking about the EU trade deal, right? And what benefits and what does not, and what stands out, if you will, to my mind. And because I think these are not near-term one-day triggers, these are slightly elongated ones, right? So tariffs on jewelry and textiles from India to EU to be eventually cut to zero. So you know that that's one sector which was cramped down because of the India-US issues, gets a leeway. Tariff on furniture, chemicals, leather, metals from India to EU to be cut to zero. So you know that some of those sectors stand to benefit. And on agri as well, both sides, while they get preferential access to each other's markets, but sensitive sectors like dairy for India has been safeguarded, right? Or chicken or beef for EU has been safeguarded. So in some sense, a lot of practicality, and therefore I think the net result seems to be that it is textiles, jewelry and engineering goods. The summation of all the reports that I read this morning, including from HSBC, seems to suggest that these are the three buckets you want to watch out for. And as Ravi Dharamshi said on the show yesterday, that if there are some sectors which are getting hit, fine. You look at sectors which will benefit. From this or some other deals and try and bet there, because that's where the money will be made.
And in any case, it's going to be bottom up, right?
Very much so.
Very much bottom up. So I think these are going to be interesting sectors, and let's see if that rally continues on these names as well as Neeraj was mentioning, because that's where the moat is going to be, which is probably yet not factored in the stocks. I mean, it'll all be fructifying only in the next probably 12 to 18 months. But if you have to look at the factors, as we know that we've managed a spirited 300 points recovery in yesterday's session on Nifty 50. And that also on the Tuesday expiry, the market is remaining pretty much in a wait and watch mode. So the setup is cautious to mildly bearish from here on. Any bounce that comes in will be a technical bounce, and there is no changing of trend that's happening as well. If you talk about your technical indicators, it is suggesting a sell-on rise bias, and this mother of all deals provides a powerful fundamental tailwind as well to the Indian markets. Your FIs have remained net sellers, but the Tuesday recovery was largely fueled by the DII support and the short covering that did come in. Experts are seeing the index stuck in the 24,900 to 25,500 kind of a range, and a fall below that 24,900 could actually trigger a slide towards levels of 24,600 as well. So watch out for these levels pretty closely. And Nifty's closing is back above its 200 DMA, and that is a major psychological win for the bulls as well. In terms of support, immediate coming in at 25,150. So watch out for that one, and then you can see the next support levels on your screens as well. And the resistance hurdle comes in at 25,400. If you talk about Bank Nifty, the recovery has been sharp, and we saw closure above 59,200. It's climbed back above its 50 EMA as well, and it's looking much stronger than the broader markets. So 58,000 is the support and 59,500 is the resistance. So watch out for these levels in terms of the range as well when it comes to Bank Nifty. And we're talking about February seasonality already. We'll get into details of that. But before that, taking the new series now as well into consideration and what's happening in the derivative markets, Puneet joins in to tell us what are the cues indicating. Puneet, momentum in that last hour of trade was very strong. We did see a good recovery. Expectation is that probably that could continue, but it is a sell-on rise kind of a market. What are your derivative cues indicating?
Well, most certainly, and a lot of positions being carried forward in February, as we saw yesterday in in terms of the rollover. But what's also interesting, individual stocks are back in focus, and we'll get to that in just a bit. For the Nifty, yet again, as Hiral rightly implied, that yesterday was a buying session. While the implied open yesterday indicated a 90-point uptick, that wasn't to be the case. Today, the implied open is even lesser, so we'll continue to monitor that aspect at the start of the trading session. When you also look at the Bank Nifty, that has been an area of strength. Of course, the increase in open interest for both the Nifty 50 as well as the Bank Nifty yesterday, post, of course, migrating into a newer expiry, which is of February. And before the budget, all of these key levels continue to be, in session. Now, we've seen yet another selling for foreign investors in yesterday's trading session by almost 3,000 odd crores. This follows up with the 14,000 crores of selling that we saw in the last 2 weeks each. So 14,000 crores last week. A similar number was there with the week before. And yet again, the start of this trading session has been with selling from foreign investors and could be something that we see at least till the month of Friday. For domestic investors, a 3x increase compared to what foreign investors have been selling has been an area of strength for the markets. When you also look at foreign investors, they've yet again sold 3,300 crores, and the index long yesterday was at 14%. But while it is historic data and it's good for a comparison, this is a newer series, so we might see some pressure on the index longs over the next couple of days. So starting Monday would be a better parameter for this particular metric to start tracking what happens in terms of February, because we were in the trenches, to say the least, of 7 to 8% index longs and 92% shorts by foreign investors, and a similar trajectory for net OI PCR as well. Finally, in terms of stocks, a lot of massive build-up yesterday in terms of the open interest gainers. So Sammaan Capital saw a 5x jump in terms of its short build-up. ITC on the back of earnings will be in focus today. A short build-up yet again seen on this counter, and results become very key for this stock. In terms of open interest losers, we've seen something like Swiggy back in focus. The open interest, of course, is reduced, but again, a counter that will be in focus this week on the back of earnings. So a lot of individual stocks seeing a lot of change in terms of open interest. And while earnings continue to be the trajectory, a lot of textile and auto stocks will be back in focus. Important to see what happens with Maruti and TVS earnings, and if any comments coming from there as well.
Okay, so again, important commentary that we're picking up, and Monday will be important in terms of understanding how the new FI long positions pan out as well. But let's focus on the stocks that we will be watching out for. On my list, the first one that I have is Marico. Now, it is a good set of numbers because, one, they've seen double-digit growth in both India and international business. The management commentary is something which is pretty strong. Your India volumes have grown around 8%. By value, it's grown around 28%. The only negative over here is the margins, which have actually remained under pressure. If you look at the key numbers from here on, revenues are 26% growth is what we've seen. Your EBITDA has seen a growth of around 11%. Margins, as we mentioned, are 16.7% versus a 19.1%, whereas the profit has seen a growth of around 12% on a year-on-year basis. So watch out for this one in trade. Secondly, a thumbs down coming in for a Vishal Mega Mart. Now, this is the lowest growth that they've seen in 5 quarters. In fact, if you talk about the reported same-store sales growth, that is coming at 9.1%. And if you adjust for the preponement of the Durga Puja, that is at around 10.3%. In fact, the same-store sales growth has been lower as compared to the previous quarters. And your loyal customers have continued to grow. Around 16% is what you've seen. Your store expansion has continued with additions of nearly 29 stores during the third quarter. Again, a 19% growth in terms of the profits. Revenues up around 17%. EBITDA up around 20%. Margins at 16.5%. So optically, if you see, the numbers are looking strong, but it's the lowest growth that they've seen in the last 5 to 6 quarters. And hence, I've given it a thumbs down on this one. And third, I'm not looking at a stock, I'm looking at silver, where Citi has upgraded the silver's outlook in terms of the next 3 months, and they have forecasted $150 per ounce from $100 per ounce already. That momentum in silver is likely to continue. So like gold, they're saying that silver is being driven by capital allocation, and it's actually behaving like gold squared or gold on steroids. They think that this is likely to continue until silver looks expensive by historical standards relative to gold as well. So they're seeing another 30 to 40% upside over the coming weeks to $150 per ounce, and retracing historical highs, which will be relative to gold. If that happens, they would see silver at almost $160 to $170 per ounce, or even up to $300 per ounce. I think that was that 1979 kind of a number that you're looking at. It's very interesting, and the counter impact that you will see on the Hind Zinc is something that you should be watching out for, and that's the reason why I've picked this one.
So it's interesting that you point that out, and I think it's also important that people bear in mind capital allocation just from a broad portfolio perspective, because you hear things about people selling mutual fund units and jumping into gold and silver. ETFs. I don't know if it's such a great idea to over-allocate towards metals that have proved in the past, particularly silver, to have a significant amount of volatility. So as sharp as the rise is, it could well crash that quickly. I don't know if you guys have anything to add to that.
It has happened in the past, I think, if I'm not mistaken, from a $50 to a $5 or something was the kind of crash happened. But I don't know. You can't really judge this with the kind of demand that silver has from the usage perspective, and now you're talking about a capital allocation policy for silver.
Absolutely. All right. So but bear in mind, it can be volatile. So plan your capital allocation strategy accordingly. I will come to Hind Zinc in a bit. Let me talk about Bikaji Foods. And Neeraj alluded to this. Snacking companies have actually done well. I've chosen to pick this one. Revenue increase of close to 11% with an 8.4% underlying volume growth, which is pretty steady and stable. Gross margins have actually risen as much as 586 basis points on a year-on-year basis, and EBITDA margins have also risen quite considerably, 466 basis points in fact. Both revenue as well as operating margin have dropped sequentially, but this is likely on account of seasonal factors. I'll come to that in a bit. But gross margins have actually remained within 30 basis points of the recent peak, which is quite substantial. What happened is that packaged sweets during the quarter, you had revenue decline as much as 17% on a year-on-year basis, and the revenue decline is quite a bit sharper on a sequential basis as well, and that's had a bearing on the numbers overall. But all told, it's a pretty decent set. EBITDA is rising as much as 77%, and the PAT number is also multiples of what it was in the year ago quarter at 62 crore rupees or thereabouts. There's also an announcement that they will invest as much as 50 crore rupees in Bikaji Foods retail, where they're seeing a considerable increase in revenue. These are their own stores where they sell their product. Hind Zinc. Now, I know what Hiral has pointed out, and it is long-term positive, the up move in silver, but at least in the near term, you could see a little bit of money being taken off the table. Why? Because more supply coming into the picture. Promoter Vedanta has offered to sell up to 1.59% stake. The base offer size is at 0.79%. That offer for sale is going to take place over the course of today and tomorrow. And there is the right, of course, by the promoter to sell an additional 0.79%, which is why it takes the total to about 1.5, 1.6% or thereabouts. The floor price is set at 685 rupees per share, and this is the operative part. It is at a 6% discount or close to 6% discount to yesterday's close. Of course, with the kind of demand that this counter has seen in the recent past, one would assume that this issue will have a fair amount of subscription. But bear in mind that in the past you've seen these kind of instances as a reason for short-term pressure on the downside. So keep an eye on that. PC Jeweler, this is a thumbs up, and let me explain my rationale for picking this up. The stock is just about 11 rupees per pop. And it's about 8,000 crore rupees of market capitalization. This is a company or stock that has seen substantial erosion in capital and wealth destruction, but this is a third sustained quarter of performance. The quarterly run rate in revenue is what you last saw in October to December 2022. And the 9th month to December performance is also pretty decent. The EBITDA in that period is up as much as 83%, coming in at 681 crore rupees. The fourth quarter after lifting of interest moratorium by banks, and the interest cost in the quarter gone by is 30 crore rupees versus a peak of 130 crore rupees in Jan to March of 2024. In the comparable quarter a year ago, the interest cost was only 3 crore rupees. So what you're seeing in the numbers is despite the relative increase in interest cost, the company has actually reduced its debt by as much as 68% after the settlement agreement with banks in September 2024, and it intends to very soon bring it to a debt-free company. The board has also approved setting up over 100 franchise showrooms over the course of 12 to 18 months. And these are large franchise showrooms, so bear in mind the franchise model is where they won't have to incur a large amount of capital expenditure to set the showrooms up. They've also recovered the keys of a lot of the showrooms that were not under their control as this entire settlement of dues took place. The numbers look particularly good, 37% increase in revenue, EBITDA increase of 80%, margins expanding considerably, and the PAT number up as much as 28%. Just a caveat, this is a relatively small ticket size counter. It can see volatility, so bear that in mind if you are looking at the stock today.
Okay, Gopal didn't quite do a Bikaji, but did reasonably well. So revenues were up 1.8% for Gopal Snacks. That's the first stock on my list. But the EBITDA was up 96%. And that was quite stunning, really, as a result of which the margins went up to 7.6% versus 3.9%, and net profit at 15.4% versus 5.3%. Now, the street typically doesn't quite reward no volume and value growth combination, because of which the 1.8% revenue growth is a bit of a downer for Gopal Snacks, but great margin performance. Let's wait and watch if the street does reward this one or no. Very high probability it could, but like I said, the caveat is that the revenue growth was just about 1.8% higher. No such problems for Metro Brands. Decent performance on all line items. Revenues were up 15%. EBITDA was up 17.7%, and as a result of which the margins eked up slightly to 32.7% versus 32%, and net profit up about 35%. I think they did decently well. Nissan Joseph appointed as the CEO for the next 5 years, so no issues around management continuity. Maybe the street rewards this. I think a couple of notes that I read were fairly constructive on what Metro Brands has done and the commentary that they've given. So keep an eye out for Metro Brands. That's number 2 on my list. And a clutch of brokerage notes today, by the way. A lot of brokerage notes. I think there is one from Jefferies on Eternal as well, which is some 84% upside, right?
Yeah.
So there are a lot of brokerage notes, but I'm choosing the one which is Investec's note on Aditya Vision. They've initiated a buy with a target price of 675 rupees per share. They say it's exposed to the Hindi heartland with rising consumer durables penetration. The current valuations, according to Investec, appear attractive. They see, or Investec sees, a revenue and a profit after tax compounded annual growth rate of 21% and 25% respectively. And ROIC should remain impressive at 20% according to the brokerage house. Watch out for this one. 486 is the current price. They believe the stock has a target price of 675 as per their math. So keep an eye out for this one.
Considerable upside in that. Neeraj, Hiral, of course, a lot of details coming through in the agreement yesterday, but still a few question marks remain in the automotive space, in the steel space in particular. So let's bring in Rishabh to tell you about some of those question marks that continue to exist. And of course, you will have several clarifications that come through in a press conference later today. So Rishabh, some of the key highlights you already told us over the course of yesterday and today. Maybe some more you can tell us that may have missed the eyeball yesterday. And what are the question marks that still exist?
Absolutely, Alex. I think the number one sort of commodity that has remained out of this core free trade agreement is steel. That is something that clarity is being sought for. The entire issue around steel is that it will be negotiated separately outside of this FTA, because there is a separate sort of regulation that the EU is working on that comes into effect starting July 2026. Till then, what the hope is, and what the minister is also hoping for, is that India gets better quota allocations as part of that newer system of regulations. India gets better preferential treatment over non-FTA partners. And that is something that is causing some bit of concern, because India in this FTA has agreed to cut tariffs on EU imports of steel and iron from 22% to 0%. And there's also no sort of clarity on what grade of steel or iron products this sort of tariff elimination covers. So that is where there's some sort of uncertainty that is persisting. There's no clarity on whether quota limits or transitional duties will be there, or what sort of anti-dumping measures could be coming in if something of this sort happens. So the advantage to European Union when it comes to steel is a bit lopsided for now, or at least until July, when the new regulations come in and we figure out what sort of benefits India will reap as part of the free trade agreement. Another sector that is in some sort of shade is the auto sector. We don't have a lot of clarity on what sort of the longer term impact will be of these quota-based tariff cuts that have come in. We'll have the full sort of matrix of the tariff de-escalation that might come in sometime later. So that will be something to watch out for.
Thank you so much, Rishabh, for that. So clearly, you have the negotiations when it comes to steel that will happen later during the year, and that has been kept outside the purview. So we will be watching out for these sectors pretty closely. We'll quickly slip into a short break. On the other side, we'll get you top trading strategies for today and lots more. Please stay tuned to NDTV Profit.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी
Back with India Market Open right here on NDTV Profit. Pull up the implied open and just show you what is it that we are likely to do at the start today. Remember, the start has virtually no bearing on what we do during the course of the day, as yesterday has shown. Well, 58 points in the green. Let's see if that lasts. But our experts today with us on the show to talk about how they think about the day's trade and the near term. Remember, it's an important week. There's the Fed decision and the budget. Of course, not to forget big earnings from the US and India. Kush Bora, founder of kushbora.com, Parag Thakkar, head fund manager at Fort Capital with us at the studios. Gentlemen, thanks so much for joining in. And good morning to both of you. Kush, volatility yesterday, but I'm glad you mentioned yesterday that 25,800 is the stop, and until that is broken, don't cut your positions. People would have been well served. Question is, what today if we do indeed start up 40, 50 points higher?
Kash 25,800 hota.
24,800.
24,800.
The levels are moving so fast, we are all getting it mixed up.
I don't blame you, Neeraj.
No. But thank you, Neeraj, for highlighting that. देखो हम ना जब मार्केट नीचे आता है ना तो बड़े कन्वीनियंटली एक्सपायरी को ब्लेम कर देते हैं, है ना? वो एक्सपायरी मूव. Why not an up move?
Up move, yeah.
My point is that yesterday's move can be attributed to expiry to a degree, and should in fact be attributed to expiry for a degree. Now look at the stocks that moved higher. You've had the heavyweight private banks, and by the way, we spoke of this, that HDFC, ICICI, they're at mouth-watering levels, at least from a positional standpoint. And these are the exact stocks that actually did well, pulling the bank nifty up, even the nifty up for that matter. So yes, it was a good move. We had a fair share of volatility, but we ended higher. Also regained the 200-day moving average, in the process. So yes, some positives out of it. Is the worst over? Are we out of the woods yet? Not quite, for a couple of reasons. We are still around the 200-day moving average, just above it, but still hovering around that, not in the clear of the 200-day moving average. Also, yesterday's move was a continuation of a lower high, lower low formation, suggesting that while there was an uptick or a green close, we haven't really got the momentum to, close above the previous day's high. So the limited point being that yes, there is still pressure, green shoots, but not enough to call it a reversal. I would still suggest if you have a long position, continue to hold with a stop loss at 24,800. But do you go out and create fresh long positions? I'd suggest wait up. Maybe you could play the the trade for the day if the markets continue to rebound, but don't go and create aggressive long positions. Bank Nifty, a more interesting setup. You've had a bullish engulfing candle on this one on the daily charts yesterday. Resistance around the 250 and the 20-day moving average convergence zone. But remember, we've been speaking about the 2-month trading range of 58,500 and 60,500 approximately. We did briefly slip below that, but we were quick to regain it. Now somewhere close to the middle. You don't create a long position here. If we do come closer to that 58,500 mark, you go out and create a positional long trade with a stop loss at 58,500 or just below that. So more constructive on Bank Nifty than Nifty. But like I said, don't be preemptive. Let the markets rebound and then go out and take that long trade.
Individual stocks that you're liking this morning?
Going with all long trades. One of them is a continuation, and I'll give an update as well on the weekly pick that we mentioned yesterday. OFSS, this one's showing good strength. There is there are green shoots of a revival. Remember, this has been very beaten down for a while now, and you're starting to see green shoots. 20-day, 50-day moving averages being taken out. You've had a relative strength demonstration on this one, with the markets not going anywhere but the stock regaining or rather gaining strength in the last 8-10 sessions. So OFSS is a good trade from a positional standpoint also, but from a near-term perspective, 8,200, 8,400 are your targets, 7,800 is where you keep that stop loss. One metal name had to make the list despite the volatility, but this is one that hasn't really gone into overheated territory. So that's Jindal Steel for you. On the upside, you've got 1110, 1140 as your targets, 1,050 is where you keep that stop loss. Mind you, above 1100, 1110, the stock can actually gain quite rapidly. Also, the update is on Tech Mahindra. We discussed it yesterday as a long call. Good moves on this one. First target being hit. You can now hold it for subsequent targets of 1770, 1795. The initiation price of 1710, 1720. That zone now acts as your stop loss. And the final update on Karur Vysya Bank. Very rarely it's happened that a 10% target on the weekly pick has been achieved on the day itself. Yesterday, Karur Vysya for me was a rank outperformer. All targets, first and second being hit on this one. If you have a position, continue to hold with a trailing stop loss at 270.
Okay, so those are the topics coming in there. I mean, Karur Vysya last hour of trade also saw that good spike that did come in. Parag bhai, coming to you, I know I'm going to steal Neeraj's question because he wanted to talk to you about FMCG. I cannot
You are allowed everything,
Neeraj. So, we have all of these companies from Marico to Asian Paints, if you have to look at consumption, to Godrej Consumers, all of them that have reported numbers. Somewhere, yes, there has been pressure on margins. There are some pain points. Commentary is seeming to be very positive. I think that was the key highlight that I picked up so far. What are you making of these numbers? And you have been pretty positive on that entire pack in the last probably a month almost now.
Sure. So basically, see, all companies are reporting numbers. First of all, business updates also came, right? Godrej Consumer, Marico. So we know the numbers. Like Marico was likely to report a double-digit EBITDA growth, that they reported 11%. Godrej Consumer reported 16.5% EBITDA growth, and Tata Consumer reported about 20% EBITDA growth. So that was known earlier, and that's why we had bought those stocks, because of the business updates and all. And because we thought that mid caps and small caps in such uncertain geopolitical environment, and of course in the absence of US-India trade deal, will get rogered, and so we took a defensive position in FMCG stocks, which has helped us actually. Of course, Godrej Consumer was a shocker yesterday, just because their newly acquired businesses have not gained a lot of traction. And that's why stock gave up yesterday, but I think it will recover gradually. So I would say, and in Marico, for example, they have clearly said that margins are likely to improve from here on. There are many margin levers actually. Their value-added hair oil portfolio has grown about 20%, and if that sustains momentum, that is a big margin driver. Right, copra oil prices are also likely to drop. So I would say that the reason for which we bought these stocks, that has played out well. If that money would have been in mid-cap and small-cap stocks, it would have been down by 15-20% minimum. So it has acted as a cash, of course, this entire, including lever also. So I would say that, yeah, so I am happy with that position, and I would like to hold on to these stocks.
And still buy at current levels as well?
Yeah, they are, because they have not gone up too much. So I think Godrej Consumer, Tata Consumer was up 3% yesterday. But but for us, happily, we are heavily invested into banks, which did very well. Axis rose 3% yesterday, and ICICI and HDFC are also now starting to show some traction. Of course, it can be led by expiry, as Kush said, but in my view, valuations-wise, absolutely, they are at rock bottom. And after the interest rate cut cycle ends, I think they will grow at 15% for sure. Even HDFC Bank, for that matter. If liquidity is provided by RBI, which RBI is
continuously putting.
Yeah. So then there is no doubt in my mind that even HDFC Bank can grow its EPS by 14-15% from next year.
Okay. So, well, and guys, the beauty about sometimes the fundamental recommendations is that they can stay same for 6 months on a row, because you may want to create a portfolio and stick with it, because it's not a trading portfolio. So just keep that the back of your mind. I do wonder, Kushbora, though, if any of these large FMCG names come under the trading list, because Parag Thakkar is right. They helped cushion the fall, but they may not necessarily be trading buys, right? Are any of them trading buys?
So, honestly, I did like Tata Consumer and Godrej. In fact, I was equally surprised, and I was having an offer conversation with Parag Bhai as to why did Godrej react the way it did, and he had his reasons. They still look good. Will I buy now? I would perhaps wait. Tata Consumer, I would still consider, but given the kind of sharp downtick on the back of volumes on Godrej, I would wait it a day. If it does kind of recover some lost ground today, then I would consider buying. But I'm actually more keen on something like a Colgate, because there are positive divergences. The stock is holding its ground. Volumes also pretty healthy, and it's not moved. It's not participated in this entire rally. So if the FMCG pack has to do well, Colgate will eventually do that catch-up trade. So I remain constructive on Colgate. If you want to take a position in the FMCG name, I think Colgate is one stock that you can consider.
Okay, and since we are on that topic, Parag Thakkar, I want to bring you in on whether you saw the numbers of the snacking companies. Bikaji Foods, very good numbers I thought. Gopal Snacks, the top line was a miss, 1.8%, but the margin performance was rock solid. What about the snacking firm?
No, I think food as a business should do better. Actually, they should grow better. That's why we saw Marico acquisition of that PVR's popcorn business also. Because food as a category will... And GST cut has also helped food business more. right? So that's why I saw Bikaji volume growth was around 8.5% and all. So I think that continues to be good. Of course, Nestle is the king of all in food business. ITC's food business will also do well. But so I feel that within the FMCG categories, food is definitely a bigger growth driver.
Okay, food is a bigger growth driver. In fact, to add to the two companies, Neeraj, there's ethnic snacks also, which has done really well in the third quarter. So ethnic snacks, which has done well, Bikaji core businesses returned to double-digit growth, and your Gopal snacks, where the gross margins have improved. So where are we heading is the question.
Yeah, well, maybe snacking firms are the thing to be. I bought a private label though yesterday, so there is competition out there for sure. We'll talk about that. But before we talk about the list as well of the other stocks, since we are on this subject, I'm going to keep Alex waiting for just a little longer while I go to Mahima and try and get her in to tell us what brokerages are saying about two of the consumption biggies that came out with numbers, Asian Paints and Marico. Mahima, good morning. What are brokerages saying?
Good morning, Neeraj. So I'll start with Asian Paints first. Largely, I think brokerages have maintained whatever the stance was earlier as well. But there's positive commentary that's come in. The street was disappointed with how volumes panned out. But overall, I think positive commentary could kind of have a positive sentiment on the counter today. Jefferies has maintained a buy with a target price of 3,300. They're saying positive commentary on volume growth. But issue still remains in terms of where consolidated revenue growth stands, which is nearly half of the volume growth that they've done. Competition still continues to be, a pain point for the counter, and management outlook on growth was positive. And endeavor to see market share gain is something that they liked for Asian Paints. Morgan Stanley, on the other side, has maintained underweight with a target price of 2194. They said that Q3 efforts were largely in place, but demand is unsupportive. Growth delivery fell short of consensus expectation, and company this versus, of course, Q2 performance of the company. And Q3 was affected by shorter festive season as well as prolonged monsoon. October demand was weak. December, however, did catch up, and January largely will be in line with how December has fared, is something that the management said. Volume growth guidance for Q4 is at 8 to 10%, which is less than what they did in Q2. And with 4 to 5% negative mix continuing, implying a 5 to 6% volume growth is something that they've guided for. But industrial business has continued to do well for them. The growth remains strong, and EBITDA margin guidance is still maintained at that 18 to 20% mark. Citi, lastly, has maintained sell and hiked the target price slightly to 2,300 from 2,250. Weak performance despite low base, but an outlook still looks challenging according to them, and they've cut FY 26 to 28 revenue estimates by 3%, but slightly hiked EPS by 1%. In terms of where Marico goes, well, overall, I think here also there was, very positive commentary coming in from the management. Morgan Stanley has maintained equal weight with a target price of 788. Q3 was largely in line. The consistent guidance and delivery is something that they've liked. India volume growth momentum should be sustained as pricing growth gradually moderates, is something that they believe. Jefferies has also maintained buy on this counter and hiked the target price to 900 from 880. Growth momentum continues, and overall performance was led by price hikes in Parachute, despite which volumes have sustained, is what they believe. So this is the overall view of what brokerages are kind of making of Asian Paints as well as Marico earnings.
All right, thanks so much, Mahima, for that. And what we're trying to do, of course, is to connect all of the dots and trying to give you a picture on the consumption pack as a whole. But let's look beyond that. We've already talked about several stocks. What else is on the watch list? Let's look at some key developments. On the top of the list, you have ONGC. There's a joint venture with Samsung Heavy Industries. Adani Energy makes it to the list. There is a ratings upgrade. Standard disclaimer, of course, NDTV Profit, part of NDTV, which is owned by AMG. Infosys, there's a strategic pact with Cursor that you should watch out for. An order win for RVNL as well, to the extent of 242 crore rupees. There's Titagar Rail, which has signed a pact with ABB. ABB actually will deliver a few pieces of equipment with regard to an order that they have. Kaplan Point, there's a US FDA approval for injectable, as a result of which it should be in focus. Petronet LNG has a pact with MGL as well as ONGC. This is another stock that you should watch out for. Beyond this, there's actually Landmark Car. And beyond everything that has happened, and they're going to be a key beneficiary on account of this EU deal. If these ultra luxury cars become cheaper, they would effectively benefit. But beyond that, there's also acquisition of stake by Nippon India Mutual Fund. This is, of course, part of their schemes, etc. Antony Waste, there is another acquisition by Miri EM Fund, which has bought 2 lakh shares. a couple of stocks in the negative. And Hinzink, we already spoke about the fact that there is an OFS increasing supply coming through. But remember, on the flip side, the long-term outlook for silver has been looked at as positive by several entities. So weigh both of those developments together. Tata Motors, finally, South Africa is mulling tariffs on cars. And this is in order to protect the domestic industry. 50% is what they're talking about. It could have a bearing on this one. But you know what? Let me ask both Kush and Parag Bhai what they think of Hindustan Zinc. Because yesterday in trade, it went up another 4%. Here we're talking about a few brokerages that are talking about silver at $150 per troy ounce. It's very close to 100 right now. So on the fundamentals, do you think that you should, I know what Parag Bhai is going to say, but on the technicals, does the momentum continue?
No, Parag, Hinzink for change is on Parag Bhai's list as well, I think, in terms of your topics today, right?
No, not topics. I was just saying that they asked that what stocks you want to talk about. So I wanted to talk about that. See, ultimately, government should sell it through OFS. Government holds 29% stake, which is now valued at 87,000 crores. And in budget we have to be fiscally prudent and still take care of growth. So this is something which I would seriously urge government. Vedanta himself is selling stake. Government should also sell stake. In my view, that's my request to government. That's why I put Hindustan Zinc in that list.
Okay, so it's an important point. On the fundamentals, you're staying clear. Right?
No, so basically, this kind of rally, I will not be able to chase.
On the momentum side?
Far too much to handle. Remember how we spoke yesterday that ab bus ho gaya, not in the sense that the stock can't go. Obviously, it can go wherever it wants to. The only limited point is yahan se risk reward ratio favorable nahi hai. Just to put it in context, in 42 sessions, the stock has gone up 59%, almost 60%, right? We all know the kind of run it's had. So does it make an interesting buy, a good risk-reward ratio profile from here on? Not really. Should you continue to hold? Yes, you can, because there's momentum, can go higher. And, every time it dips is when you should consider buying. So right now, I would wait for a dip. Ideally, the level for, entering into this stock is close to the 625, 650 zone. But, we've known these stocks to move 5, 7, 8% down and give us those entry points.
Yeah,
so
but have we seen that happen when you're already targeting a product like silver, which is looking at staring probably at $130, and then you're talking of $150 and $160 as well. So when you're seeing that kind of move coming in on silver as well, do you think this kind of a drop is a possibility on the stock?
I'm glad you brought it up. Let me mention how and why is it possible. The most recent example, and we discussed this also, by the way, if you remember. I think it was a contrarian bet that I had with one of the other guests on the channel when Neeraj asked me कि Hinzink का क्या करना चाहिए. Someone else had a buy. I said थोड़ा रुक के buy करना. I think that whole conversation. This was close to the Christmas time, 26th December odd. In 9 sessions, the stock came down 10.5%. Just to be precise, 656 से 590, 585 thereabouts. My point is इतनी volatility है market में. और जब इतना मोमेंटम आपको मिल रहा है अपसाइड पे, तो हो सकता है थोड़ा बहुत डाउनसाइड पे भी मिले. सो वेट अप, बी पेशेंट, डोंट चेज मोमेंटम एट दीज लेवल्स. आई एब्सोल्युटली डोंट माइंड बाइंग स्ट्रेंथ, बट दिस इज as I said, a little too much for comfort.
And keep your trailing stop losses as usual. All right, we have it's a time of the show where we get you the chatter from the dealing rooms, and Somit Sarkar as usual is joining in to tell you about what he's hearing on the street. Somit, good morning. Quite a bit of action at the end of yesterday's trading session, with quite a few stocks moving up sharply. What are you hearing from the dealing rooms?
It's kind of a relief rally that we saw in the last half an hour of trade yesterday. But the important thing to note here is whether this momentum or whether this upward momentum will sustain the market or not. But few stocks that dealers have highlighted. Firstly is Bharat Dynamics. There are buy flows on the large HNI desk, and dealers are expecting multiple order announcements to come in Bharat Dynamics. For Dixon Tech, there are sell flows on the FI desk. Dealers indicate that there is concerns around rising prices of memory chips, and because of competition also that could come in going forward, and hence the sell flows continue on Dixon Tech. In fact, yesterday at one point of time the stock even fell below the 10,000 rupees mark. For Aurobindo Pharma, there are buy flows on PMS desk. There's a buzz of a potential pricing safeguard announcement on Penji in budget. Penji is penicillin for which Aurobindo has started a new plant. And when it comes to Exide and delivery, there are paired trades that dealing rooms are suggesting to their clients. based on Q3 earnings. They are asking their clients to buy delivery and sell Excite based on Q3 numbers. And couple of stocks that we did highlight earlier, Asian Paints on January 22nd, where we did indicate that there are sell flows on the back of weak Q3 numbers, and yesterday the company reported a weak set of numbers and the stock fell as much as 5% in trade. And Hindustan Zinc was another counter. On Jan 10th, we did indicate that there's a buzz of a potential OFS that could happen after the company reported its Q3 numbers, and exactly after the company has reported its Q3 numbers, Vedanta has come out with this OFS in Hindustan Zinc.
Okay, one of those factors, thank you so much, Somit, for that. One of those stock pairs that Somit spoke about, one was delivery, right? And draws attention to the logistics space. And I want to talk about Mahindra Logistics because it's returned to the black, just a shade of profit, 3% net profit. But I'm wondering if there's something at play in the logistics space which might finally work for a company like Mahindra Logistics that have been struggling for some time now, Parag Bhai. If you were to play the logistics story here in India, how would you play it?
So, see, logistic companies generally are B2B businesses, right? So, they don't have pricing power, and that's why the margins are always under pressure. So, you have to have operating leverage. So, if the economy does well due to, for example, GST cuts and the overall velocity and volume improves in the system, logistic companies will have operating leverage. They cannot ask for higher price from their customers, but they can have a higher volumes, and that will give them operating leverage. So basically, all logistic companies, whether it is TVS Supply Chain, Mahindra Logistics, VRL Logistics, that should start doing well. That is my general view. I don't have bought into those stocks, but.
Okay. But see, in an extension to this, Adani Ports is doing quite a bit on the logistics side as well, right? With a fleet of trucks now and building that as forward integration to their port handling.
Correct.
Would you play it that way?
So Adani Ports we have in the portfolio. Yesterday also we discussed that from cash profit yield wise, 6% cash flow yield for such a business which has huge moat in terms of its, the core assets are so strong. And the moat is so high that this 6% cash flow yield and it is growing at 15% CAGR. I think any fall in this stock is a good buying opportunity.
Okay, so buying opportunity from a fundamental perspective on Adani Ports as well. And just a disclaimer, NDTV Profit is a AMG company which is owned by Adani Group as well. Another stock which did see a major up move yesterday was Landmark Cars, which Alex also mentioned. Now, yes, everyone's talking about how it could benefit from the India-EU trade deal, taking the dealerships it has as well from, your view, Parag Bhai, do you think this is something which is really over-exaggerated in terms of benefits that could be coming in? Because, and we're talking about a negative that could be coming in from an M&M as well, and that's what we've been talking about yesterday. Is it just a sentiment right now? Because when it actually translates into numbers, the comparatives that you're going to make in terms of the price range of those cars, how big a positive for a Landmark and how big a negative for an M&M?
So I would not buy Landmark or sell Mahindra and Mahindra for these reasons. This is not the, I would buy Mahindra for simple reason that Mahindra is going to do well in tractors. This month also you will see good volumes. So ultimately this negativity around Mahindra and Mahindra will disappear. Anyway, this trade deal is going to take its own sweet time.
Correct. 2027
of course, both sides have done fantastic
about.
job. I should congratulate our government also for doing this. I would say there's a lot of efforts required to do all this. And they are trying that get implemented very soon. But I would say that, see, these are narratives. Correct. Landmark Cars, simply because the stock has corrected so much, market cap is just 1500 crore now. And I think gradually they will do well. They are also the dealers for BYD cars, by the way. And BYD cars is out of stock, in December. And once they increase supply, Landmark Cars will benefit. They are also benefiting from Mahindra and Mahindra distributorship. So I think the price is good. And I should congratulate Nippon Mutual Fund for doing this. Actually, instead of giving money to cash burners in QIPs, one should look at the small cap stocks which have fallen so much and gone out of radar and actually are likely to do well now. And buy this kind of stocks.
There is Nippon, there is ICICI.
Yeah. So basically, so I would say that this Landmark Cars, PVR, this kind of, people have completely forgotten about this kind of stocks.
Okay, so I mean, this is interesting. So Landmark and PVR you're saying?
Yeah, PVR, so I keep saying.
9,000 crore market cap.
and 1,000 crore का cash profit करेंगे and movie pipeline is very robust.
I think to my mind, PVR has been missing an evident trigger. So I think the movies were a good trigger, but the stock hasn't reacted. Maybe it does need to show in the numbers in quarter 3 and the commentary in quarter 4 in actual numbers for the stock to move. So let's wait and watch if
I think it will start showing as well, because Neeraj, I think a couple of years ago, you would spend probably 700, 800 to max $1,000 per footfall in terms of a PVR when you went to watch a movie. Now when you enter a PVR, you spend probably 2,500, 3,000 per person. Oof. So you think about the upside from the spends that you're doing per footfall, and that will tell you the story about Parag
and
is
now
probably
people are
talking about
returning
as
to
well.
theatres. That is what market is missing. And actually market is not missing. Actually somebody is being forced to sell. That is what I can say. In many small caps, not only PVR. Many small caps, there is some redemption pressure in some places where they are forced to sell. Otherwise nobody will sell at these prices.
Yeah, Kush, you want to make a point?
So I saw Border 2, by the way, on over the weekend, and this is on a very lighter note, guys. Okay? For the first time, I felt अगर share खरीद लेता तो better था picture पे spend करने से.
Contributed to the 9,000 crore market cap.
But it's done incredibly well.
Look, there is that brand appeal as well. You've got that history. It doesn't live up to the name, by the way. At least for me, it didn't.
So you loved Dhurandhar, which didn't do as well as Border did, right?
Huh?
No.
Dhurandhar's
highest
grossing.
Yeah,
but just
Alex is into football and English movies.
In the first week.
Now, just to round that conversation up, on the charts, there is still that pressure on the stock, downward channel still being respected. So I would wait and watch. If once those key levels on the upside are taken out, primarily being 995,000, let me just round it off to 1,000, then perhaps you consider. Right now, I would actually wait and watch on PVR.
Okay. What else? I think it's been a quarter, or rather, it's been a numbers release overnight, wherein some have really stood out well, and on some there has been a mixed bag, right? So I don't know, guys, if you saw our Vodafone Idea numbers, and we haven't quite discussed that, but UBS target price stays at 12.74. In fact, let's look at the list of some of those names, right? Vodafone Idea, the losses narrowed sequentially. Maybe the street likes it. Spandana Spurti reported NIM expansion of 270 basis points quarter on quarter. Suntec Realty had decent pre-sales in a quarter when a lot of companies haven't had pre-sales, DLF, Oberoi, etc. But collections were weak for Suntec. Metro Brands, strong growth in e-commerce projects, e-commerce segment rather. Bikaji Foods, the core business returned to double-digit growth. Mahindra Logistics and PC Jewelers actually saw a bit of a turnaround quarter. And in Gopal Snacks, there was improvement in gross margins. And in IGI, the EBITDA was up about 26% YOY. So a lot of green shoots out there. A lot of greens rather.
You just have a RK Forging and RPG Life along with a Vishal Megamart, which are probably expected to be under pressure in terms of trade today. Kush, anything from this earnings list that comes to your radar which could be a good momentum buy, especially the ones which we did not discuss, IGI, because strong numbers coming in there as well.
So, see, to be very honest, a lot of these names have been beaten down, and they've actually hit oversold zones on RSI. Now, if you didn't tell me that the results were out and these stocks had a good run yesterday, I would have, from a very pure technical standpoint, told you that this rebound hai, dead cat bounce hai. If we get a follow through on some of these names, including let's say a Metro Brands, which is close to the support levels, even before yesterday's move, it was starting to show some traction on the upside. So I would have considered that. But for me to say that there is a momentum and you should go out and buy now after the good numbers have come out, I would wait. I would see one more day's closing, see if there is enough strength in the counters. So I would wait and watch. IGI also, it's a bit of under pressure. Same theory. Oversold, could see a dead cat bounce. Important to see the follow-through move, even today.
Okay, so that's IGI. Dodla Dairy was another one which reported a weak set of numbers. There was a dip in terms of margins. There was a dip in terms of profitability as well. It's going to be interesting to see how this stock also pans out in trade. Kush, anything on the charts with the Dodla Dairy?
Very close to a breakdown, by the way.
Okay.
Very close to a breakdown. 1170 is the long-term support zone for this one. And if you're telling me that the numbers are weak, in all likelihood, it will perhaps, open below those levels. If it doesn't regain, then whatever, little hope that there was that, it could take support at that level, continue to consolidate further, that will also be given up. And then on the downside, it could well test 1125, 1120 zones. So very close to that 1170 support zone. A breakdown below it could actually worsen the structure.
Okay, so that's what you're looking at in terms of where, individual stocks go.
I want to ask about Metro Brands to Parag Bhai. What did you think of the numbers? Because across the board, it's a very strong set of numbers. This is a company where you see a pure play benefit on account of GST, right? Because sub
2,500 shoes, GST cut
you
was
will
there.
see that volume picking up as well. So what do you think of the numbers?
So numbers were good. I saw numbers were really decent. So 132 crore PAT, which was up 35%. And the only problem with this stock, of course, it can do well. The market cap is also 26,000 crores. So on a 35% growth PAT quarter number, if you annualize this PAT, which is also festive led also and beneficiary of GST cut, so actually you should not annualize, but if you annualize it, then also it trades at 50 times.
Sure,
So some of the stocks became so overpriced in between that even after the sharp fall, still the valuations look expensive in some of the footwear companies. Just to go on this consumption theme, Dabur is one of the stock which I would like to say that, there are news in ET today that Harjeet Bhalla, the ex-Hershey's guy, is going to join as a CEO. I think they have decided it may be, but I think Dabur, if the stock has not done anything from last 6 years, like PVR again, if they get a new energy, because this guy has a 16 years of experience in HUL also. And 8 years in Hershey's. So I think if he brings a new energy, I think Dabur can be another laggard stock which can be looked at.
Okay.
Okay, by the way, guys, there is some media reports about how South Africa is considering steep import tariffs on vehicles from India and China amidst the rising imports. And I think if you just do the back of the envelope calculation, it is negative for Mahindra and Mahindra, rather Maruti, simply because MSIL has a fair degree of exports to the South African market. Now, if the tariffs rise for all nations, then it's probably equal competition and maybe not as much of a hit. But you do understand that if and this is a big if, we do not know if it will happen or not. This is from a global media outlet. I think Bloomberg has reported this story. But if this indeed turns out to be true, and there's a further sentimental downtick on Maruti today. The auto index, which has been a star performer post the GST cuts, may be primed for a bit of a pull back before which it maybe stabilizes. But for now, don't be surprised if Maruti Suzuki has some interesting moves today. Mahindra & Mahindra did his bit yesterday. Let's see if Maruti has some issues. Chandan Taparia, Head of Technical and Derivatives Research at Motilal Oswal Financial Services, joining us on the show as well. Chandan, great having you. Thanks for joining in and good morning to you. Now, before we talk about the markets at large, Chandan, the auto index really broke down yesterday, right? You saw that first large candle, if you will, if I'm not wrong, in many weeks on the auto index. Maybe some other negatives as well lining up, but what do pure play, the charts and the derivative positions tell you about the auto index and the heavyweights within that bucket?
Good morning. Thanks for having me. So yes, the Nifty Auto Index, which was really doing well in last 5 series, witnessed a profit booking decline by more than 5% in the last series. So it has been making lower top, lower bottom on the weekly and the daily chart and gone into the corrective mood. I believe some sort of consolidative nature may be there in the index. However, major trend remain intact, but short-term trend is getting some pause and profit booking visible at higher levels. So if you want to talk about one counter from auto index, I'll focus on Ashok Leyland. However, at the same time, I believe Maruti, M&M can see some profit booking decline. Tata Motors is one of the volatile names. So Ashok Leyland is one counter apart from TVS Motor, which can provide some buying interest. So if I have to pick one counter, I'll focus on TVS Motor with support of 187. It can head towards 203 kind of levels.
Interesting, and Chandan Taparia picking up the CV play, which is very interesting. Actually, Chandan, we'll talk about the markets in just a moment, but I want to bring Parag Thakkar in on this because while autos as the segment is looking slightly wobbly, Parataka, you've been constructive the CV plays, right?
Yes.
Now my question is this. At a point of time when the index itself might be under a bit of a cloud, can CV players like Tata Motors and Ashok Leyland outperform?
Yeah, it can definitely, because near-term volumes are looking good. Double-digit growth is looking like, and Ashok Leyland is a pure India CV play, so that will do well. And Tata Motors, as I said, Tata Motors CV, to be precise, the stock price is 440, because some people might confuse it with Tata Motors PV.
Yeah, we want the CV
but
play.
Tata Motors CV, that is looking very interesting, and it is my table thumping buy from 400 levels, and I maintain it. And it's a large cap multi-bagger in my view.
Okay, large cap multi-bagger. He's constructive on Tata Motors CV, and very interestingly, the brokerage call today also has the UBS note on Ashok Leyland, and Sharad Johnson with more details on what is UBS's rationale for Ashok Leyland optimism. Sharad, good morning.
Good morning, Neeraj, and you're right, the discussion is on the CV upcycle. Yesterday we spoke with Shriram Finance Management and they also stated that we are in a strong up move. UBS has come out with its report and they have maintained buy, but the target price, there is a significant hike coming in from 177 to 225 rupees per share, and they have stated that there's an improving sector fundamentals and a supportive pricing environment could actually help the company protect its margins going ahead. Also, there's a further upside or up move expected in the stock. The Indian CV OEMs, they warrant a re-rating given their strengthening fundamentals. And lastly, they're expecting much more better, stable volume growth and margin growth going ahead for Ashok Leyland.
You know, there's also an initiation coverage by UBS on Tata Motors CV. And I'm trying to recall the price target, if we can get that, but it's a considerable upside. You've been saying for some time that it is. When will you have enough data on this?
See, from a very near-term perspective, I can tell you that there is momentum on this, there is upward sloping channel, all of that. So, no reason to be negative on Tata Motors from whatever limited data I have.
You know, UBS has a target price of 550 when it comes to Tata Motors. You're still 100 rupees away, and what they've said is that it's the India businesses which is expected to remain resilient, and they are ready for resurgence. This is post the demerger. They're expecting improving trucking volumes in Europe to actually support the margin expansion and bolster the cash flows. And they're saying that CV is a better space to be versus passenger vehicles and two-wheelers as well. And you've seen the kind of upside in the last 3 months itself that Tata Motors CV has seen post the demerger. So it's going to be interesting to watch out for both these counters as well. So, I mean, that's what you're talking about. But let's actually look at Chandan's top picks as well. Chandan, with your view right now in terms of markets, your top picks and, what would you be eyeing in today's day of trade?
Yeah, thank you so much. So first it is buy on SBI. We are positive on selective PSU Bank, and SBI, State Bank of India, is one of the strongest counter. In fact, it has been making eye tops, eye bottom on the weekly chart, even after a corrective move of more than 1400 points in headline index. We are witnessing sustained buying interest, and rollouts are also better or in line. So looking for a fresh leg of rally in the counter, one can buy with support of 1030, and this heavyweight PSU name can head towards 1090 marks. Second trading area, there is buy on Tech Mahindra, positive on the selective IT name. Most of the IT counter are shifting from their improving quadrant to leading quadrant as per the relative rotation graph. So Tech Mahindra looks quite promising given the consolidation breakout and the open interest built up scenario. Just a couple of days back, we have seen a major surge in delivery volume, which also indicate a considerable momentum in the counter. So one can buy with support of 1710, and this IT measure can head towards 1815 levels.
Hear from you whether you're buying the Nifty in the session today or no.
So Nifty is likely to mix because India VIX is now at 15 marks. Multiple supports are visible at 24,650 to 24,800. But at the same time, till it doesn't surpass about 25,450, it would be tough to say whether it's bounce or the next leg of rally could be there. So I think we need to focus on selective sector and stocks while index may remain wider. And at the VIX of 14, 1500, 200 points movement in just few minutes, few hours cannot be ruled out. So it's better to go with the strategy or wait for selective momentum to settle before markets start the next leg of rally.
You know, I don't know. I think something has to give. I mean, these markets look so oversold. I wonder if the budget brings across that reason, and if indeed what Parak Thakkar has been asking for, which is some tinkering with the capital gains tax rates. I mean, independent of whatever else happens, I think that single announcement could actually spur the index meaningfully, because the market is going into this budget so light, and devoid of any kind of expectation that if you get that bit of tinkering, if the fiscal consolidation path, as most experts said, I think the street is not to bother with it, because you know that you are dealing with a fiscally prudent government. This finance minister has always been prudent. So therefore, as long as that, I mean, and that won't bother the street. Anyways, we'll see there's impetus on the debt to GDP ratio as opposed to just the fiscal deficit glide path. So if something around tax happens, you know, this market could actually spurt meaningfully.
So I hope that comes about. My only problem is that the government, and particularly FM Sitaraman, has toed the line.
You are right.
She's toed the line.
You are right.
Even during COVID-19, there was no profligacy. There was no extra spending. Of course, they've done a lot on the consumption side, tried to do it through cuts and GST. So there's not enough room, is my point.
I mean, I wonder, Alex, if again, I don't think that they will, because they've shown this thing that once they've gone on a path of raising taxes over a period of time, they'll not tinker around. But the point being, I think reducing capital gains tax long term by some margin, I don't think will impact tax revenues meaningfully. वैसे भी पैसा बन नहीं रहा है. So I don't think that will
and
really
interesting
make
conversation. But to add to this, an interesting conversation that I had with Anant Narayan yesterday was where he's trying to make a point that right now the way the tax structure is for FPIs, that needs to be tinkered with to match it with global standards so that they start coming into India. So that is one point that he's debating. And the second point is, because the taxation in terms of your domestic investors is differentiated across asset classes, that needs to be normalized, because that is what is forcing a lot of people to come in and put money into equity where the risk profile is also very high. And he's saying if that also becomes little bit, it should not be that you get it on the higher side always. Normalize it, get it equal across asset classes, and probably that will do the trick. So those were two interesting points that Anant made yesterday.
Trust Anant to come up with these gems any which ways. But pretty interesting. Okay, as the pre-open rates settle down 9-10, the one stock that is starting off really low is Asian Paints, 3.5% lower, a bigger loser than Hind Zinc, as the pre-open rates suggest. Now, 2535 for the longest time, looking like a blue chip name which is come into the value zone, somehow flatters to deceive, doesn't quite rally meaningfully. I wonder if it's giving any kind of a trading play out here. And okay, Kush is nodding a no. Kush, maybe come in.
No. So there was a glimmer of hope up until early December as well, but then came that breakdown and multiple supports level being taken out on the back of very strong volumes, big gashes, not what you expect, from a big name like Asian Paints. So I would be a little wary. Couple of saving graces though. 200-day moving average sits close to the 2500 mark. Also with this move, it will come close to the oversold territories. So you could see some consolidation or maybe it holding ground. But is it enough reason for it to go higher? I'm afraid not. So I wouldn't really go bottom fishing on Asian Paints just yet.
So Axis Bank is a stock that might just start today as well positive. If the pre-open rate is anything to go by, 2.5% is what it's at. And so if you put yesterday and today together, it is recouped quite a bit of that underperformance. Absolutely. The point is that it's still trading at very close to 2 times price to book on a trailing basis.
On FY27.
So is it still attractive?
Yeah, it can go, as I said, if you do just a simple maths, 750 is your FY27 book value. If you just give it 2 times, 1500, and 150 rupees is a subsidiary value. So 1500 to 1650, it has a room to go to, because they have shown fantastic growth in deposits in a deposit-starved market. So, but the point is, of course, I'll not buy at this price, because now it has rallied about 80-90 rupees in last 2 days.
I was about to put Parag Thakkar in a spot. ICICI
But
Bank, Axis, दोनों 1300 पे है. अगर दोनों 1500 जाने वाले हैं, तो आप कौन सा लोगे?
At today's prices, after this move, after today's morning's move of Axis, I'll buy ICICI and HDFC over Axis.
Okay. See, both of them are 13.50.
I'm glad that you asked that because I was trying to get him to say that anyway, but good.
Sorry if I stole
No, I'm glad that you did. On the chart, why don't you
I'll
close
buy.
the loop?
Axis.
I'll buy Axis because if you look at the long-term charts of Axis, 1320 has been the high for this one. It's knocked at those doors a couple of times in the last week alone, and now you're getting a very clear breakout on the back of volumes for good reason. Momentum play to banta hai. RSI very comfortable, just above 60-65. So I think momentum play to definitely yahan banta hai. Now that resistance level of 1320, 1325 will act as a stop loss. So agar aapka positional bet hai ya le rahe ho, to keep your stop losses around the 1320, 1325 mark.
Okay, interesting. You know, the other pack that I want to talk about as well right now is few of the railway counters, because there is some bit of momentum coming in there. You have a Titagar ABB deal that has come in as well. RVNL has got an order win, so that stock is up in pre-open. Anything on the charts, Kush, in terms of any of the railway names?
No, I'd give them a miss. Pretty heavy selling. Maybe these bounces could be taken as an opportunity to exit. So, no.
Okay. Chandan, you've heard some of these conversations, some of the stocks that we've talked about. Anything stands out to you? And if there's one stock that you were to pick, 40 seconds left, which would it be?
So I'll go with the SBI with the view that I have strong conviction and selective PSU banks are likely to do well. So here I'm looking for an upside move towards 1090, 1100 marks.
Okay, so Chandan's top idea is SBI. We'll take in Kush Bora's top idea, maybe post-market open. I also want to quiz both our guests about what to do with two very actively traded stocks, Hindustan Zinc and Vodafone Idea. We haven't had a chance to speak about Vodafone at all. We'll do that post-market open. But here's how the markets are starting off. What, 1/3%? No. It'll change. Okay, let's get the rates up now. Yep. 1/3%, about 100 points, not bad. So it's not a bad start. It's kind of 1/3%, kind of meandering around that level, not bad. The market breadth is positive. Mid caps are up 0.5%. Small caps, I'm sure, are up 0.5%. So this is actually a pretty good start, you would have to admit. Let's get the heat map up on the screen, because banks are participating in this move. Let's see what's gaining and what is not. So firstly, more green, less red. Let's start with the red first, then therefore Asian Paints, 5%. Oh my God. Tata Consumer getting cracking as well. Maruti on that news report, I believe, about South Africa raising tariffs, because South Africa is a key market, export market for Maruti. So no surprise that is cracking. M&M is not, just about 0.5%, by the way. So keep that in mind. There is a distinction that the market is making today between Mahindra & Mahindra and Maruti Suzuki. Okay, what's doing well? Axis Bank, top of the line, 3% higher. Very strong start. ONGC has a couple of percentage points to itself. Bajaj Finance, the leading NBFC, makes its presence felt. Reliance is making its presence felt, as is ITC, about 1.2% higher. TCS, HDFC Bank, I must say, this is a heavyweight-led move. Not that the heavyweights are really rallying, but about 1.5% for the 2 or 3 key heavyweights means that the index is doing what it is doing, about 0.6% higher. Just before I hand it over to Alex, if we can get the points contribution, you'll see Reliance, HDFC, ITC, I presume, in the top movers, not ITC, but HDFC, Reliance, ICICI Bank, Axis. Okay, so Reliance and the banks participating out here in a meaningful way. It's a heavyweight-led rally with Asian Paints and Maruti being the two names which are actually cracking. And SBI, Chandan Taparia's top pick, is just giving you maybe an opportunity. We'll ask Chandan about that. But before that, Alex, what about the broader markets?
You know, this is a very interesting move, Neeraj, purely because you saw a similar amount of green on the screen yesterday, but the heavyweights were here, which is why you saw... And you pointed that out yesterday, which is why a different picture today. Let's pull up the sectoral indices and see what's happening, right? Because is it reflecting what you're seeing in the Nifty 50? And that in fact, there's more green on the screen here. Defense is up and about, energy is up and about, oil and gas is doing well, CPSE is doing okay, private banks is up 1%. Good broad-based move in trade today. PSU banks just a tad bit in the red. I wonder if that will change over the course of the day. We mentioned SBI, and of course it has a significant weightage here. Auto, once again, second day in a row, down about 0.4%. Let's talk about individual stocks. There were quite a few reacting to earnings, and strong earnings at that. From the Realty pack, let's talk about Suntec Realty. It has posted strong pre-sales. The stock was up It continues to be up 4% or thereabouts. PC Jeweler, by the way, in the pre-open session, it had an up move towards the upper circuit of 20%, and it has cooled off just a tad bit at the start, down about 2%. Remember, I told you this is a highly volatile stock, so don't be surprised if it changes through the day. Metro brand, very strong set of numbers across the board, and the reappointment of Nissan Joseph as well. The stock is up 5%, building on the gains from yesterday's session as well. Bikaji Foods, we talked about the snacking companies, and Gopal Snacks. Both have very strong up moves. Gopal Snacks, despite a pretty anemic revenue growth, a significant improvement in the margin performance is leading to this kind of a performance. So bottom line improvement is quite significant. Even Bikaji is doing particularly well on the bottom line, on the margin performance as well. Mahindra Logistics returns to the black. It is trading higher, 9% higher. We spoke to Parag Bhai about the logistics space, and he was speaking about TVS supply chain. Perhaps we'll have to look at this a little bit more in detail. IG has another one that is doing reasonably well in trade today. And remember, we're going to talk about it in more detail on our show KYC, where we'll speak about various trends in the space to the management as well, including the fact that lab-grown diamonds cannot be called diamonds anymore, and whether that changes the market for them at all. In weak earnings, Dodla Dairy stands out. It has had a pretty weak set of numbers, but it's not losing as much ground as you might have foreseen, down about 2% or thereabouts, and we've already taken you through the numbers. A few other updates for you. You have Titagar from the rail pack that should be doing okay. It signed a pact with ABB. It's up about 2% or thereabouts. Capilin Point has gotten US FDA approval for one of their injectables. It's up about 2% or so. Decent move. And Hin Zinc on the downside. I wonder how much it's losing, just about 2%. And after yesterday's 4+% up move, this is just a little bit of money being taken off the table. Of course, supply comes through in the form of that offer for sale, which kicks off today and completes tomorrow. I wonder if that entire amount gets mopped up. Hiral, is there anything else from the broader markets that you're spotting that's interesting?
So, I mentioned all of them, but few of the other ones which don't really have some news around it. Tanla is seeing some good moves in today's session. Olectra is also up nearly 5.5% in trade. On the losing end, you have Westlife, which is slightly under pressure. Home First is also seeing some bit of profit booking in today's session, and we've mentioned about Tata Consumers, which is down and about in trade. But on the charts, Kush, as Neeraj had promised, with the way markets have opened up right now, what is your top pick looking like at this hour now?
Yeah, so a couple of stocks that we discussed, OFSS, Jindal Steel and Techem was an update. All three doing well, but if I were to pick one right now, I would say Jindal Steel. Metals anyway, they've got that tailwind and the stocks are doing well. This one is not even overheated right now. And like I said, above 1,000, 1110 or rather 1100, 1110, that zone, the stock actually gains momentum. Something similar to what we discussed about Axis. So there could be a breakout above that 1100, 1110 zone. So keep that on your radar. If you haven't bought it already, you could still consider it. And just to reiterate the levels on that, 1110, 1140 targets, 1050 is the stop loss. But given the uptick that it's already had in opening, you could bump up the stop loss to 11 or rather 2070.
Okay, pull up State Bank of India, because this is a stock that moved pretty significantly in the last few minutes of trade yesterday. It is Chandan's top pick, and it's down about 0.5%. Chandan, is this providing you more opportunities, and would you change your thresholds at all at this point?
No, the major trend of the PSU banks is positive, and SBI is one of the strongest counter. However, it has nature to consolidate and then start the next leg of release. So till it holds about 1030 level, I'll continue to be with buy on decline stance with the view that it can head towards 1090, 1100 marks. We need to keep in mind that there are very few counter which are holding well. And usually these counter hardly moves with the short covering. They move when the broader market just get the range bound bias. So I think PSU banks are likely to do well, and for immediate point of view till it holds about 1030, I'll continue to stay with the long position and advise to use the buy on decline stance.
Buy on decline on this. Okay, Chandan, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Before we get in, Nirav Sheth as well. Parag Thakkar, since we're talking about banks, private banks, some of them are doing really well today.
So basically my view has been that private sector banks will do very well. after interest rate cut cycle starts, 15% EPS growth is what I'm looking at. One thing up till now which I have not spoken about is that all HDFC, ICICI and Axis of the world are doing very good OPEX control. If you see Axis Bank result also, OPEX control was fantastic. So, and all three are doing that. So you will see benefits of after interest rate cut cycle, the margin will stabilize, the loan book growth will grow, and OPEX control will also there, and credit cost remains pristine.
Yeah.
So credit cost, so quality, I would say HDFC, SBI and ICICI will have a credit cost of below 50 bips, which is actually a Cinderella time for banks. And OPEX control adds to the profitability.
Plus, they are charging us for small services now, so keep that in mind. But Parag Thakkar, Kushpura, gentlemen, thank you so much for joining in. As always, really appreciate your time. Let's get in Nirav Sheth, CEO of Institutional Equities at MK Global Financial Services. Nirav, great having you as always. Thanks so much for taking the time out. Now, the narrative out here in our studios from almost everybody, Nirav, seems to be that the market is oversold. I firmly believe the market seems oversold, waiting for a trigger. Was the India-EU FTA a trigger, or does the market need a bigger trigger, like maybe a tax tinkering in the budget or something else?
Well, Neeraj, frankly, I did not see this coming, right? So we are always of the view that you have such a great macro setup, right? You had one of the worst possible year for dollar, right? And including not only the last calendar year, even if you look at the current calendar year, the dollar is declining. And yesterday, the president actually made a statement that he's not worried about a declining dollar. That's a great setup. And despite that, you lost $25 billion in the last 13 months, purely due to FI flows. And so there are concerns over there. I agree that now you got great starting valuations going into this fiscal year. And I think the whatever find its own level, I do believe that if you actually do send the right signal to the FI investors, and I'll come to that in a moment, why I'm talking about it, in terms of trying to make it more attractive for them to invest in Indian markets by removing LTCG and also doing, taking cut down the rates on the short-term capital gain tax. That could be a big booster, but you do need that. I'm very, very clear about it. One more thing, Neeraj. I think one of the things that you are facing a problem is that India is the only country in its peer set which doesn't have an AI trade. And I have talked about this in my earlier conversations. That is something that we need to worry about.
So, Nirav, let's face it, almost everybody has said that this is not a macro problem, it's a capital flight problem, right? And in order to address that, you need a measure which can arrest that flight or bring back the capital. But the starting point would be arresting the flight. Would the tax tinkering do that, or does it need something else?
No, I think tax tinkering will be a big step forward, because today you see, just look at it. If you look at US, the dollar returns over the long period of time, you're talking 5, 7, 8 years, it's roughly about 7%, right? If you look at India, and if you say that you're looking at 12% returns for the Nifty, forget about the alpha that you want to create. Out of that 12%, you end up giving about 1.7, 1.8% because of your LTCG, right? You lose 3 or 4% because of rupee depreciation. Imagine that you are coming to a country like India, an emerging market, if you are going to get dollar returns which are roughly about 6 or 7%, which is what you get in developed economies, the math doesn't add up, which is why you have to make it very, very exciting. And you need to make it exciting till the time that your capital inflows are not only driven by your real. See, I need to have a positive current account balance. Till the time I don't have positive current account balance, I need to ensure that my FI inflows are independent of my current account. That is the way at least I look at it.
Okay, Nirav, the way that, and good morning to you, Alex here, the way that we discussed, and of course it's probably because of the questions as well, but seemingly the trigger is a turning point for foreign institutional investors. And that may not be the case. Fundamentals, and we're looking at some of the earnings as well, seem to be turning a corner. I'm just wondering, between the two, will it be earnings-led or will it be flows-led, in your opinion, rounding the corner from this kind of mandi that we've been in?
No, it is always earnings at the end of the day because, like I said, what will find is own level. So if you don't buy something at 12p, you'll end up buying at 10p. If you don't buy something at 10p, you end up buying at 8p. So the money eventually has to come. The question that Neeraj actually raised, see, please try and appreciate the fact that usually your capital flows, right, are driven if I've got a great underlying economic momentum. And let's be very clear about it that you are still growing at about 7.5%, and you're up, and you actually got GDP upgrades happening. Despite that, you lost FI flows, right? So your capital flows today are disconnected from the underlying reality, which is why you have to make it attractive for capital flows to come in independently of what your economy is doing. And that is a bigger point that I'm trying to make, right? And you give a pathway for the next 5 years. Please try and understand that if you're going to make 50,000 crores by collecting something in tax, and if you're going to spend billions of dollars trying to protect your rupee, it doesn't make great, it's not a great trade-off, right?
Strong point. I wonder whether you have an opinion on the role that the currency will have to play as well, purely because, and of course, one can argue that the longer term trajectory is a 3% odd per year. But let's face it, the last 1 year has been pretty problematic, and anybody who deployed funds over the last, say 18 months or so from the outside in is getting absolutely nothing. So if that turns and if the rupee appreciates somewhat, does that also provide a decent springboard for people to start coming in a meaningful way?
Yeah, so currency is an important factor when you try and look at, no one is coming for rupee returns. FI flows are going to come in for dollar returns. Certainly makes a difference. But then you're looking at tactical plays, right? Someone is saying that, okay, the rupee is depreciated enough and therefore let me come and try and make a quick buck. I am trying to see whether you can attract long-term capital into the country. I was just looking at it. If you look at the last 8 years, right, I think LTCG was reintroduced in FY18. Now, if you look at the last 8 years and if you look at cumulative FI inflows in equities, it is just about $16 billion. If you go to prior 8 years before LTCG, India got in $100 billion in FI inflows. So the writing is on the wall.
Interesting point, Nirav, that you made. Good morning, Hiral. On this side, I'm going to come back to the India-EU FTA. As you mentioned, you did not really see this coming. Now, MK has had a positive view when it comes to Indian markets for 2026 as well. With this FTA being signed, and it introduces new variables as well into the entire ecosystem, right, of what you're expecting in 2026. Does that alter your projections or market expectations, number one? And two, when you have to look at from a sectoral perspective as well, where does it position you to capture the best benefits?
So, but to me, the FTA trade, please understand that you're not going to change your FY27 estimates. You're not going to change your FY28 estimates. Even if now the trade is done, it has to get ratified by the European Parliament, and then it's going to sign. This is going to take about a year, 2 years for it to actually start kicking in, right? So, what it does is it changes the sentiment, right? It obviously, you're making a big statement, right? Because all economies are interlocked, all countries are very, very competitive, right? So we also believe that you're not too far away from a trade with US as well. The disconnect that you've seen between the currency in terms of how rupee has behaved and the underlying dynamics was largely a lack of confidence. What the trade deal does is that it brings the confidence back into the economy. That is a bigger impact that we'll see going forward. Coming specifically to sectors, obviously, I think textiles is a beneficiary, auto ancillaries are going to be beneficiaries. You will also see that some of the companies could be negatively hit. I think Mahindra & Mahindra reacted yesterday to just about that because obviously you'll have cheaper higher-end models coming into it. I have not looked at the fine print, so maybe too early to talk about the sector-specific or company-specific impact.
Nirav, that's with regards to India, EU as well. Now, in terms of individual sectors, you have been positive when it comes to discretionary, industrials, healthcare, materials. That's what you've been looking at. The view has been negative when it comes to IT for you to some extent. A lot of fund managers have now switched positions to say that 2026 probably will be a year for IT. Anything that changes at your end, seeing the way earnings have panned out for IT as a sector so far, from large caps to mid caps as well, and with valuations where they are right now, does it seem right?
Oh, I am very, very bearish on IT services. And we don't know how we are going to play out. I have a very, very simple thesis that if you got something where the marginal cost of product goes to zero, then the competition eventually comes down to price, right? And coding is one of the, it is an established template where AI is being used, right? So some companies have been created which are being valued at $30-40 billion, which are doing this AI-led coding and all. I have had this thesis for some period of time that you're seen the peak employment in IT services sector, and they have become X-growth as far as I am concerned. Happy to be proved wrong, but time will tell.
Nirav, as always, thanks so much for an engaging conversation and look forward to speaking to you really soon, hopefully with good news from Budget 2026.
Absolutely. Thank you so much, guys, for having me.
All right. Well, let's talk about the sectors that are set to gain and which will be impacted on account of the India-EU trade deal that is in the works. Puneet joining in to tell you about the details. Puneet?
Well, thank you for that. It's definitely automotive that's going to be one of the key center stages at this particular point of time, given that there has been a reduction in import duty from almost 110% on some key products priced above $40,000. The reduction is expected to be reduced as well. But views from brokerages like JP Morgan amongst others are also important because they feel that the imports could push higher by almost 1 lakh units. This number is important because the current luxury market is only 50,000 units in India, and almost 95% is produced in India. So the imports getting higher will be one key aspect. The other key one is also in terms of what they mentioned is amount of almost just 2.4% of demand. So you'll have to see in terms of the whole landscape as well. Kotak, on the other hand, has also mentioned that this deal is also effective in terms of calendar year 27 and 28 in terms of growth. They've also said that this could be a long-term hedge against the US tariff policy amongst others. Jefferies has mentioned specifically that they see a minimal impact right now of this EU trade deal, but mentioned that it provides a very interesting opportunity for stocks like M&M, which corrected yesterday. So that's a contribute that we've seen compared to what the share price has been highlighting yesterday. In terms of Citi, they see that this could be a China plus one diversification. So multiple views that we are getting from brokerages. Citi also said that hospitals, chemicals, defense and engineering are the stocks and sectors that you have to watch out for from this trade deal. And finally on Avendus, very interesting report yet again, and they've clearly mentioned that textiles will get a boost because of tariff cuts, so it could be increased competitive positioning in Vietnam as well as for Bangladesh. And for auto specifically, they have highlighted that this could be an interesting opportunity as well, given a newer market for auto ancillary players. So overall, across brokerages, different key points that we've picked from each one of them, but autos, pharma, as well as textiles remain one of the key aspects.
Okay, so quite the list to talk about. Thanks so much, Puneet, for that. But let's focus in on automotive, because really that's what the street seems to be focusing on as well. We've got Saharsh Damani, who is the Chief Executive Officer of the Federation of Automotive Dealers Association, and Vidya Shankar Krishnan, who is the Chairman and Managing Director of Forging. Gentlemen, thanks so much for taking the time. Really, the story is multifold here. So let me start with the OEMs first and the expectation of the impact for a few of these segments. Saharsh, the street seems to be of the opinion that EVs first and foremost, which are slightly pricier, will get negatively impacted. Does that mean that there's likely to be a resilience for the internal combustion engines and most of the challenge will be restricted to 5% of the market, or is it bigger than that?
So hi, good morning to you and all your viewers. I think there's some unnecessary rumors going around in the market and in the Instagram universities. For example, EVs, nothing is happening for the next 5 years from the time the tariff from the EU FTA gets implemented. Second is, for the mass market players, I don't think there's any challenge coming up because whatever products are coming into this EU FTA tariff consideration are above 40 lakh categories in the rupee terms. So the third is, there were a lot of rumors going on that the BMWs 3 Series, 5 Series, C-Class, E classes of the world and lookalike products, will have slashing of prices coming in. But let me explain this. 90 to 95% of the luxury vehicle, which we see on the roads today are manufactured within the country. These are made in India vehicles or are CKD units, and EU FTA tariffs don't have any impact on these vehicles. There are only say 5 to 7% of the products which are in the ultra high categories like the Porsches, Lamborghinis, or the G wagons, and the other ultra luxury brands of different OEMs, which are directly imported in as a CBO format, and these vehicles will see some reduction in prices happening, but at a later phase. Right now, what we are seeing is in the last calendar year, Indian rupee was depreciated by around 19%. So there's a price hike which most of the OEMs have announced. And for at least 1 to 1.5 years, I don't think that there's any reduction which will happen in this ultra luxury category. But what it will do is it will bring in more of such products into the Indian markets, more of such brands which want to test waters in India in the ultra luxury category because of the reduction of tariffs from 110% to 40% and then phasing it down to 10%. So that's our sense from the auto retail segment on this India-EU FTA.
Significant updates coming through, and you're seeing some of that at the bottom of the screen. Ajit Pawar, who's a well-known a politician in Maharashtra, in fact, the former Deputy Chief Minister of Maharashtra or current Deputy Chief Minister of Maharashtra has met with an accident. His plane has crashed in Baramati, and this is something that we are getting live updates on. We don't have confirmation at this point whether the people that were on that flight, and those are the visuals coming through, the people that were on that plane, whether they have perished in the crash or whether they survive. There were 6 people, including Ajit Pawar. From the initial updates that we have received, the plane has actually crashed on landing. It is unclear at this moment whether it was a technical failure or whether there was anything else involved in the accident, but we will get you updates as and when we get them. At this moment, of course, thoughts and prayers with the families of the people on that flight.
Yes, cross fingers for the best possible outcome to come out of this. Prayers for everybody. We'll keep you updated. NDTV Marathi team will be on top of this as well, and get you updates as we can.
4 or 5 people on board. Six people. Okay, were on board is what they've indicated. I mean, but confirmations will be crucial from here on. I think we have a network reporter who is going to be available shortly to give us some updates from there, but we should get the discussion forward with the auto conversation so far.
We should.
Yes, indeed. In fact, let's get in Vidyashankar Krishnan of Forgings into this conversation as well. Remember, viewers, will keep on giving you updates as things happen. Mr. Krishnan, thanks so much for joining in. Neeraj here. It's been a long time that we've spoken, but I wonder if you believe that this India-EU FTA brings about a potential of accelerated demand for Indian auto components, because I think that Indian ecosystem is very well feeding into the European OEM ecosystem.
Yep. Hi Neeraj, morning. Good to see you all here. Yes, you're right. The Indian autocomp ecosystem is quite well integrated with the EU OE base. No doubt about that, OE or the tier 1 base. But what this means today is a structural shift, Neeraj. We've seen too much of volatility in geopolitical relationships globally. And this is a great arrangement, a deal of the century kind of thing between 2 large trading blocs, India and the EU, and provides for a huge amount of stability in geopolitical relationships related to trade as well. Because today, geopolitics and trade are too intertwined. So it's impossible to segregate between the two. In the announcements that have been coming in the last 9 months. So in this context, the EU deal gives a lot of stability to the relationship of global trade. And one even thinks that, globalization is not dead. Globalization is back.
Okay, so one is the macro impact, and very well put out by you, Mr. Krishnan, about how this is a game changer of a relationship move happening. Could you maybe attribute some numbers to this? I mean, what is, over a 5-year period, could Forgings or some of your peer sets gain increased revenues from a deal like this because of duties, tariffs, so on and so forth?
Currently, MMF is doing about 20% revenues to the EU market. So, that number translates to around 300 crores. I believe over the next few years, this could easily double.
But, okay.
Even, of course, the size of that is also very small.
Mr. Krishnan, it sounds incredible when you say that, but just let me ask you to quantify that. So, few years based on the definition could be 2 years, 5 years, 8 years, or 10 years. Where on that scale would it be?
3 to 5. I chose the middle ground. Okay. 3 to 5 years, I would say easily double.
Okay. All right. I'm just wondering what you think about the challenge from overseas, though. Do you anticipate with some of these restrictions or duties reducing that Indian manufacturers will have to up their game technology-wise, whether there's going to be more collaboration? How is this going to pan out? I'll first ask you, Mr. Vidyashankar, and of course, Saharsh has also pointed out that some of these question marks about competition are exaggerated, but on the technology standpoint.
The EU, no doubt, European car manufacturers are no doubt very high tech and well ahead on some platforms. But we must remember that the Indian auto majors are extremely competitive and have caught up quite a bit in terms of the affordable technology side. And if you take a look a little bit to the north of the Himalayas in China, the market there is also affordably tech. So we have to look at being affordable and at the same time tech savvy, which I think Indian automakers are gotten on to quite well. And not that they're world leaders or anything, but they have certainly come a long way and will go a long way forward in keeping that edge. So much of challenge from Europe is not expected in the run-of-the-mill consumer segment. As we discussed earlier, the ultra luxury market, however, will be quite more challenging for the Indian automakers, and they could see some erosion in that market. The other way around is that market will also explode or grow with the advent of competitive technologically advanced products from the EU.
That's with regards to how the Indian market will shape up. Saharsh, good morning, Hiral here. My question to you is now that the duties are dropping. We're looking at what, a number of 250,000 vehicles annually. How does this, expect to make that shift happen when it comes to the sales mix between premium and luxury categories within the Indian dealerships? Because we are seeing growth, or even the stock prices of dealers which are seeing a strong spike. How does that really shift happen?
Yeah, hi. So if you see the Indian luxury market right now is some 50,000 vehicles. And of this, around 90% to 95% vehicles are made in India vehicles. So the entire impact which will happen is in the mere 5% market, which is a minuscule number. And this market generally caters to the ultra luxury category with the Lamborghinis, Ferraris of the world. And I think these numbers are sub 1,000 per year. So I don't think, as of now, there's a big market available for this. But what this India EU FTA will do, it will become a test bed for the other ultra luxury brands, which are still not present in India. They would want to test waters here and understand the market, because right now, there was 110% duty on the imports. So once this duty goes off, many products which were not able to make the cut in the Indian market will now be able to see the light of the day. And I think it will open up a market for those brands which are having ultra luxury products and which are still not available in the country. So that's my take on this.
You know, that mix is going to be interesting from here on to figure out as well, you know, once things pan out. But thank you so much, gentlemen, for joining us on the show. It answers a lot of questions for the viewers as well in terms of what could be in store from here on. But moving on, as we mentioned earlier, a plane carrying Maharashtra Deputy Chief Minister and NCP leader Ajit Pawar has crashed a while ago, attempting to land in Maharashtra's Baramati. Let me get in Sujata Dwivedi, correspondent at NDTV, to tell us more as to what she's hearing so far. Sujata, what do you have for us? Because this is, I mean, news which is really shocking, wherein the plane has crashed. But what are you picking up so far?
Well, yes, unfortunately, a plane that was carrying Maharashtra's Deputy Chief Minister Ajit Pawar has crashed while it was on its way to land in Baramati. And so far, what sources tell us is that all of the injured, they were shifted immediately to the hospital to get the immediate treatment. However, officials are yet to announce the condition of the passengers. And ambulances have rushed to the spot to ensure that rescue operations are underway, and they are done swiftly to give immediate medical attention to the passengers who were on board. So far, it is being said that Ajit Pawar, who was on the plane along with his other security officials who usually accompany the Deputy Chief Minister and the officials, they were present along with him. And while the plane tried to land, there was some technical glitch, because of which we saw that the plane crashed, and after which in the visuals, as we can see, that a lot of smoke was out of it, after which all of the villagers around, as well as the officials, they rushed the spot to ensure that there was these rescue operations that were being done timely. However, so far an official announcement is awaited to understand what exactly is the condition of Deputy Chief Minister Ajit Pawar as well, who was on board the plane. Back to you.
Sujata, stay with us. A few more details that you need to know about, and of course, this is Ajit Pawar is well known across political circles, certainly, and in national politics as well. The most recent update, of course, comes from the split that took place with the National Congress Party of Sharad Pawar, and he is, of course, the nephew of Sharad Pawar. He has served as Deputy Chief Minister in the current establishment and in the previous couple of years as well. This is the Mahayukti alliance that is alongside Chief Minister Eknath Shinde and also Devendra Fadnavis. Let's cut across to the network and see what they're saying.
The schedule, it was the flight aircraft at around 8 a.m. He was supposed to board and go to Baramati for around 4 rallies for Jira Parishad elections campaigning, which are currently underway in the state of Maharashtra. 5th of February, the elections are scheduled for. So definitely campaigning are going on, and he was today to campaign and take 4 rallies in his own home turf Baramati, which is a stronghold of Pawar's. But this unfortunate incident, now what we understand, definitely from our local sources, that he was definitely on board and he is in a critical situation, admitted to a nearby hospital. And also what we understand, Sunitra Pawar, his wife, Supriya Sule, they are now leaving from Delhi, will be heading towards Pune, and from Pune they will be going to Baramati. These are the developments that are taking place currently, and what went wrong, inquiry will be done. As per the police on the local level has informed these primary information that 4 to 5 people on board were critically injured and taken to the nearby hospital. These are the developments which we are coming to know, but yet officially from Maharashtra government or from Baramati police, there are no statement regards to whether Ajit Pawar was on board or not. News agency ANI has confirmed that Ajit Pawar was on board and has been critically taken to a nearby hospital after the injuries. So definitely, as the details and more updates comes to us, we'll definitely share to our viewers. But at this given point of time, a major incident has taken place in Baramati, and what we understand from our local sources is Ajit Pawar was definitely on board and he has been taken to the hospital in a critical situation, though we await official confirmation from the state government of Maharashtra and local police of Baramati. Back to you.
Stay with us, Abhishek. This remains a developing story with official confirmation awaited on the condition of all those on board. We at NDTV are independently working to confirm details of those on board. However, I must mention ANI is now reporting that Maharashtra Deputy Chief Minister and NCP leader Ajit Pawar was on board the aircraft at the time of this accident. In fact, Radhika Ramaswamy tracking all the latest developments that are coming in as well. Radhika, certain reports highlight that the Baramati airport manager has said that the aircraft lost control during landing and went off the runway before crashing. Do we have any verified details regarding the same?
There's no official statement on that. We are hearing that, yes, the aircraft did lose control at the time of landing, and which is when this accident happened. But yes, we will await official confirmation on that. The priority right now is to ensure all those who are injured were shifted to a hospital, and that has been done. Now, what the condition of all the injured, including Maharashtra Deputy Chief Minister, is, that remains to be seen. But very, very tragic news. 5 people on that particular aircraft, including Ajit Pawar. Ajit Pawar's OSD was also in the aircraft, is what we are being told. It crash landed at about 8:45 a.m. It crashed at about 8:45 a.m. is what we are being told. What exactly happened? Was it at the time of, was it because the pilot lost control? Why did the pilot lose control? Was it as a result of some kind of mechanical error? Was it because the weather was, foggy? All that is a matter of investigation.
Radhika, do hold your thought for a moment. We have big breaking news coming in on NDTV at the moment. The DGCA has confirmed that Ajit Pawar has died in this tragic crash. Tanushka joining us with further details. Tanushka, take us through exactly what the DGCA is saying regarding Ajit Pawar.
Right, Parmeshwar, we have this official confirmation that's just come in from the Director General of Civil Aviation that Ajit Pawar, the Deputy CM of Maharashtra, was indeed on board this aircraft with 2 more personnel, one of his PSO and 1 attendant. So the total number of people on flight on board were 5. We understand the operator of this aircraft is VSR Ventures, and the aircraft type was a Learjet 45. The aircraft registration is by the bearing of VTSSK. And we've been given to understand that the personnel on board were 5, including crew. So that means there were 3 passengers, 1 pilot and 1 crew member. So in total, 5 people were on board. And as per initial information from official DGCA sources, no person on board has survived the crash.
As the DGCA and Tanushka is highlighting, the DGCA has confirmed that the Maharashtra Deputy Chief Minister Ajit Pawar has lost his life in this crash. There have been 0 survivors from this crash that is being reported from Maharashtra's Baramati. Tanushka, has the DGCA specified the cause of this crash? What happened? What went wrong?
Right, Parmeshwar, we are awaiting these details at this point from the DGCA, but from what it looks like from the visuals that we've also seen is that there was an emergency landing that this flight was making, and at that point in time is when this crash happened. Of course, further details are to come in from the DGCA and the Aircraft Accident Investigation Bureau as well. We're expecting these details in a while in terms of, the timing, in terms of what exactly happened, how many moments was it after the takeoff, and what was going on within the flight and the cockpit as well. All of these details we will get to you shortly.
Right. Tanushka, do stay on with us as I recap for our viewers. The Director General of Civil Aviation has now officially confirmed that Maharashtra Deputy Chief Minister and NCP leader Ajit Pawar has died in this aircraft crash during landing at Baramati Airport. There are no survivors being reported by the DGCA at this point as far as this accident is concerned. Supriya Sule, we are told, meanwhile, and Ajit Pawar's wife Sunetra are rushing to Baramati from New Delhi. Radhika Ramaswamy and Abhishek Awasthi also tracking the latest. Radhika, we're given to understand Ajit Pawar's wife and Supriya Sule have left for Baramati as these emergency and security agencies responded at the site, and the DGCA has confirmed that Ajit Pawar is no more. All right, before we go across to Radhika Ramaswamy, let's go across to Tejashree, who joins us live from Supriya Sule's residence in the national capital at this point. Tragic news coming in, Tejashree. Ajit Pawar has lost his life. We're given to understand his wife Sunetra and Supriya Sule have left for Baramati.
Well, you see, currently we are just standing outside the residence of Sharad Pawar, and inside is the family members of Ajit Pawar, and we'll be showing you the visuals as well. What we are getting to know is, as if now here Supriya Sule is present, Sunetra Pawar, the wife of Ajit Pawar, Parth Pawar, the son of Ajit Pawar, they all are present over here. And just some time back, BJP MP Nishikant Dubey has also arrived over here at the residence of Sharad Pawar, where they are meeting as if now Supriya Sule as well. Budget session was going to start, and that's why Supriya Sule was here. But what we are also being told is that Supriya Sule, Sunetra Pawar and Partha Pawar now will be leaving any time for Baramati. We'll keep on showing you the visuals. These are the residence visuals of Sharad Pawar that we are giving you from 6th Janpad, and inside visuals also we'll be giving you so as to show that at any point of time now the family members of Ajit Pawar will be leaving. We'll zoom in and show the inside visuals as well, because what we are getting to know is that the leaders from several political parties have also started coming over here to meet, and some more leaders have come over here to meet, and we'll just try to get a first reaction over here outside the residence of Sharad Pawar and just listen to
मला काय माहिती मिळाली पुढे लागेल
मी पर टीव्हीवरच बघितलेलं आहे मला आता सध्या काय माहित नाहीये टीव्हीवर बघितले मी आता आतमध्ये जाऊन बघते काय आहे हो जाणार आहे
ताई मराठीमध्ये अजित पवारांचं निधन झालं असं कळतंय काय माहिती आहे
मला काहीच माहिती नाही मला आताच टीव्हीवरती कळलं आणि मी डायरेक्ट इथे आले
काही माहिती आहे आपल्याकडे मॅडम
नाही
झालंय असं काय संदर्भात
कोणाशी बोलणं झालेलं नाहीये आता मी डायरेक्ट इथे आले आता बघते आतमध्ये काय
सुनेत्रताई आणि पार्थ आतमध्ये आहे
जी मी भेटते जाऊ ओके चालेल
पता चला
Fawzia Khan was telling, that she is going to meet the family members right now, and then she will be getting to know so that what is happening over here. These are the visuals of Fawzia Khan, who is the leader of NCP. She was also here, to attend the budget session, and all the leaders one by one will be coming over here. The security also in some time from now will be increased at the residence of Sharad Pawar, from where we are reporting right now. That was Fawzia Khan who told that she will be meeting Supriya Sule, but as of now she has no information so as to how this entire incident transpired. Once again we'll be showing you the visuals of the residence of Sharad Pawar, where in some time from now more leaders will also come to meet Supriya Sule and Sunetra Pawar and Partha Pawar as well. What we are also being told is all these family members in some time from now will be leaving for Baramati. This is the information, and also apart from this, what we are getting to know that there were 5 individuals who were on board, out of which 2 were the crews, and also in fact the OSD and PSO were of Ajit Pawar was also there in the same plane. This is the information, the latest information that we are picking up as of now from the location from we are reporting right now. That is the residence of Sharad Pawar, and also in fact we did see Supriya Sule some time back. Definitely she was not in the condition to speak as of now. She has been saying that everything will be briefed in some time from now, when they will be getting information of the aircraft which had witnessed this air crash, and which is crashed in fact, and it is listed as a private actively flying business jet is what we are getting to know.
This is sad news, and this is an unfortunate development where the plane carrying Maharashtra Deputy Chief Minister Ajit Pawar has crashed near Baramati while landing. May his soul rest in peace.
This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it.
Back with NDTV Profit and on solemn news that in the plane crash in Baramati, Maharashtra Deputy Chief Minister Ajit Pawar has passed away. So that's unfortunate, and we'll of course be on top of that story during the course of the day as well. This is really unfortunate news. Well, moving on and coming back to the markets, they are holding out, but a weak listing for Shadowfax Technologies for sure, relative to what was anticipated. Or maybe to an extent you could argue that in line with estimates that it was a flattish anticipation and nothing otherwise has happened. I believe Varsha is here with a SWOT analysis of Shadowfax. Varsha.
Well, yes, a logistics company, definitely not a good day for Shadowfax, but it offers e-commerce, express parcel delivery and a suite of value-added offerings. Talking about the, SWOT analysis, let's talk about the strength of this company. It's the largest last-mile gig-based delivery partner infrastructure, has extensive network coverage with 14,000 plus pin codes. Talking about its weakness, it may continue to experience losses and negative cash flows in the future. High cost of logistics setup, business experience, thin profit margins are some of the weaknesses that the company face. Well, this is true for every logistics company. The opportunities, talking about the opportunities, rapid growth in e-commerce and hyper-local services is one of the opportunities the company has. Plus potential inorganic acquisition will strengthen the network reach, but high competitive intensity and regulatory issues like gig workforce engagement models are some of the threats that the company faces. But overall, taking an historical view, logistics company doesn't get a much higher PE considering the thin margins that they enjoy. But overall, yes, a weak listing when it comes to Shadowfax.
Okay, so that's with regards to where Shadowfax goes. We will try speaking to the management during the day as well, because
But in the words of HSBC's Pranjul Bhandari, it's also something where reform meets restraint. Now, why do we say this? Before we get Pranjul in the conversation, just a bit of a math that I want to bring to the table for all of us. Now, what is the budget math like? Capital expenditure, or CapEx, which has been the big bulwark of what every budget speech and math has been, is this, that we've moved towards numbers of nearly 10 to 10.5 lakh crores, but the revised estimates, at least this year, came out to be lower, and the FY26 budget estimates still forecast a 10% high growth. Will this happen? That's one key question. Let's move on from the capital expenditure math to the tax revenues of the central government. Here too, the assumptions to some people seem stiff, but for a lot of other people, there are multiple ways in which tax revenues could actually get bolstered in the times to come. So let's keep a keen eye out for the number for FY26, more than what the revised estimate for FY25 turns out to be. Moving on from the tax revenues to the fiscal deficit number. Here, you would argue that almost everybody is on the same page. So while the fiscal deficit number jumped up during the COVID period, we've been on a steady glide path post. The expectation is that this 4.4 number could also be met, because this government is very, very focused on meeting the fiscal glide path under any circumstances at all. So these are the key numbers with which the budget thing works with. And of course, like I said, capital expenditure remains the big bulwark of almost any budget speech. The question though, to our guest, Pranjul Bhandari, as she joins in the studios, or rather on the show, is whether or not this period of restraint that the government might have to exercise, will it be impacted by the need for reforms? Pranjul, great having you. Thanks so much for joining in. And I loved the headline, if I can call it that, of your report, wherein you mentioned that reform meets restraint, but you do believe that on most counts, the government will be able to live up to the numbers that the street has been working with, or the government is forecast.
Yes, absolutely. Thanks for having me here. So look, there is the budget for FY26. The government had made lots of promises last year. So the first question is, will that be met? And then what are we expecting for the next year, FY27? Now, FY26 was an interesting one because we suddenly saw like the GST tax cut on top of the income tax rate cut. So therefore, tax revenues had been very weak. But interestingly, non-tax revenues came to the rescue. And within that, it was basically dividends. Dividend from the RBI, dividend from PSUs, especially oil marketing companies. I think that has been able to plug a lot of the hole which the tax rate cuts created. And then the government was also able to cut some of the current spending, basically, money it puts into different schemes. And I think on the back of all of that, the 4.4% fiscal deficit target of FY26 will be met. I'm also going to stick my neck out and say that for FY27, the next fiscal year, the government will be bringing down the fiscal deficit from 4.4 to 4.2% of GDP. Now, this is important. It is important because the government has a public debt target for FY31. Over the next 5 years, it wants to bring down public debt every single year. And from that, we can back calculate what the fiscal deficit should be in order to bring down the public debt. And when we do that calculation, we expect the fiscal deficit to fall from 4.4 to 4.2% of GDP in FY27. I would say this is not a very difficult task at all. In the last few years, we've been bringing down the fiscal deficit by a lot more, like 0.4, 0.6, 0.8% of GDP. The government has had to really cramp expenditure. But this time around, it's only 0.2% of GDP, which I think will happen on the back of some cuts in some of the centrally sponsored schemes. Now, the government runs a lot of centrally sponsored schemes, but unfortunately, in the last 5 years, they've actually doubled in number. You don't want to have too many because then you're running thin and you're too widespread. You want to focus on a few and really do well in those. So I think some sort of merger between schemes is going to happen, and that will help us bring down some of the expenditure, which will help us reach the fiscal deficit target. So all in all, my point is that without too much effort, I think we will be able to tread on this glide path that the government has laid out. And generally speaking, this is good for macro stability.
Pranjul, I saw that you said that for FY26, it's elevated non-tax revenue, which will help the government meet the fiscal deficit target. So in the absence of, or will an elevated non-tax revenue be a must for FY27 as well, or cutting down in these capex schemes that you spoke about, or expenditure schemes that you spoke about, to be enough to continue on the glide path?
No, I think we'll need help from all fronts. I'm assuming that the non-tax revenues will also grow by about 10%, which is my forecast of nominal GDP. And I think I'm not out of whack here. Generally speaking, at the rate at which the economy is growing, different sectors generally align towards that as well. So my sense is that dividends from PSUs, RBI dividends, and all will sort of align with that 10% growth. And that's what I'm assuming at this point of time.
Okay. Sorry, please finish.
But since you have me here on this point, I also want to make a very differentiated point, which is that I think there's going to be a change in focus between 2025 and 2026. 2025, in terms of growth, was all about the informal sector rising back on its feet. We saw rural demand rise. We saw urban informal sector consuming a lot more. Consumption was the big theme. So informal sector and consumption were the big themes. I think in 2026, it's going to be more about formal sector getting back on its feet and investment picking back up. I think after taking a break for a year, we will be pivoting back from consumption to capex. And I think we will also be pivoting from informal sector growth to formal sector growth. And in a way, I can argue that right now we are in the crossroads of these two different worlds. And that's why growth right now is so confusing to read. At any point, I'm able to give you enough indicators that show growth is slowing and enough indicators to show that growth is rising. And generally, when that happens, it means the economy is in crossroads. And I do think we are in that crossroads. And from that perspective, my sense is that the capex budget will be kept elevated by the government, when we hear from them on February 1st.
So, Pranjul, even if the revised budgetary expenditure for capital expenditure comes off a bit for the current year, you believe that there could be around a 10-12% rise in capex. And part two of my question, is that because the government has done enough on consumption, boosting consumption, income tax cuts, GST cut, etc. Sab ho gaya. Now let's focus back on capex?
I think so. Yeah, I agree with you on that. So we are expecting about 10 to 12% increase in capex. Where will this money go? I think the traditional sectors have been road and railways, but more over time, even urban infrastructure is rising, which is very important. And I also think that capex loans to states is also something that will increase. It's a 5-year-long experiment that the central government has done. Every year it has risen this by a little bit. And I think in FY27 also we will see a big increase in capex loans to states. By the way, this is also important because the GST tax cuts have meant that, some revenue losses happen for states. So in a way, you try to compensate from all of these things. And I think capex loans will be a very important one out there. In terms of consumption, I must say that last year, the GST tax cut and all the income tax cut, it actually cost the government 0.8% of GDP in revenues. I think that's quite a big number. And I don't see a need or space for that to be repeated this year. So yes, I think there's going to be a pivot in the government budget from consumption towards capex.
Okay. And the line on your note says that a slew of reform steps and a neutral fiscal impulse are likely to be the hallmark of the budget. What reform steps are you envisaging?
Yeah. So look, I'm not going to say that there's going to be something new and dramatic that's going to change the face and shape of India overnight. What I do want to say is that I think some important things have been announced over the last year, and a concerted push will be given on all of them. On the domestic front, this whole deregulation drive that's happening in central government, state governments, I think that will pick up space, and I'm going to watch out for that. I think, capex will rise. There will be capex diversification. I think there'll be pruning of schemes. Some of the old centrally sponsored schemes will be done away with to clean up, the act to some extent. So these are some of the domestic reforms. And in some of the external reforms, I think we could see a little more subsidies to small firms and exporters, particularly exporting firms. We could see more openness in FDI. I think there's going to be a very big push in right-sizing customs duty, because right now we have a lot of issues like inverted duty structure or too high import duties that is making cost of production high in India. So right-sizing the whole customs duty regime, I think, is going to be a very important one as well.
Okay. Pranjul, this government has, shown that they mean business when it comes to trade negotiations and deals as well. Leaving US out, some enhanced bonding with the UAE, potential of mother of all trade deals with the EU. We've seen New Zealand happen. We've seen an FTA with Oman happen, and a lot of others too. Do you reckon that will be the central driving force for the next 12 months? That you do trade deals, you open up sectors for FDI across the line, and try and get in investments to kickstart more manufacturing / other activities?
Yes, Neeraj, I agree. I think that's what is happening. The government, in a way, has sort of learned from the past, you can say mistakes in the past, and is trying to align and integrate India more with global trade with the world. And I think here, some of the steps I have liked is some tariff reduction has happened in our own custom duties, and I think more will happen. We've become a little more open to FDI. We are striking trade deals. So I think all of these are good steps. But I would still say that there is one small thing we are still not doing. And that is that we are looking west to sign a lot of trade deals, because the West is the main consumers and the main absorbers of exports. But we also have to look east. We also have to sign FTAs or joint trade blocks with other nations on the east, like ASEAN, because that's where the manufacturing happens. And if we can really integrate with them, then we can become a part of the supply chain that manufactures a lot of goods to then sell it to the West. So we've done the first part. We've signed FTAs with the West, but I'm hoping 2027, 2026, 2027, we also think about right-sizing our relationship with the east part of us, Eastern Asia.
Got it. Okay. Pranjul, so one is the budget and the government actions. Two is how is it that people think about it? And I think while the rating agencies' verdicts have been constructive to benign, there is a fair degree of variance in how global agencies of various sorts think about growth numbers for India. Now, you do this via PMIs on a month-on-month basis as well. You would have predictions for what happens over, let's say, FY27 too. What do you think about the variance in these estimates? Is it a factor of how the world is right now, that it is so unpredictable? And what is your own target for the next 12 months or 15 months, as the case may be?
Yeah, so for growth, look, it's a very uncertain world, right? Every day the tariff rates for different countries are changing. There's new sort of geopolitical risks. Markets are moving wildly between risk aversion and, risk taking. So these are very difficult times to get a forecast done. But I would say that my sense is that when I look at India, I think right now a lot of the growth is coming domestically. We are not doing very well in exports. We may have done a little well in the first half of 2025 because of front loading of exports, but I don't think we did as well as many other ASEAN countries I follow, like, for example, Vietnam and Malaysia. So we haven't been a very external sector-driven growth. We've been more domestic-driven growth. What has helped us in the last 12 months is all these tax cuts, RBI easing, and then a lot of exogenous factors. The fact that oil prices suddenly went down, the fact that rains were very good. So all of that has helped our growth, but mostly domestic. My sense is that in the next 12 months, many of the things that helped us in the last 12 months are going to fade in importance, like rain, like oil prices. In a year-on-year basis, oil can't fall dramatically more or as much as it had fallen in the last year. And therefore, we'll have to look for new ways to grow. One new way to grow is that there are tailwinds coming from all the policy easing we saw last year. Like we saw the RBI cut a lot of rates, give some liquidity here and there. Credit growth has now started to pick up, and the hope is that it continues to pick up over the next year. So the tailwinds of the policy easing that has already happened may help us grow over the next 12 months. But we are at an interesting crossroads, as in it is possible that some of the green shoots that we are seeing in credit growth or some private capex in a few sectors, they fizzle off, or they gather strength and then they keep going. And that is the level of uncertainty that I have, in my forecasts. And with that, I would say for me, real GDP growth will be somewhere between 6.5% to 7%. 6.5%, if we are not able to really, move on to this whole credit growth and capex story, and about 7% if we are able to move to this new world.
Got it. Okay, Pranjul, as we wrap up, I'm going to ask you to do the impossible, and which is try and give us some sense of how can one predict anything in a Trump era with all the uncertainty that comes in. Now, it's a difficult question. You might not have firm views on any of these. But I'm just trying to understand, as somebody is looking at India and India growth and how it may get impacted due to various moves that happen, how do you, when you're writing a report, think of the uncertainties that come in by every decision by a decision that could come in almost every second day? And point two, it now no longer seems to be a tariff event against India because India has not signed the trade deal. I mean, it's happening against EU, it's happening as a clutch of other countries as well.
Yeah, I think what helps me keep my focus on my forecast is macro stability. I think it's very important to be in the position we're in which our inflation is fairly low, our current account deficit is also sustainable, broadly speaking, and we have fiscal deficit that is coming down every single year. And I think that creates some sort of confidence in the economy. Now, look, there are questions on growth. There's a question on timing. There are some times when other themes are interesting, like, for example, AI theme, and a lot of equity money is going there and not coming to domestic economy themes like India. But eventually, what sees you across cycles is, a strong sort of macroeconomic backbone, which I think we have at this point, and I think that is to our strength. And I'll make one final point, a little geared towards bond market. We've been so worried, every single day we are seeing the bond yields rise a little bit, despite the RBI trying to help out with OMO purchases. We worry a lot about things, but sometimes things can change a lot. And I just want to leave you with this thing on states. We are so worried about state funding and state fiscal deficit rising and creating very large borrowing. But if you look at the numbers, you'll see that the state fiscal deficit has already reached its maximum number of about 2.9 to 3%. States are not allowed to borrow more from these levels. So at this point of time, states can't really splurge from here. And I think that is going to be news for the bond market in a couple of months down the line that will bring in some comfort that state borrowing may not rise as dramatically as they have been in the last couple of years. So once you're doing the hard work, bringing down fiscal deficit, keeping inflation low, some of these positive surprises will spring up as time passes.
Pranjul, sorry, I'm inclined to ask this to you because you brought this up, and thank you for bringing it up, because a lot of market participants are flummoxed that why is it that with the RBI cutting the way it is cutting, etc., yields are so elevated. You reckon a part of it had to do with the state finances, but that incremental negative surprise is out of the way. If anything, there could be a positive surprise. Is that what you're saying?
Look, I think the bond market has been in stress because it's a demand-supply mismatch. There's been too much supply of bonds, particularly from states who have been raising their fiscal deficit quite dramatically. And then there have been some demand issues as well. In the last 12 months, pension funds have been putting a larger amount of their money into equities than into bonds, simply because regulation has changed and they're now allowed to put a lot more money in equities. So I think all of these and some other factors all came together and created a problem. But my sense is that going ahead, because people are now expecting the worst in terms of supply, I want to just say that with central government bringing down its fiscal deficit and state governments actually having been in maximum fiscal deficit, the room to grow supply will not be that much. It will be a little limited, which is good, right? And in terms of demand, my sense is that pension funds have done a one-time adjustment, and their move to bond market may actually start again from, say, about April onwards. So I think about April onwards, the bond market will look a lot better than it's looking right now.
So cool to know this. Pranjul, thank you so much for all the wisdom and the nuggets. Really appreciate your time, and have a good budget. I look forward to talking to you post the budget is done.
Yes, absolutely. Good luck to you too.
Thank you. And viewers, thanks for tuning into this very special conversation. It was lovely talking to Pranjul Bhandari. I hope you got some idea about what the budget and the next few months or next few weeks could look like.
Budget 2026, the growth agenda. This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices. It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
Hello and welcome. You're watching Ask Profit on NDTV Profit. My name is Puneet Zaveri. With me is Mahima Vachajani, and over the next hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that's flashing on the top of your screen. You can also call us, speak to us directly on your stock-related queries. The second number, the calling number, is also flashing on the top of your screen as well. Now, as we come to you, of course, we've been getting you, the exclusive coverage with the unfortunate passing of Maharashtra Minister. And Ajit Pawar, of course, he was the former deputy chief minister, is the current deputy chief minister of Maharashtra as well, and a very unfortunate incident. Prayers go to the family and friends involved as well. But as we go across, and we will get you all the key live updates, we put it on the right hand side of the screen as well, but get you some more commentary as you go across through the day as well. But let's quickly look at how the markets are doing before we take all your stock-related queries today. We've seen that, over the last couple of days, it's been a positive start to the Nifty. We've sold off from the highs a little bit, but continuing to maintain 25,200 as a key mark on the benchmark. And at this point of time, with all the host of earnings that we're expecting in the next 2 to 3 days, it's going to be a very key one. Let's also look at the heat map for the Nifty 50, give you that perspective, because yet again, Asian Paints was one of the key stocks. And yesterday in Ask Profit, the afternoon edition, we spoke about the earnings. Has been consistently down and was in pressure yesterday as well. Today, continuing that momentum, down almost 5.3%. What's also interesting is Tata Consumer started almost 2% down, now down almost 5% in the trading session, and so is Eicher Motors under pressure. Maruti Suzuki, a big earnings for today will come during market hours. Maybe the India-EU FTA wasn't that too much of an impact on the stock, but maybe the South African tariff increasing on imports will be something that's the street is not liking one bit about the counter. On the gainers, ONGC, Oil India, Hindalco, BEL as well as Axis Bank are in focus. BEL of course will also report earnings today, so will continue to be in focus. But when you look at the advanced decline ratio, before I pass it on to Mahima, for the broader markets, it's been a crisscross pattern that we've seen over the last couple of weeks. Today, a very clear indication of almost 1,800 stocks that are advancing in trade today. But Mahima, in terms of the broader markets, what are you picking up?
Right, so I think that chart is reflective of how the broader markets are doing today. Finally, some green is what we are seeing on both the mid cap as well as the small cap 250. The mid cap 150 is up 0.4%. The small cap 250 even doing better, up by about 0.7%. Quickly, if we can pull up the sectoral heat map and then the BSE 500 to see as to how things are looking like there. You have your oil and gas topping the chart, followed by energy as well as metals. Still, the rally in metals continues. Media today in the green, up 1%. But on the flip side, FMCG largely dragged down by two names, that is Asian Paints and Tata Consumer. Nifty Auto down by about 1% as well. So consumption as a pack is not doing very well. Pharma as well as PSU Bank also under pressure. BSE 500 quickly before I move on to our guest for the day. Very specific names. Hindustan Copper still continues with its rally, up 8%. You have MRPL, Motilal Oswal as well as Sterlite and Tejas, some counters in the green. But on the flip side, you have Westlife Foodworld, which is tanking, and how 7% in trade today. Nifty 50 name again reflecting in that chart. Asian Paints down 5.3%. Tata Consumer. Home First Finance is seeing some profit booking today. Eicher Motors as well as Rosary Biotech both down by about 3% each. But with that, let's also welcome in our guests for the day. We're joined by Nilesh Jain, the head AVP Technical and Derivative Research at Centrum Broking, joining us now. And shortly, we'll also be joined by Rajesh Agrawal, head of research at AUM Capital. Nilesh, I'll take up the first question, which is on Premier Energies, and this is from Puneet Saxena, who's writing us from Ghaziabad. He's holding around 200 odd shares of Premier Energies at the levels of 745. Wants to know if he can hold, exit, or add more for the next 3 odd months. Is there, and of course, he also wants to know the stop loss and the maximum returns that he can expect on the charts.
Morning, Mahima. Morning, everyone. So overall, Premier Energy, if you pull up last 6-month chart, you can clearly see the stock is in a downtrend. We have seen a fresh breakdown as well from the levels of 755. So overall, kind of a sell-on-rise structure as of now. So if you get any pullback towards 750, the high possibility of another round of selling might come in this particular counter. So overall, if somebody has already bought into this particular stock, then keep a strict stop loss now, which is coming around 688. So 688 should be the stop loss, and if it breaks below that, then the high possibility that it will slip further towards 660 to 650 as well. And if at all you get any pullback towards 750, use that pullback to exit from the longs.
Got that view, Nilesh, and welcome to the show. The next question that's coming in is on a recent listing, Okla India, and our viewer actually has bought it at 730 rupees per share, very close to the IPO price. He bought roughly 20 shares. And he's currently sitting on a loss since the counter is trading at 572. A counter that's been consistently under pressure since listing. But Nilesh, I know a limited time frame in terms of history since listing, but anything on the charts specifically that you can tell about Okla India, what would you recommend?
Well, I have a very limited data because the stock got listed in November month, and after the listing, we have seen a continuous decline. Counters forming a lower top and lower bottom formation. So looking at the structure, looks like we may see another leg on the lower side towards 560 to 540 as well. So it's an avoid taking any contract at current level. If somebody has already bought into this stock, then keep a stop loss at 560 and use the pullback to exit if bought it purely from a short-term perspective.
So that's the view coming in on Okla, India. The next question that we have is from Suman, who's writing us from Kolkata, asking about Zaggle Prepaid. She's got 30 odd shares at a price of 309, wants to know if she can buy more. And is this a good company to continue to hold from a long-term perspective? Rajesh, a very good morning to you. I'll come to you on this one. Your view on Zaggle.
Good morning, Mahima. Good morning, everybody. I don't think Zaggle is the kind of stock which one should hold for a long-term portfolio. At best, it's like a swing trade. Whenever there is some amount of momentum, one can enter and exit. At this point of time, I think one should wait for any upticks to exit at around 290, 295 odd rupees. At this point of time, it's a hold.
Got the view, Rajesh, and of course, welcome to the show as well. The next question that's coming in is on CSC. Now, Gautam, who's a regular viewer, dials in from USA. Thanks so much for that, Gautam, and sending across your query. He's sitting at a profit of almost 1 lakh rupees on his investment in CSC. He's bought it at 130, stocks trading at 142. He's asking if he should continue to hold or switch out and buy PFC at this point. Rajesh, coming back to you, what would you recommend?
See, depending on your time horizon and risk appetite, I think one can continue with CSC. That company is doing very well. It's one of the major power distribution company. The power distribution company of Calcutta and some parts of Rajasthan like Bharatpur and all. Power demand is going up. The company has been doing well. And if you compare with peer group companies, the valuations are very reasonable at this point of time. One can even add to CSC. Even PFC is a good buy for a long term the kind of scenario which we are witnessing into. Power gives a lot of hope. So companies like PFC, REC, they give out good dividends. They are on a good valuation. So both are a buy from our side. So if you are having CSC, continue to hold. If you want to put extra fund, then you can buy PFC.
Rajesh, but the first caller for today, and this is Krishna dialing in from Bengaluru. Krishna, very good morning. Welcome to Ask Profit. What's your query?
Hi, very good morning. My query is, see, I had purchased around 225 of Tata Motors share at the price of average price of 525.
Okay.
So currently it is somewhere around 340.
And this is sorry to interrupt, Krishna, but this is Tata Motors PV or Tata Motors Limited?
PV. Yeah.
Passenger vehicle.
When I had purchased, it was just a Tata Motors, but after demerger,
okay, of course. And are you also holding the CV business right now?
CV, it was auto moved 99 shares to CV, but 225, 99 plus another somewhere around 124 I had purchased. So total 225 I am holding in PV.
Okay.
CV, it is going good. CV,
okay.
I have 99 shares, that is going good.
Got it.
But in PV, passenger vehicles, I have 225 shares, average price 525. Currently lost somewhere around minus 41,000. So my question is, should I hold or what should I do? That's what my question is.
Got it, Krishna. But Rajesh, coming back to you, because after the split, a lot of people have gotten both the shares of the companies. Tata Motors PV, he's holding at 525. What would you recommend him to do for the passenger vehicle business? He's quite happy with the CV one right now.
CV as it is doing very good, and we think the numbers that have been put out on monthly sales numbers are also very exciting. As far as PV is concerned, I think at these levels, at 320, 330 odd levels, one can continue to hold. If it falls to around 310, 300 odd levels, one can even add. The numbers have been very disappointing last time because of the JLR numbers coming down because of various reasons. But going forward at these valuations, I think all the negatives have been discounted. Even the EV business, which have been stagnant for some times now, it's started seeing some positive numbers. So maybe a target of 400 odd rupees in the next 12 months is quite possible. At this point in time, it's a hold.
So that's the view coming in on Tata Motors passenger vehicles. The next question that we have is from Siddharth Chaturvedi, who's writing us from Jaipur and asking about a lot of these textile exporters, that is Pearl Global, Gokul Das as well as Arvind. He's saying that are these good counters to remain invested or maybe buy at the current levels, considering the India-EU trade deal that has just happened yesterday? Rajesh, there are two angles to this. Of course, one is the India-EU trade deal, but there's still, an overhang with regards to where the US-India trade deal stands. So, would you be a buyer of these counters right now?
I think depend on the basis of the news yesterday, it has already run up. All these stocks have run up quite a lot. It's better to wait for some more time to consolidate and things to clarify. And yes, you said it right. US trade deal is also hanging from so long period of time. So you never know. So it's better to not to rush and buy at this point of time. Somebody holding can continue to hold. Out of these three counters which have been said, I think Arvind is a better one for a long-term holding.
Got the view, Rajesh. But the next question that's coming in is from Ajay from Bengaluru, and he's asking that any view that we can give him on Oberoi Realty as well as Havells post the quarterly results. Now Havells, of course, got their hammering, and I think so did Oberoi Realty in that aspect. But Nilesh, on the charts for either of those counters, any view?
See, both the stocks are moving in a lower term and lower term trajectory. So overall, as far as realty space is concerned, we have seen a sharp decline recently. Oberoi Realty has also corrected. In fact, if you see in the January series so far, it has corrected close to 10%. So there could be possibility of some bit of a pullback, but the overall trend looks slightly on a weaker side. The stock is trading well below its all long-term, short-term moving averages. So avoid taking any contraband at present. If already bought it, then keep a strict stop loss at 1445. And below that, it may slip further towards 1400 as well. Now, coming to Havells, it has a almost similar structure. It is on the verge of a breakdown as well. So it's again avoid taking any contraband at current level. And if bought it, that keep a strict stop loss at 1250, and a sell on rise kind of strategy should be deployed.
Okay, so that's the view coming in on Oberoi Realty. The next question that we have is on Interact Building Products, and this is from Bharat. He's got 450 odd shares at an average price of 1940. He wants to know if he can hold this counter for a year or so. Rajesh, any view on this one?
It's better to exit. I think it's a very small cap company doing, the numbers have been very small. And any adverse situation can be a problem for that. The numbers also not that good. So at 1956 odd rupees, I think all the positive that has been there has already been discounted. So a better price to re-enter would be around 1700, 1750. At this time, it's a book profit.
Got the view, Rajesh. Rajesh, coming back to you on the next query as well, it's an interesting one from Kokila because she wants to invest 50,000 rupees in M&M or Hyundai. The question largely because, while the FTA might have had some impact on M&M yesterday, Rajesh, the news flow today largely on South Africa putting tariffs on China as well as Indian imports and to almost 50% from 25 earlier. This could have an impact on like Maruti as well as M&M, right? What would you recommend right now, Rajesh? Because South Africa is a key geography for Mahindra and Mahindra's exports. Any view that you can offer?
I think yes, depending on the news at this point of time and the kind of correction which the stock witnessed yesterday, I think it's at a very lovely level to buy for a long-term horizon, of course, maybe with a time horizon of 12 to 18 months. And not only their passenger vehicle business, their even tractor business is doing well domestically, and with international, I think at these levels one can buy.
All right, okay, so that's the view coming in on M&M. But viewers, time to take a look at the F&O space, and we have Sharad joining by as always to give us a perspective on what the cues are looking like. Sharad, over to you.
Well, the cues are very positive today, and after bouncing off important technical levels, Sensex is showing good signs of up move, and BankX also giving a good strong support. Amongst the gainers, we have BAL, Axis Bank. Remember, BAL comes out with its earnings also today, and majority of the stocks are in the green. What's not working, that's where the significant cuts is happening, is Asian Paints, Maruti, and also HCL Tech and Titan making it to the list where they are in the red. But looking at the overall contract setup, it's still looking like some better positions are being made on the bull side. Apart from this, the BankX also a strong support coming in across the counter. Yes Bank is up almost 2%, Kotak Mahindra Bank also in the green, and even HDFC Bank is showing a good support. Also, let's look at the stock-specific counter moves, and a strong long build-up is happening, especially on the Brent crude prices. They are going up, and because of that, two beneficiaries are there, good volumes for both Oil India and ONGC. and all the oil and gas segment stocks are buzzing in trade. Short covering for HAL and Bandhan Bank, that has actually intensified over the last 10 to 15 minutes for both the counters. And long unwinding, these are the two stocks, Tata Consumer and Marico. Earnings impact is something which we are seeing on the screen. And last on a short build-up, Asian Paints for the second straight day, we are seeing a big sell-off happening in this counter as well. And Eicher Motors also, as we pointed out, Puneet had mentioned the reason as well. So these are the important stocks which are buzzing in the FNO space.
Okay, Sharad, thank you so much for getting us those details with regards to where the FNO snapshot is concerned. But moving on, the next question that we have is from Murthy, who is writing us from Vizag, asking about IDBI Bank. Wants to know if he can go ahead and buy this counter at the current levels or not. Nilesh, I'll take this up with you. What are your views with regards to where the charts are concerned?
Well, Mahima, we have seen a recent correction in this stock from the levels of 115, 116, all the way it has currently reached to the levels of 98. Now it has very important support of its long-term 200-day moving average that is placed at 93 levels. So keeping 93 as a stop loss, yes, long position can be initiated at current level because there could be possibility of some bit of a pullback move towards 105 to 110 on the upside. So yes, one can go long, but keep a stop loss at 93.
Got the view, Nilesh, but viewers, we have been getting you some the key updates on this particular news flow, which is very, very important, and of Ajit Pawar passing away, and it's a big loss. He's been one of the stalwarts of politics in Maharashtra, and Niranjan Hirandani, the chairman of the Hirandani group, is now joining in. Just to give his perspective. And Mr. Hirandani, very good morning and thank you so much for joining in today. You've been a key part of Mumbai as well as what you've done for the development of the city. But any views that you can offer, because at this point of time, you would have been very close to the development of the real estate of Bombay and Maharashtra as well. Firstly, your views of the unfortunate passing of Mr. Ajit Pawar this morning, and any kind of anecdote that you can share with us as well.
Well, Mr. Ajit Pawar has been a significant player in the politics of Maharashtra, and literally a young Turk, willing to take strong decisions, willing to take strong views, and great administrative and financial capability of the man has actually served him for the longest time. I think almost 7-8 years as finance minister for Maharashtra. Also the fact that he was a lot of economic activity like irrigation and others were part of his portfolio. On a personal level, very quick decision-making person, very quick. As soon as something would come to his mind on an end of a discussion, and he would pick up the phone and directly talk to the officers concerned or the people concerned and give decisions instantly. I think that capability is with very few people, having a broad view and an intense capability of taking early decisions. Also the fact that as a leader of his party, I think there will be a big setback at this point of time in his party because there are not so many big players in his party who carry such a statewide or national brand and name. And so I think there will be a very big setback as far as his party politics is concerned within the MNS. And also the third is that we will have lost a man which has set an example of great discipline in his work in the financial side of the state exchequer. As you know, there are a lot of pressures today in terms of the financing situation of the state of Maharashtra, especially in view of the social policies which had been issued about Ladki Behan, etc. But he was able to manage the budget tremendously well and be able to say no and yes instantly. I think a great capability of a good man with extremely fantastic administrative experience and quick decisions, very fast. I mean, very few people would take strong, fast decisions instantly. Mr. Ajit Pawar was one such man.
All right, Mr. Hiranandani, thank you so much first for, of course, for taking your time. Everybody, right now is trying to understand as to, what this actually means for the Maharashtra government in terms of the loss that has occurred. And, earlier we were just discussing as to how life has actually become so uncertain, right? Recently we saw the Air India crash where we lost Vijay Rupani as well. And, these leaders have done, so much for their state, to say the least, right? So just want to understand as to what does this mean for Maharashtra as a state?
Obviously, instantly a setback until we find people of his capability and capacity who would rise to the occasion to fill such a gap. But at this point of time, obviously, a setback to a great political leader, a great administrative experience. I mean, very difficult to get, you either get good politicians or good administrative people. He's one of those few people who had both the capabilities. That's not easy to get. You can get great politicians and you can get people with great administrative and financial capabilities. He was one of the few persons who had both. So fitting in the bill, difficult for anybody to take that view. And second, he has had so many years of experience. He got elected as early as 1991 to the Maharashtra Legislative Assembly. And of course, in the Pune-Baramati belt, he made his niche happen. But he was a state leader of great eminence and great capability. So I think we're going to miss a very good and capable person in our state.
All right. We're also joined by Manan Shah, who's the Managing Director at MICL Groups, of course, joining us now. Mr. Shah, thank you so much for joining us on the short notice. We were just discussing with Mr. Hiranandani about the great loss that we've heard today morning. Just wanted your views on how, how this is a big loss to the nation as well as to the state.
Good morning. So see, in fact, as the Deputy CM, he also managed, finance, excise, and multiple other ministries. And these portfolios have always been, critical in how the state functions. And because of that, it directly even shapes Maharashtra's budget, in fact, development priorities, and even, like the revenue framework. And in fact, through his finance and planning, he always played a vital role in allocating resources for, infrastructure, public welfare, and to some extent even long-term growth. His responsibilities in these departments have always made him, I believe, and rest of the guys will also agree to, that he's one of the most influential decision makers in the government today, and with a significant impact on the state's economic decision and governance. This will definitely be a big loss to Maharashtra.
Got that, Mr. Shah. But, let me go across to Mr. Hiranandani as well. Okay, so let me go across. Manan, very good morning and thanks so much for joining in today. Before, one quick view that you can also offer us in terms of your, if you had firstly a chance to meet him, with you or with your dad as well, and any kind of interaction that you had with Mr. Pawar?
I have not got personally the chance to meet him one-on-one, though, but would have loved to, if in case it would have been possible.
One final thought before we let you go as well, in terms of, what you actually feel that this is, of course, a very big loss to the state of Maharashtra because of the contribution of Ajit Pawar to the state of Maharashtra as well. In terms of the sectors that you are also present in, infrastructure is very, very a big backbone in terms of the contribution to any particular state. Anything that you can offer on that aspect as well of what you think in terms of your conversations, in terms of with leadership amongst others, that you think could be one of the key aspects to watch out for?
See, whether one agrees with him politically or not, Maharashtra would undeniably lose a leader of immense experience. His administrative strength was great, and his deep understanding of state's development needs was crucial, especially connecting the rural and urban developments, the infrastructure stories which have been in his political career. And, of course, his absence would leave a significant void in the government and, of course, in the public life as well, I feel.
All right, Mr. Shah, thank you so much for taking out the time at such short notice, and of course, giving us all those views, and of course, thoughts and prayers to his family as well. But viewers, time to step into a very, very short break. We'll be right back answering all your queries on the other side, so do stay tuned.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop? So I get
Welcome back to Ask Profit. We of course still have Rajesh Agarwal, Kunal Rambia, fund manager and trading strategist at the street, is also now joining in. Kunal, very good morning and welcome to the show. Let me go across and take the first query. It's on Sundaram Fasteners, and Karthikeyan is actually holding 3,300 shares of the company, and it is a considerable part of his portfolio, is what he's mentioned. He's not mentioned his buying price, but he's asking if he should sell now or hold on for some more time. Rajesh, what would you recommend for Sundaram Fasteners? Because the growth largely has been kind of disappointing over the last few quarters. Any views that you can offer him?
See, I think there's no doubt on the fact that the growth has slowed down in the last few quarters, but the fact remains it's a very strong company belonging to a very strong group. Balance sheet is very strong. It's just a matter of time when things start improving. So if it's a long-term portfolio and you're not in need of funds at this point of time, I think one should continue to hold.
Okay, so that's the view coming on Sundaram Fasteners. The next question that we have is from Usha, who's writing us from Bengaluru, asking about 3M India. She's got 10 shares at the price of 33,315. Wants to know if she can shift to something like a Bosch Limited, comparatively also cheaper in terms of where this MNC stands. Rajesh, I'll stick with you for this one. Your view?
Both are very good company. Both are debt-free, balance sheet, doing very well. For different genre, 3M India, Scotch Brite, and all those products are doing very well, I would say. In fact, it's something. Both these companies are something which should be there in the month's long-term portfolio. It's no point switching from one to other. If you have extra funds, you can buy Bosch, but for 3M India, one can continue to hold.
The next question is coming in from Amrut, and he's from Kushalnagar. He's asking a question on IRCTC, looking to buy into this counter since it has seen correction. Kunal, what would you recommend for IRCTC? Is it a good time to buy?
See, overall, this counter has not done much. In fact, from September 21, this counter has held on to the bottom of around 580 levels. Recently, it's trading at 610. And after correcting from 1100, it's now come down to those 610 levels. If this counter consolidates near this level, I think it can offer good opportunity to enter. But as of now, it's a wait and watch. Wait for some kind of consolidation. And if at all the counter reverses from here, with the stop of 585, 590, one can certainly initiate a buy.
All right, okay, so that's the view coming in on IRCTC, and we also have visuals of President Draupadi Murmu's address at the Parliament. You can see that on your screen right now, and this is just ahead of the union budget is what we are seeing. She's going to soon address the session as well. We'll wait to hear as to what she has to say just before the union budget kicks in on 1st of February. But moving on to the next question, which is on Anant Raj. Jayaraman from Mysore is asking this question. He's got 200 odd shares bought at the levels of 598. Wants to know if he can continue to hold this for the next 6 months or maybe let's say for a year as well. Kunal, your view on the charts for Anant Raj?
See, broadly, again, sideways consolidating counters, and in the recent correction, almost all the counters have come down significantly, right? And so this counter is also down. The strong support on this chart is right now at around 440 levels. Counter is trading at 485. As of now, it's clearly downward trending. If the counter manages to hold this 440 levels, 445 levels, then I think one can initiate a buy. But as of now, it looks like a falling knife. So let's wait for the counter to consolidate before initiating a fresh entry.
Kunal, one more question for you is on Vari Renewables, and our viewer actually is holding this particular counter for a short-term view. Bought at 1121 rupees per share. So he is currently sitting on a loss, and he's holding 150 shares. Any recovery that you've seen in the short term, Kunal, is what his question is.
See, Vari Renewables has seen the correction of around 35-40% from its high of around 1350. It has now reached the previous bottom itself, where after the listing.
Kunal, sorry, we just have President Draupadi Murmu speaking, so we'll have to cut across to that. She's addressing the Parliament ahead of the Union budget. Listen in.
150 वर्षों होने पर पूरे देश में समारोह आयोजित हो रहा है। सभी देशवासी इस महान प्रेरणा के लिए ऋषि बंकिम चंद्र चट्टोपाध्याय जी को नमन कर रहे हैं। मैं आप सभी संसद सदस्यों को बधाई देती हूं कि इस पूर्ण अवसर पर संसद में विशेष चर्चा का आयोजन किया गया है। माननीय सदस्यगण, इसी दौरान देशवासियों ने श्री गुरु तेग बहादुर जी का 350 शहीद दिवस पर्व पूरी श्रद्धा के साथ मनाया। भगवान बिरसा मुंडा के 150 जन्म जयंती वर्ष के दौरान देश ने उन्हें श्रद्धांजलि दी और आदिवासी समाज के योगदान को याद किया। सरदार पटेल की 150वीं जन्म जयंती से जुड़े आयोजन ने एक भारत श्रेष्ठ भारत के भाव को मजबूत दी। सभी देशवासी इस बात के भी साक्षी बने कि कैसे भारत रत्न भूपेन हजारिका की जन्म शताब्दी के समारोह सूर और देश का एकता के भाव से भर दिया गया है। जब देशवासी अतीत के ऐसे महान पड़ावों और अपने पूर्वजों के महान योगदान को याद करते हैं तो नई पीढ़ी के प्रेरणा मिलती है। ये प्रेरणा विकसित भारत के और हमारी यात्रा के ओर गति देती है। माननीय सदस्यगण, वर्ष 2026 के साथ ही हमारे देश इस सदी के दूसरी पड़ाव पर पहुंच गया है। भारत के लिए सदी के पहले 25 वर्षों का समापन अनेक सफलताओं, गौरवशाली उपलब्धियों और असाधारण अनुभवों के साथ हुआ है। बीते 10-11 वर्षों में भारत ने हर क्षेत्र में अपनी नींव मजबूत की है। ये वर्ष 2047 तक विकसित भारत की तेज यात्रा का बहुत बड़ा आधार है। माननीय सदस्यगण, बाबा साहेब अम्बेडकर ने हमेशा समानता और सामाजिक न्याय पर जोर दिया है। हमारे संविधान भी हमें यही प्रेरणा देता है। सच्चा सामाजिक न्याय यानी देश के हर नागरिक को उसका पूरा हक मिले, बिना किसी भेदभाव से मिले। मेरी सरकार सच्ची सामाजिक न्याय के लिए समर्पित है। इसी का नतीजा है कि पिछले एक दशक में 25 करोड़ देशवासी गरीबी को हराकर गरीबी से बाहर निकल गए। सरकार के तीसरे कार्यकाल में गरीबों को सशक्त करने के लिए अभियान और तेजी से आगे बढ़ा है। पिछले एक दशक में गरीबों के 4 करोड़ पक्के घर बने। बीते एक वर्ष में 32 लाख नए घर गरीबों को मिले। जल जीवन मिशन के 5 वर्षों में 12.5 करोड़ नए परिवारों तक पाइप से पानी पहुंचाया गया है। बीते एक वर्ष में करीब 1 करोड़ नए परिवार तक नल से जल की सुविधा पहुंची। उज्ज्वला योजना के माध्यम से अब तक 10 करोड़ से ज्यादा परिवारों को एलपीजी कनेक्शंस मिले हैं और पिछले वर्ष भी ये अभियान तेजी से आगे बढ़ रहा है। मेरी सरकार पारदर्शी और ईमानदार व्यवस्थाओं को स्थायी बना रही है। इसी एक वर्ष में सरकार ने 7.25 लाख करोड़ रुपया से अधिक लाभ डीबीटी के माध्यम से सीधे लाभार्थियों को पहुंचाया। माननीय सदस्यगण, मेरी सरकार दलितों, पिछड़ों, वंचितों, जनजातीय समाज सभी के लिए पूरी संवेदनशीलता से काम कर रही है। सबका साथ सबका विकास का विजन देश के हर नागरिक के जीवन में सकारात्मक प्रभाव ला रहा है। वर्ष 2014 की शुरुआत में सिर्फ 25 करोड़ नागरिकों तक की सोशल सिक्योरिटी की योजनाएं पहुंच पाती थी। सरकार के प्रयासों में निरंतरता की वजह से आज करीब 95 करोड़ भारतीयों को सोशल सिक्योरिटी का कवच मिला है। गरीब मरीजों के लिए प्रारंभ की गई आयुष्मान भारत योजना से बीते वर्ष तक देश भर के अस्पतालों में 11 करोड़ से अधिक मुफ्त इलाज किए जा चुके हैं। इस योजना के तहत बीते वर्ष 2.5 करोड़ गरीबों के मुफ्त इलाज मिला है। बीते लगभग 1.5 वर्ष में करीब 1 करोड़ बुजुर्गों को वय वंदना कार्ड जारी किए गए हैं।
All right, so that was Draupadi Murmu addressing the Parliament session ahead of the budget, saying that government has taken steps with regards to, of course, the nation is moving towards the Viksit Bharat aim, and the government has taken steps accordingly. But viewers, it's time to slip into a very, very short break. We'll be right back answering all your queries on the other side. Do stay tuned.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network. This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening.
Welcome back to Ask Profit. Kunal, apologies for cutting you there, but you were giving your view on Wari Renewable, bought at 1121, 150 shares. What would you recommend?
So now on this counter, actually this counter has come down by 35-40% from its highs, and now it has reached the levels where post IPO the counter started its debut, right? So this 860, 870 levels seems to be the strong support. Counter is making good bottom formation on the intraday charts also. So with the stop of I think around 880, one can certainly initiate a buy. If our viewer has already bought, I think this is a level to average out, and if there is a bounce near 975, 980, one can exit the newly initiated trade, hold on to the old trade.
Okay, all right. The next one is also for you, Kunal, and this is on APL Apollo Tubes. The viewer Neha from Bengaluru has bought at the levels of 15-17. She wants to know if she can continue to hold this for the next 1 to 3 months, and please suggest the strategy as well as the targets for this particular counter. What's the view like, Kunal?
Interestingly, this counter is an absolute positive trend since August 25 so far. It's clearly making higher top, higher bottom form. Something which I like about these counters is that they are trending in nature, and so unless the previous bottom is broken, one can certainly continue to hold this. As of now, it's at 2085. The stop loss is 1950. If the counter slips below 1950, please revisit our channel and ask someone who is available. But otherwise, keep trailing the stop loss. This counter can surprise on the upside with its huge volumes on the recent times. I think 2250 to 2300 is very likely in the time to come.
Got the view, Kunal. But the next one is on Kaveri Seeds. And this question is from Solochana from Vishakhapatnam. She's holding shares at roughly 1190 rupees per share. So currently sitting at a loss and holding 500 shares. Rajesh, the last 1 year hasn't been that great for the company, almost flattish move, but even on a 5-year basis, it's underperformed the Nifty. Any view that you can offer on Kaveri Seeds of what Solochana should do?
Yes, no doubt it's a slow mover. It has been underperforming the Nifty since a long period of time. The numbers have been decent, I would say, and with the government's focus on rural infrastructure, rural development, and the monsoons being very good this time, I think it can touch 950, 960 odd rupees in the next 1 year. So yes, that would be still far below the gentleman's purchase price, but 950, 960 odd rupees in the next 1 year is our target. So one can continue to hold.
All right, so that's the view coming on Kaveri Seeds. The next question that we have is on Tata Power. Sunitha from Hyderabad wants to know if she can continue to hold the counter. She wants the short-term targets on this one. Her buying level is 345. Kunal, what would you recommend?
See, again, on the last entire 1.5 year chart, the support was at 350. In fact, recent bottom was at around 342 made by the counter yesterday itself, and it has bounced sharply from that level. So unless this level is broken, yeah, this is a level to watch out from the buying point of view. So initiate a buy at this level. Stop is 340, and the first immediate target can be 375 to 380. Again, once that level is achieved, rather than exiting, I would advise to trail the stop loss and hold. If this bottom is held really well, we can see the levels of 425, 430 in the next 3 to 4 months.
Concor is the next counter, and questions coming thick and fast at this point of time. So let me take one with Rajesh again. Our viewer, actually, Karan, is holding at 713, so sitting at a loss. But he wants to hold for the next 5 years, Rajesh. Should he continue to do so?
Add if your funds allow, add. Strong company, one of the largest in the logistic business, doing very well with a kind of new rental agreements and all, lease agreements. I think all the negatives have been discounted. Now it's a time to add discount. So it's a buy from our side.
Okay, buy on Concor is the view that Rajesh has. The next question that we have is from Chandra, who is writing us all the way from Germany. So thank you so much for that, Chandra. She wants to know a long-term view on Supriya Life Science. Is there any news flow due to which the stock is down today is what she's asking? Not really. If you can try to pull up the counter and see as to what it's doing today. Rajesh, I'll come to you on this one. The stock is down around 2.8% as we speak. Your long-term view on this particular counter? Rajesh, I think you're on mute. Okay, I think there's a network issue that we're facing with Rajesh. But Kunal, your view on the charts for something like a Supriya Life Sciences from a slightly long-term perspective?
See, this counter has been absolutely trending counter, but since November 24 so far, this counter has entered the sideways consolidation. The support is at around 630 and the resistance is placed near to 800 levels. Once it reaches near that support, I think one can definitely buy even from short-term point of view. As far as the long-term view is concerned, this counter is sideways consolidating with positive bias. So with the stop of 620, one can certainly hold on to it.
Well, it is budget season, and so are some of our queries also related to that theme. The next one's Texmaco Rail. And a viewer, actually Sanjay from Bengaluru, is asking if it's a good counter to enter from just before the budget. Kunal, I know definitely a very short-term target is what he's asking, but Your short-term view on Texmaco Rail and what he should do?
Texmaco, I would suggest the similar company, the company in the similar industry, and that's Rail Vikas Nigam, because that counter is showing some kind of good bottom formation and good volume activities are also happening on the chart. So with the stop of 310, we have also initiated a buy on this. The target is 395 to 400. Again, it's a very short-term view. If the counter breaks 310, take an exit. But this is a counter which we are trading for the budget and even for the time to come.
Okay, all right. So that's the view coming in on these railway counters. But moving on, we've got our next caller. Kiran is calling us from Hyderabad. Kiran, hi. A very good morning to you. I believe you have a question on Lodha.
Yes, ma'am. I have 100 shares of Lodha at 1,032 rupees, ma'am.
Okay.
So today they are declaring their results, and there is a huge order book for Lodha, Godrej Properties and Oberoi Realty. But why there is a panic situation in realty stocks? And what sort of targets could I expect? Or should I add more at lower levels is my query, ma'am.
Okay, got your question, Kiran. I'll take this up with Kunal. Then Kunal, he's not wrong with regards to where the entire pack is concerned, right? We've seen pressure in this entire space, but Lodha specifically, your view on the charts?
See, again, this counter has stumbled from 1500 levels, and yesterday was a panic bottom made somewhere near those 830, 840 levels, and it has recovered sharply from that level. In fact, yesterday the volumes recorded were really good, impressive, but it's not confirming the uptrend yet. So if the counter holds the bottom of around 875 or 880 levels, I think one can take a chance. But again, because we are heading for this result time and there is already been a significant amount of volatility on this, be a little cautious. Rather, I would say trade DLF if you're comfortable, because that's where we have seen good strength getting accumulated with follow-through buying. So switch to DLF rather than Lodha. But if you have a personal interest on it, definitely 880 is a level to watch out as a support.
Got the view, Kunal. But the next question that's coming in is on Ramco Industries, and our viewer Arun from Hyderabad is actually asking a 3 to 5 year view on the stock. He's bought it at 314, very close to his buying price right now as well. But Rajesh, would you recommend that? It's been yet another one of those counters that's been lagging the street performance. Your view?
So despite a very good balance sheet, very good operations, the company has been lagging on the street. But I think for a long-term horizon, the gentleman is having 4 or 5 years horizon. I think it's a good hold. Not only a good hold, by any chance it falls to around 280, 290 odd rupees, that would be a good buying level too. So one can continue to hold. The company is very good. It's just a matter of time when it starts performing.
Spandana Spurti is the next counter. Ambika from Chennai is currently holding 800 shares at the levels of 231. She wants a short-term outlook and view on the charts. Kunal?
Spandana Spurti, overall trend has been sideways consolidating. The strong support is at 240. With that stop loss, one can hold. But the trigger is at, I think, around about 285. So about 285, we can expect the levels of 320, 325. Till then, sideways consolidation is likely, but one can certainly hold on for now.
Got the view, Kunal. The next question that's coming in is on another interesting counter, and that one is IRB. Now, Ramalingam from Chennai is actually holding both IRB and IRIDA, but let me take the question on IRB. Bought 2,000 shares at 68 rupees, so sitting at a loss and asking a short-term view. So, Kunal, for the next 4 months, what would you recommend on this counter?
See, very quickly on this last 1.5 year behavior, support is at 40. Hold with the stop loss of 40. Any weekly closing below 40 is an exit. One can initiate a buy at this level. The immediate targets can be 47 to 49.
Okay, all right. So that's the view coming in on IRB Infra. The next question that we have is on Ambuja Cement. Gaurav from Pune is asking this question. He's bought at the levels of 655 and 121 shares is what he has. Wants to know if he can hold, add or sell. Kunal, your view on the charts?
Strong support at 510, trending with sideways consolidation for now. So with the stop of 510, one can certainly hold on to the position. And if at all our viewer is a trader, derivative trader, then one can create the short straddle with long futures, I think, which can offer good, the opportunity, even if the counter remains sideways.
And viewers, of course, standard disclaimer that the channel that you're watching is part of the Adani Group, and so is Ambuja Cement as well. But the next counter that we're focusing on is Acme Solar. Now, our viewer actually, his Muralidharan from Pondicherry is holding shares at 250 rupees per share. 150 shares is what he holds. and asking he should add up more or wait for an opportunity. So he's looking to add more to his current position. Rajesh, how do you view this space? Because we've seen multiple new listings in the renewable energy space. Your view as, and also on Acme, if it's a good time to add.
See, though renewable energy is a very good space to pay into, but with the kind of new capacities coming in, I think one should wait for some new money to put in because already there are huge capacity built up. So at this point of time, it is a hold. Buying at this point of time won't be recommended. If you somebody wants to buy in energy sector, I think Tata Power or a CESC is a better company.
Right, okay, so hold is the view coming in on Acme Solar. The next question that we have is from Harpreet, who's writing us from Delhi, asking about Vedanta. He's got 1400 shares at the levels of 500, wants to know what should he do with this counter. Rajesh, your view?
You need to hold, wait for the demerger to happen, and at that time, I think huge value unlocking will take place. And at this point of time, even in the combined entity, if you see the whole lot of minerals with that, and company is doing very well, gave out the good dividends too. So it's a holder from our side.
Stocks up 4.4% as we speak, and it's been a good year for all investors, up 73% on Vedanta. But the next question is coming in on Gravita India. Kunal, this question is for you. V. Murli is asking this question, bought 100 shares at 1545 and asking a short-term view. What would you recommend?
Strong support is at 1500, sideways consolidating counter. So with the stop of 1500, one can certainly hold on. But the momentum is missing. I think momentum will pick up only above 1550, and then the targets can be 1750 to 1800. So hold for now.
Hold is the view coming in on Gravita India. The next question that we have is on Hindustan Copper. Sunil from Mumbai is asking this question. I think, Kunal, a lot of people who are invested in Hindustan Copper wants to know this right now as to what are the technicals indicating. He wants to know the short-term target and stop loss that he should put on Hindustan Copper. He's not given his buying price or quantity, but looking at the charts, do you think the momentum is there to stay?
Certainly, yes. Even look at today's volume, the counter is up by 8.5%, and the volumes are really inspiring. So, these trending counters, one should learn to trail the stop loss and hold the position. I don't know what can be the targets on this. We can, randomly put the numbers of 840 to 850 also. But rather than doing that, I think one should trail the stop loss and hold. As of now, the trailing stop loss is at around 575. That's the previous consolidation bottom. Consider that as a good stop loss. If the counter keeps moving up, keep coming to our channel again and keep asking the guest who is available for the trailing stop loss rather than target. These counters are ready for a big surprise on the upside.
This counter is ready for a big surprise on the upside is the view coming in on Hindustan Copper from Kunal. But viewers, time to take a rapid fire round. Kunal and Rajesh, you both know the drill. Try to keep your answers as short as possible. The first question that we have is from Jaya, who is writing us from Bengaluru, asking about Railtel, whether this is the right time to make an entry or not. Kunal, your view?
Certainly, yes. Near to the support itself with the stop of 320, one can buy.
The next one is PCBL, bought at 361 from Somik. Kunal, you are one of our best advertisers now of this show, so I'm going to come back to you. What would you recommend?
Yeah, it's consolidating near the support with the stop of 250. It's a buy.
Okay, Newland Lab is the next one. Prasad from Kolkata wants to know if this is the right time to make that purchase. Rajesh, would you recommend that?
Yeah, one can add.
Narayana Rudrala is the next one, and Kanan is actually asking if it's a good time for a short-term view. Kunal?
It's consolidating near the support itself with the stop of 1725. It's a buy.
Okay, Bank of Maharashtra or IDFC First Bank, where would you recommend a fresh entry? Kunal, your view on the charts?
I'll go ahead with Bank of Maharashtra because it's trending with positive bias with the stop of 64. One can initiate a buy.
Satvik Green, Rajesh, I know it's a recent counter, but any view that you can offer?
It's a wide.
All right, Elecon Engineering is the next one. Kirti from Hyderabad has bought 200 shares at the levels of 566. Wants to know if she can continue to hold or not. Rajesh, your view?
Continue to hold.
Bajaj Finance is the other one. Suresh from Kerala is asking at 920, should he continue to hold, Rajesh?
Add.
Okay, DCB Bank is the next one. Satya from Hyderabad has bought in 2023. He wants to know if he can hold, exit, or what should he do? Kunal, your view on the charts?
Keep trailing the stop loss right now, which is at around 180. So hold with the stop of 180.
GMR is the other counter, and Sumanta is asking if he should continue to hold for the next 2 to 5 years. Rajesh?
Continue to hold.
Okay, Sterlite Tech is the next one. Raghuram from Bhubaneswar is asking whether he can continue to hold this from a long-term perspective. He's got 1,000 shares at the levels of 118. Rajesh, your view?
Try to exit around 110.
Paytm bought at 1348. Rajesh, should she continue to hold?
Try to exit on any upticks.
Okay, Deepak Fertilizer is the next one. Mithun is holding 20 shares at the levels of 1500. Can it bounce back? Kunal, your view on the charts?
Yes, it's looking likely for, it's ready for the bounce.
Force Motors is the other one, a stellar last 1 year. Rajesh, anything to look at before buying right now? What would you recommend?
If it's a long-term horizon, one can buy.
Okay, ONGC is the next one. 270 shares bought at an average price of 246. Hold or book profits currently from a 1 to 2 months perspective. Your view on this, Kunal?
Certainly, Ed. In fact, it's a new breakout today with the target of 285. One can buy.
Polymedical, Rajesh, for the next 4 years, what would you recommend?
Avoid.
Okay, the next one is on Dixon Tech. Narayanan from Guntur wants to know if you can continue to hold the 15 shares that is bought at the levels of 12,800. Rajesh, your view?
Bounces should be taken as an opportunity to exit. Try to exit.
All right. Okay, so that's you coming in on Dixon Tech. With that, viewers, completely out of time on this edition of Ask Profit. Rajesh as well as Kunal, thank you so much for taking out the time and helping us answer all those queries. Viewers, do stay tuned. Know your company up next.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
पापा, फीस ज्यादा है।
बेटा,
याद है बोनस के कुछ पैसे हमने दूसरे खाते में रखे थे?
2 साल से खाते में कोई लेन देन नहीं हुआ है, शायद इनऑपरेटिव हो गया होगा।
तो अब बैंक जाके या वीडियो केवाईसी से केवाईसी अपडेट कराओ, खाता होगा एक्टिव एकदम फ्री। चलो
कहाँ?
एडमिशन कराने, खाता हुआ एक्टिव।
आरबीआई कहता है
जानकार बनिए, सतर्क रहिए।
This is the 4th time. Time for a new card, bro.
But I don't have the money right away.
Why don't you apply for a loan from Bank of Maharashtra through Zen Life?
I will do it now. So simple. Zen Life. Get instant loans with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
रश्मि, ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ। अंकल
इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा, इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
Presenting iSIF by ICICI Prudential Mutual Fund. Launching 2 distinct strategies, iSIF Equity X Top 100 Long Short Fund and iSIF Hybrid Long Short Fund. NFO closes 30th January 2026. Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And today for the KYC show, I'll give you some hints for which company we are going to talk about. Of course, the earnings season is on, so definitely we'll be talking about the earnings as well. But the first hint for the company which will be coming in KYC is that the company is a company which certifies whether diamonds are natural or lab grown. क्या असली है, क्या नकली है? That's what they will be looking at. Interesting. The second hint, let's talk about it, what this company is all about. And the second hint definitely is that it's backed by some large investors. ADIA, Abu Dhabi Investor Authority is there. And also, you see the stock itself, that's also down by almost, you could say, by 27% in the last 6 months. Overall, it's promoted by the Blackstone Group as well. So, larger names, companies into certification of diamonds, can be lab grown or natural, but the stock is down 27% in last 6 months. Okay, so these are the hints, but the company in focus, they say diamonds are women's best friend. This company itself is also a close relative for the diamonds. To put it in a simpler manner for our audience, the company is the International Gemological Institute. The certificate which you get when you buy a diamond, at times you need to check whether it's a lab grown or it's a natural. That's where the certificate comes from, this organization. And almost 77% of holding is from Blackstone Group. So this is the company which we'll talk about. But why are we calling this company in KYC? Why is this relevant? First and foremost, the question is the Q3 numbers. They have been very strong. What was the operational front numbers? We'll decide that, and we'll ask the management, and luckily both the CEO and the CFO would be present. Secondly, the certification volumes. They have been impacted in the industry for the last 2 quarters, and there was a kind of a selling pressure in these counters as well. Has that reversed? That's the question. Third question which we'll be asking is the implications of the India-European trade deal. Remember, Brussels is the capital for your European Union offices, and a huge deal has happened. Does this augur well for the industry? And if yes, will that improve the volumes of certification? That's where we'll be asking, and the guidance and the expansion plans for IGI. That's the important question. But guidance would be coming in for the lab-grown diamonds and the non-diamond business. We want to understand about it. How does this certification process actually work? That's why we are trying to call IGI, and of course the pricing trends, the current pricing trends, be it the diamond prices or the lab-grown diamond prices, where are they standing? Is it upward? Is it downward? Is it flat? That's the question we will be putting across IGI. On the show, we'll have Ishwar Iyer. He's the CFO of the company, and joining him, Mr. Ishwar, would be the company's CEO and MD, Temas Printer as well. So both of these individuals will be coming and answering to all the queries which have been written to by my audience at KYC as well. So this is the entire setup of the show, but I'd like to give you some more perspective about the company, what it is all about. We spoke about it's a certification company, but something more is there. I'll explain it in simpler words. And about the company, they are an independent certification and accreditation services provider. That's something which we like to point about. They are dealing with diamond, gemstone and jewelry. It's just not diamond, there is gemstone also, and this segment is doing well. 65% market share they have in LGD. LGD means lab grown diamond. Also, apart from this, 42% market share in studded jewelry certification, and this is an important data to track. Apart from this, they have around 55 to 90% market share, and they are dominating the industry certification volumes. So if you are wearing a diamond or a lab-grown diamond, and if it is certified, it's mostly coming from this company. The services offered: quality evaluation, grading, educational programs. That's the entire gamut of services which IGI has. About the company, they're having 31 labs, 81 schools, and are present across 10 countries. That's pretty much interesting, and we will ask Ishwar and Tasam about the expansion plans as well. The global presence, they're enabling to capitalize the ongoing transformation which is happening, and that's where the expansion comes in. 10 countries as of now. Promoters of Blackstone, one of the largest PE players in the world, 77% stake. And also there are other large names also which I had spoken about. Government of Singapore has roughly 2% stake, and ADIA, Abu Dhabi Investment Authority, the Monsoon Fund, that's around 1.33% stake as well. So very strong stakeholders and promoter backing, but the concerns are there. And remember, when we are judging this company is following a calendar year format. The fourth quarter, the total certification volumes, That's down 7% on a sequential basis. That's where a little bit of concern definitely comes in. But net, the numbers have been strong. We'll discuss that in our ratings. The average realizations, that has gone up by the price of 11% on a sequential basis. So this is the entire picture I've put for IGI, or as we call it, International Gemological Institute. But now let's show you what the format of the show is, and there are 8 parameters where we will judge the company in KYC. The first one is of course the income statement. I will be adding the Q3 numbers as well, which were on the stronger side. Then we have balance sheet, cash flow, return ratios. These are the basic ratios which you should track while investing in a company. Apart from that, shareholding, how much institutional movement has happened, or has it actually not happened? That's a query. Street cred, how the stock has rewarded the shareholders. Remember, there's a limited history because it's still a recent listing of 1 to 2 years only. Valuations, we'll try to compare it with what were the peak valuations and what the current numbers are. There isn't a peer to it, so we'll be comparing it with its historical data. And last but not the least, the industry outlook as well as the company outlook. That's what we'll be talking about. But let's move on and go into the first category, and that is your income statement. And let's see what the numbers are suggesting. Last 3 data, it has been significant up move. And the first column is the revenue. That's around 36%, 30%. EBITDA and PAT, that's also going up almost 30%. So historically, the company has done really well. But the Q3 numbers, they have also done well as well. The margin trajectory, that itself has kind of plateaued. That's coming in at around 60%, but still on a higher side for a business model like this, and it's technically asset light, so it works in its favor. Q3 numbers also strong, revenue up 21% on a year-on-year basis. And if you get in the other numbers, EBITDA, that's what I'm looking at, that's up 26% and a strong growth coming in. PAT numbers also, if you could flash, that's where you're seeing it's a high margin business, almost 60% to round it off. And the PAT numbers also decent, up 18%. So very strong Q3 numbers, and that's why you're seeing a good momentum in the stocks also on the stock reaction of the earnings. So overall income statement, I'll give a strong thumbs up when it comes to IGI. And now we talk about the balance sheet, what it means. And so largely an asset light model, so there is no point looking at the debt levels. And you see it is increasing its cash levels. That's around 464 crore rupees of cash levels have come in. Now the question is, will they put that money in expansion, or will this cash be used for any kind of a shareholder return? That's what a lot of shareholders would be asking this company. Why? Because the stock reaction hasn't been good yet. So investors will definitely want some kind of a reward from the company, or some deployment plans as well, or maybe a buyback. Also, apart from this, it's a strong thumbs up for the balance sheet. So both the numbers are very strong. But let's get into more details about it. And then cash flow comes in. Cash flow is also very much important. It's the lifeline of a business, no matter it's an asset light model or it is not. And net, the EBITDA numbers and the cash flow conversion to EBITDA is healthy for a company. It's very stable. There hasn't been much changes. And remember, all of our analysis is on a calendar year basis. And you see most of them are decent, but the cash flows also need to convert. If there is a delay happening, that is where a little bit of concern happens, and we will definitely ask the management about this. So it's a neutral rating when it comes to the cash flow segment. Also, let's point out the return ratios. That is where my concern starts coming in. Before the IPO, the return ratios were around 87 to 90%, and then it has been slightly declining. And the decline has not been arrested yet. I can't find a bottom to it. Will it be less now? The ROC numbers are concerning. And look at this, end of calendar year 2025, the ROE also presents the same story. Nevertheless, for an investor for this type of model, a 50% plus return ratios is healthy, but it's on a declining trend, and that's where the conviction doesn't come. That's why a strong thumbs down when it comes to the return ratios. So now let's talk about the shareholding pattern. I spoke about the promoters. That's Blackstone is having that chunk and they are not selling now. FI's DI is largely unchanged, you could say. DI is a slight kind of a sell-off did happen, and public also the float is largely same. So net, nothing much has changed. So it's just a neutral rating, just because the larger names are there and they're still holding the stock. That's where still the conviction might be there if you're analyzing this company. But let's talk about street cred, and that's also very much important as how much returns have actually come in from the IPO, from 1 week, 1 month. Of course, Q3 numbers have given a good flip, but overall, since last 1 month, stock is still down 5%. Nothing much has been done. 6 months, stock is down 20%. That's where the concern comes. But of course, the broader markets have taken the pain. That's also a reason for it. And year-to-date basis, nothing much has happened. Of course, the earnings bump up has come in, and that's why there is a reaction in the stock. 1 year stock is down 36%. That's where the concern comes if you're holding that. And since the listing, the stock has halved. So for the long-term, medium-term shareholders, this has been a bummer. So net, it is a negative rating, or you could say a thumbs down when it comes to the street cred. And let's talk about the valuations. The peak valuations for the company, that stood at 41 times. But you must be wondering, what's the current P? Let's show you the current P. And the movement has happened, and current P has corrected, almost 40-50% correction. So valuation wise, it's looking attractive. And remember, it's a 12-month, you could say, trailing P, which I'm talking about. So overall, because of the stock price coming down, valuations have become attractive, and I've given this a strong thumbs up. So we have spoken about 7 of these parameters. We have judged them, be it financial or the non-financial parameters, but outlook is very much important because lab grown is a futuristic concept. It's slowly getting imbibed in India. We'll talk about the market also, how big is it. The lab grown diamond is at an inflection point now. There might be a multi-year visibility going ahead. And yes, if you are traveling across the diamond shops, if you are going to bade diamond showrooms, there are chote lab grown diamond showrooms also coming up. The structured tailwinds, this coming across the diamonds, that's what the management claims, but maybe take it with a pinch of salt. The industry is still on a downward trend, at least for last 2 quarters, which I've tracked. Volume growth, pricing, stability, and operating leverage, that's correct. That's what we saw in the EBITDA numbers. So yes, the management is walking the talk. The government has issued a standardized terminology for LGD. So if it is a lab-grown diamond, you cannot call diamond. That's an interesting take, but will it impact the businesses, or at least the certification business of IGI? That's what the main question is. But net, it's a neutral rating in the outlook segment. So let's revise the KYC ratings which we have given for IGI. Out of 8 ratings, what we have given. And remember, the income statement balance sheet has shown a good strength, but the concern starts coming in when I talk about the return ratios. Nothing much has happened for the shareholders. That's why I have given a thumbs down for the street cred segment as well. If you could just show the other rating parameters as well. Yeah, so that's what we talk about. The valuations have become cheap. Outlook, it's good, but is it very convincing? The ground reality, is it a bit different? That's what, that's the query which we'll be posing to management. So net, totally, I've given 4.5 out of 8 for IGI. It's a decent set of rating in our average ratings which we generally give. But apart from this, we'll talk about the management which are joining, and it's just not 1, it's 2 members from IGI who will be talking with us. And first one is, of course, Mr. Temna Printer, and also joining in which is the CFO Ishwar Rai. And Mr. Ishwar, I'll talk with you first. The margin fronts, there has been a good strong performance coming in. What led to this? I assume the average selling prices have gone up. What's the reason for it?
Thanks for having us on the show. The company has delivered some exceptional results during the course of each of the quarters this year. I think from a margin standpoint, we've delivered 60% EBITDA margin versus 57 that we ended 2024 with. It's been a combination of a lot of factors, but 2 important factors is the volume throughput that's continuing to happen from the lab-grown segment side, and the value accreditation that happens from growth in ND. So this year we've had a very strong ND performance as well. When I talk of ND, it's ND loose stone certification. That's grown around 24% this year. So a combination of both these factors has enabled us to really deliver very strong results, both from a revenue growth standpoint and that translating into an EBITDA growth and the EBITDA margins.
Temas, Sharad here. Good afternoon to both of you. And Temas, the question is, largely just looking at the industry perspective, the overall certifications, that volume has not picked up. It's declined sequentially as well. I know for the last 2 quarters, the pressure has been there. Will this continue in the industry? Because there seems a kind of a downtick in the industry as well.
See, the thing is, first of all, I would like to add a little comment on the ASP, which has been increasing. ASP is not price sensitive. It is value sensitive. It's driven by the product mix and the service depth that we offer. So that is the main reason why our ASP has gone up. Secondly, to answer your question, the volumes of lab growns have increased dramatically. And in fact, if you see on the natural front also, we have increased our market share by 45%. So we are on a good roll. And see, the most important factor here is transparency and education and awareness of creating of diamonds. It's not natural diamonds, man-made diamonds. We at IGI grade diamonds, and we give you the origin, which is the most important factor in today's date, to signify whether it is a natural diamond or a man-made diamond, which is called laboratory-grown diamonds in our parlance.
Pretty interesting take. Ishwar, I have a question for you. I was looking at the cash balances. They are on the higher side. And of course, their stock price movements have not been that welcoming for the company of the last 1 year itself. Is there a chance of a special dividend or a buyback? Or are you using this cash for some kind of an expansion? There is a significant chunk of cash.
Yeah, of course. I think we've addressed this in the past as well. I think the company will endeavor to obviously make dividend payouts as well. But as we mentioned earlier, there's also the company continues to evaluate various mergers and acquisitions that's available in the other geographies, etc. So yes, the funds that we currently have will be put towards a dual purpose. Could be a payback in terms of dividend, etc. to the investors, plus also expanding the business.
Right, so we cannot rule out either of them, and that's the query which was one of the most asked from our viewers who keep tracking KYC even on social media. Another query is on the industry specific, and recently India and European Union's trade deal has been completed. I presume European Union's a lot of main offices are in Brussels, and when I talk about Brussels, definitely it's the diamond capital of the world, and there might be something positive coming in. Any print read-through coming in for the industry, and if yes, how will it impact the industry and maybe the company as well? Temas?
Okay, so the diamond capital is actually Antwerp. Brussels is the capital of Belgium. The thing is, we initiated IGI in 1975, 50 years ago, and now 51 years ago actually, in Antwerp, to grade the diamonds as a European laboratory. Okay, today the tariffs have been reduced to zero. So obviously all the vendors and all the manufacturers and all the suppliers in India are looking towards Europe, which has become from 4% to zero. So this definitely adds value and interest to cater to the European community.
And can you quantify that, Temas, if there is a kind of an increase in the business which you are kind of expecting after this trade deal completion?
This is very, very recent. Okay, so we will need a little time span to see how it pans out.
All
but
right.
however, it is very indicative to growth with the European economy.
Right. Ishwar, apart from this, Ishwar, there's a queries there coming in on the margin profile. Generally, the company doesn't share what certifications you do for the studded LGDs or the natural diamonds. If you could give us a breakup, if possible, what kind of, margins come from these businesses? And if not, then at least studded and non-studded, if you could give, and a blended margin profile.
I think the company actually measures this in totality. We don't have a separate measure of what each segment provides us, but each segment provides its own strength. The lab grown is a volume business, so that enables us to scale up and provide great leverage into the bottom line. As I mentioned earlier, the natural diamond is far more value accretive. And then the jewelry business is a large volume business with obviously a lower price point. So combination of all these factors provides us, it's more like an end-to-end business that we are in. There's something which is a volume-driven business, something which is a value-driven business. So we participate in all segments, and that is the strength of IGI in terms of our participation across all segments. And that's visible. Sure. That's visible in terms of if you look at the EBITDA performance over the last 2 years, which you did present.
That's an interesting take, Ishar. Temas, question is on the pricing trends. The natural diamond prices, we have heard about De Beers taking another cut. Of course, officially it's not announced, but what the channel check suggests, that's what we'll be hearing. But the LGD prices, are they also flat, or is it like coming down? What are the important pricing trends for both these segments?
See, at the moment, currently since the last 1.5 years or 18 months, the LG prices have been stable. People know, the growers and the manufacturers know that, below this line, it becomes unviable, and there is a lot of growth potential in the lab-grown sector. So today the growers are adding more and more facilities, more and more reactors to increase the throughput. And we are also increasing our infrastructure and gemological capabilities to augment this growth. Lab-growns is actually in its inception stage. There's a long way to go. And what we need to do is to give transparency to the end consumer. That is the most important factor. We have the trust and we give transparency to the end consumer that both are diamonds. One is natural, the other is man-made. Natural is of course more expensive and unique. Lab-grown being man-made is more affordable. I call it the new...
we are having a shortage of time, but I just wanted to get your view on the budget, for the industry expectations. Anything is there? I remember government has come out with a naming kind of nomenclature on the diamonds and the lab-grown diamonds front, but anything concrete expectations from the budget?
From the budget, actually, it's too new. It's too recent right now. But what I see is the government is very conducive towards the diamond industry. And especially our Prime Minister is very open to lab-grown diamonds because that's a complete make-in-India diamond. You understand? It's grown, cut, polished, and certified in India. It's a make-in-India diamond. So the government is obviously very open to the diamond sector.
All right. Thank you very much, Ishwar and Temas, for giving your time and giving the entire view of IGI and the road ahead as well. That's all, folks. Thanks for tuning into KYC only on NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। लो बन गया ना चपरासी।
Not banking with AU.
AU?
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
AU?
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
रश्मि, ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ।
अंकल
इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
Presenting iSIF by ICICI Prudential Mutual Fund. Launching two distinct strategies, iSIF Equity X Top 100 Long Short Fund and iSIF Hybrid Long Short Fund. NFO closes 30th January 2026. Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRI तक, Gen A से Gen Z तक, SBI सबके लिए है। Very good. SBI, the banker to every Indian. Truly.
पापा, फीस ज्यादा है।
बेटा
याद है बोनस के कुछ पैसे हमने दूसरे खाते में रखे थे?
2 साल से खाते में कोई लेन देन नहीं हुआ है, शायद इनऑपरेटिव हो गया होगा।
तो अब बैंक जाके या वीडियो KYC से KYC अपडेट कराओ, खाता होगा एक्टिव एकदम फ्री। चलो
कहाँ?
एडमिशन कराने, खाता हुआ एक्टिव।
RBI कहता है
जानकार बनिए, सतर्क रहिए।
रश्मि,
हाँ?
ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ।
अंकल
अंकल, इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
Co-presented by Introducing Motorola Signature. Don't blend in, stand out.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Tributes pour in after Maharashtra Deputy Chief Minister and NCP leader Ajit Pawar passes away in a plane crash. Ajit Datta, as he was fondly known, died along with 5 others when the plane crashed while trying to make emergency landing near Baramati. India-EU deal lends support to sentiment on the Lal Street. Nifty manages to stay above 25,300 while Sensex jumps more than 400 points. Energy, oil and gas lead the gains and metals shine. FMCG auto on the back foot today. Coming to India, EU deal, investors and policymakers alike will try to decode what changes in India and the European trade landscape. The changes are set to reshape parts of India's import market over the next decade. Asian Paints under pressure after Q3 disappoints the street, subdued demand, one-time exceptional loss, low decorative business volume drags, and Vodafone Idea trims net loss and sees 3% uptick in its ARPU. All eyes on auto major Maruti Suzuki along with TVS Motor, BEL, SBI Life and Larsen & Toubro. Budget session of the Parliament kicks off with President Draupadi Murmu's address at the joint sitting of both the houses. The session will see tabling of economic survey tomorrow and the budget will be presented on Sunday. Shadowfax gains over 3% after listing at a 9% discount to its issue price. Company plans to use the fresh funds to strengthen its logistics network. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar. Let's take a look at the market. And yes, Nifty 50 has been holding above the 25,300 levels. Let's take stock of the market. At least at the particular moment, more than 0.5% gain coming in for Nifty 50. When we take a look at some of the contributors coming in this particular space, well, overall market perception when it comes to the FMCG as well as auto space, especially those consumption areas, they are taking a beating in the trade today. But when we take a look at the other sectors, remember, ahead of the budget, some bit of momentum is building in the sectors of choice, which could be really coming in, like defense as well as also energy space. But to the top story today, and a sad one at that. In an unfortunate development, a plane carrying Maharashtra's Deputy Chief Minister Ajit Pawar crashed near Baramati while landing. As per the Directorate General of Civil Aviation, DGCA, all the 6 people on board the plane lost their lives in the fatal accident. Let's get in NDTV's Radhika Ramaswamy for more details from the ground. Tell us, Radhika.
That's right. Very tragic news coming in. Maharashtra Deputy Chief Minister killed in an air crash. In fact, this incident happened at about 8:40 a.m. He left from Mumbai to Baramati at about 8:10 a.m. He was supposed to land close to 9, but about 8:45, just before landing at Baramati, the aircraft, in fact, crashed just before the land site. Now, what exactly transpired? What exactly caused this particular accident? Was it as a result of technical failure, mechanical failure? Was it human error as a result of weather conditions? All that is being probed, but certainly very, very shocking and has left the entire state of Maharashtra in shock. He's been the longest serving Deputy Chief Minister. He's held many portfolios in the past. One of the most influential leader as far as Maharashtra government is concerned. Several of his family members on his way, including Sunetra Pawar, Supriya Sule. Prime Minister Modi has also expressed his condolences. We'll have to see what exactly happened. But very, very unfortunate news. When the last rites will be, that is something that will be officially communicated. But right now, Baramati is at a loss. State at a loss, and the entire country shocked with this untimely demise of 66-year-old Ajit Pawar, a very tall and influential leader of Maharashtra.
All right, Radhika, thanks so much for getting us those details. And of course, quite a sad state of affair, and the entire country is really condoling the death of Ajit Pawar. Asian Paints delivered its numbers. My colleague Mahima caught up with the management. Let's go straight to that.
First question that everybody wants to know, in fact, the nation wants to know with regards to where, demand is concerned. Because, constantly we've been talking about this, how demand has remained subdued in your con call. You did also mention that, you expect this pressure to continue. Just want to understand, this time, I'm not going to ask you as to when do you expect this revival. Just want to understand as to what triggers do you think could be the next, in line that could probably support demand going forward according to you structurally?
So overall, when we see, I think in the quarter, what we saw was definitely demand was stretched. We had a shorter festive season, a prolonged monsoon. I think despite that, overall coatings, we've registered about a 4.4% value growth, a decent volume growth of about 8.3% and very strong margins. PBDIT margins are at, all-time high in terms of what we are seeing in terms of the overall business. As we see going forward, I think we've seen some demand pick up in November and December, which were decent months overall. As we go ahead, I think the focus has been very strongly that we are looking at focusing from a point of view of B2B business, especially catering to a lot of areas in terms of looking at, government expenditure in terms of infrastructure, which is happening. Government is becoming a very strong area in terms of where we are focusing, given the whole focus with respect to infrastructure development projects, which are kind of coming. And that is something which we are focusing our attention very, very strongly. Second, the industrial businesses, whether it is the auto refinishes business or the auto OE business and the general industrial business, is something which we are looking at in terms of concentrating in that direction. And the third direction would be in terms of upgradation, in terms of what we keep on looking from a point of view of moving the market towards a little bit of premium luxury products in terms of going forward. So we would see that possibly going forward, I think the axis of demand and looking at focuses would be in these directions.
Interesting. Okay. And since you mentioned, government contracts, just want to understand, because budget, is set to come on 1st of February. And this time, analysts are expecting that this is going to be a budget that's going to be focusing more on capex-led growth rather than consumption-led growth, which was, very much the focus in the last budget. But if that is the case, right, capex-led growth, I think that is going to augur growth for paint companies as well. So just want to understand your views on this and your expectations from the budget.
Yeah, definitely. I think what we see is that I think we are looking forward to the government pursuing the whole area of focusing on infrastructure, on development more and more. We are seeing the kind of investments which are taking place in terms of the whole connectivity of the country, the ports, airports coming in, and is at the same time really getting a lot of industries, new technologies to kind of really invest, which kind of really is a very strong focus which the government is bringing in terms of the private capex literally kind of go up. I think all these augurs very well for us, both from a point of view of our B2B business as well as the industrial businesses in terms of going forward. And we would really expect that the government continues to kind of really accelerate this whole area of infrastructure and development, so that possibly that is a new direction, that is a new focus which we continue to kind of really embrace.
Understood. Okay. With regards to where margins stand, and I'm sure that you get this question a lot. You've guided a range of that 18 to 20% mark, but this time it has come at the higher end of that range of guidance that you've given at the 20% mark. Just want to understand that if raw material prices continue to remain lower, do you expect some further improvement in terms of margins, or do you think at 20% your margins have peaked?
So what we see is that, today we have, other than the deflation of 1.1%, what we have seen in the last quarter, what we have done is a lot of work from a point of view of our cost structures, looking at in terms of our fixed costs and how do we kind of really want to kind of take that. We've also done work from a point of view of a lot of areas regarding to material efficiencies, whether it is sourcing, purchasing, and formulation efficiencies to that extent. We feel that possibly, I think from a margins point of view, that we have been able to elevate the margins to the level currently of 20.1, which is a good high in terms of what we are seeing to that extent. Going forward, we are expecting that we will continue our investments, whether it is from the point of view of building the brand, or it is from the point of view of investing in the market in terms of innovation, new technologies. We also want to invest from a point of view of AI-led technologies, which will come in, and a lot of new chemistries, which we want to kind of really put into the market. So our focus from that point of view will continue in terms of what we want to kind of build the market, even in terms terms of bringing newer areas of distribution, in terms of what we want to put place, I think those would be the investments which we are looking forward to, other than the capexes which we have already underway in terms of what we are putting. So I think our margin guidance would continue in that 18 to 20% at this point of time as we go ahead.
Okay, all right. With regards to where competition is concerned, in your constant con call commentary, you've continued to say that, competition still remains a concern. But from what my understanding is that despite of, this heavy capex that competition had come with, it's not been able to make that dent in terms of where the market share stands. So just want to understand as to why do you think that competition is still very intense? One thing. Secondly, what are the, kind of initiatives that you've made this quarter specifically in terms of where you are trying to fight that competition, and when do you think that competition will start to ease out going forward?
So see, the nature of the industry is that, I think, competition will continue. We have now paint consolidation also happening, apart from the fact that there are many new players in terms of to that market. So we believe that possibly that kind of competition intensity will continue in terms of more and more players, more consolidation, which is going to happen as we look at it. Our focus has been more from the point of view of looking at what is the innovation index which we are able to bring with respect to newer products in the market. What are the areas in terms of what we can look at accelerating the premium in the luxury segment in terms of going forward. We've also kind of really looked at the whole area in terms of how we are able to kind of galvanize some of the businesses like the waterproofing construction chemicals which are there, which can give us a leeway in the market in terms of going forward. So
all right, Asian Paints management there. The stock is under pressure post its Q3 performance. With that, we'll slip into a short breather on markets at 12. Come back with more details and earnings of the day.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
रश्मि, हाँ? ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ।
अंकल
इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े। नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा, इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत के इरादा पक्का है। करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए।
Presenting iSIF by ICICI Prudential Mutual Fund. Launching two distinct strategies, iSIF Equity X Top 100 Long Short Fund and iSIF Hybrid Long Short Fund. NFO closes 30th January 2026. Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
It's fresh, bro. Straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
Hello, Moto.
Welcome back. You're watching Markets at 12, and another important earnings of the day that we are pouring in is the FMCG player, the consumption player Marico, which has delivered an okay set of numbers when it comes to the profits as well as revenues. But when it comes to the margin, the profitability aspect, there it has seen some pressure. Sugata Gupta, MD and CEO of Marico, joins us now. My first question to you, Sugata, is that profits have been solid on a YOY basis, but the EBIT EBITDA pressure is there. You have also given a commentary on the expansion strategy of 150 to 200 basis points in medium term. So when is that going to kick in, and what are the factors impacting your EBITDA performance going forward?
I think we just lapped a very high inflation cycle. As you know, that one of the biggest input cost, which is copra, had a significant inflation as high as almost 100%, which forced us to take a 60% price hike in Parachute. Since the peak, the copra that has eased out by 25 to 30%. Simultaneously, I think we have also continued to reduce dependence on decommoditization of our portfolio, including diversification and growth of value-added hair oils, which has been unprecedented. So therefore, a combination of easing out of inflation, continued mix improvement, as well as profitability improvement of the diversified part of the business, which is foods and digital, will happen as we move into next year. So YOY next financial year, we can expect definitely a 150 to 200 basis points improvement in margin, which roughly translates into at least a mid-teens bottom line growth as a base case.
All right, the middle of next year is when you are expected to clock in that expansion in EBITDA. But most of the brokerages are of the views, Shogato, that volume growth needs to be really continued because the pricing pressure will continue. How's the demand? How's the outlook? And of course, in revenue, you're on track with the 25% that you have estimated for this year.
So I think we are already 3 quarters down when we are at 26% and therefore 26-27%. So this FY25 numbers are definitely possible. As far as volume growth is concerned, yes, I think the sector consumption is looking up. A combination of various things, whether it's in terms of the GST, which has been transformational in driving affordability in a lot of categories, whether it's food or some of the personal care items where GST went down from 18 to 5. Consumers want brands, aspirational brands, and therefore the affordability will drive consumption. I think the rural demand has improved quite a bit, and we have seen this trend over the last few quarters. The monsoon and the agricultural sowing season has been okay. So we believe fundamentally there are multiple vectors which will aid the consumption growth, and therefore we expect the FMCG volumes. We are in the early season of, in terms of the earnings season. And if you look at the trends, there has been volume improvement all around. And as far as we are concerned, we have been delivering high single digit volume growth over the last 4-5 quarters. And we are extremely confident of continuing to deliver this as we move into next year.
All right, in food business also, Shogato, your company has just made an acquisition of Zia Maize from PVR. What are the synergies, the impact to your overall portfolio, and when is the performance from here start showing up on your results?
So look at 4700BC. It's we are very excited about this recent acquisition. If you look at our overall foods journey, it has been focused on, most of it has been health and wellness. There was a gap in our portfolio in terms of premium gourmet snacking, and this is something which is driving a lot of consumption tailwinds because of whatever growth in OTT, people having in-home consumption of gourmet snacks, and they are better for you snacks. I think this brand has significant, in terms of headroom for growth. It will continue to be, available in PVR cinemas, but that is a small part of the business. A large part of the business has been online. I think with Marico, access to the Marico GTM, whether it's modern trade or some part of the premium food outlets, it gets access to GTM. There will be significant cost synergies with the Marico system, as well as potential synergies with True Elements, which is again a better for you clean brand which operates in the premium space. I believe this will accelerate both True Elements and 4700BC's in terms of the path to breaking even in a very accelerated manner. And also, I think we will have monies to invest behind the growth of these brands. And I'm extremely confident 4700BC in the next 3 years will become a 500 crore brand. We are currently having an exit run rate of around 140 crores.
That's right, Shogato, but also it's the digital era right now. So digital first portfolio, what is the outlook as well as growth propensity? Will international market give you that kicker in this particular segment?
As far as the digital first portfolio is concerned, we believe that it can have the potential to become 2.5x with a EBITDA of 10% plus over the next 2 years. And if you look at it there, we participate in different segments. We still have some gaps to plug, but we now have a broad-based play. We operate in premium male grooming in Beardo. Beardo is what I call a Harley Davidson of male grooming. It's around 300 crores with a double-digit EBITDA. We have Just Herbs. We have a brand, as you talked about, is True Elements, and Plix. Plix is the largest and the fastest growing brand in our space. It plays both in the nutraceutical segment as well as in the hair and skin food. And it's also profitable. And I believe that next year, Plix is expected to almost touch 1,000 crores. Now we have 4700BC. And as I said, there could be 1 or 2 still gaps in the portfolio. I think we strongly believe we are one of the very few incumbent FMCG companies that has been successfully converted itself into a digital consumer company. We are, today number 2 in terms of size as a digital FMCG company in India. And this, we also believe, has potential, this digital business model in some of our international businesses, where some countries where internet penetration is very high, e-commerce penetration is very high. So this is a capability we have honed. We have done it very innovatively, where we have taken majority stakes, let the founder run it, learn the business from them. Because at the end of the day, I think there's a lot to be learned from the founders, except that we also choose founders who have a mindset of build to last as opposed to build to sell. And they are interested also in leaving a legacy. And for us, that is important.
Also, Shogato, consumption space is very critical for the economy and the growth, and budget is just around the corner. Of course, GST reforms have added some propensity and boost to consumption. But what would be your budget expectations to boost demand and consumption?
If you look at last year, whether it's the tax breaks or the GST 2.0, both have been transformative in terms of driving consumption, especially in the middle class. And I believe this will play out over the medium term. I think there has to be continuous focus on investing behind infrastructure, generating employment, rural upliftment, and the government has done a fantastic job in that. And obviously, long term, it is important to also ensure fiscal discipline. The very fact that India has been extremely, proactive in doing a lot of FTAs in the recent times, and I believe that we will continue to be the fastest growing economy in the world. The momentum is good, and it is extremely critical that we continue to actually generate infrastructure, investment behind, expansion of capacity and generating employment, which is critical for maintaining this momentum.
Right, Shogato Ghosh, thank you so much and all the best for the next quarter. Thanks for giving us the outlook on the business. All right, that particular stock slightly under pressure in trade after the results and has picked up a little bit on the management commentary. Well, South Africa is considering imposing import tariffs of up to 50% on vehicles imported from India as well as China. How will this really impact the Indian automakers? Puneet is here to get us all the details. Tell us, Puneet, auto is one space which is seeing quite a bit of movement when it comes to the global trade. Tell us the impact of this particular event.
Well, it's going to be a huge impact on the exports of a lot of Indian automakers. It's a growth story that hasn't yet picked up yet and has already started to see thorns in terms of the growth development. Now, there is a tax and a higher import duty essentially being considered by South Africa on both India and China. And now the current duty is roughly 25%. It's looking to double to 50% in terms of import duty. So all vehicles manufactured in India going into South Africa will now attract a higher tariffs. That's what's being considered. But it's also important to understand why is that the case, because almost 53% of all cars imported into South Africa come from China, 22% coming from India, and it's a heavy reliance that they have on these two countries, which has been impacting the domestic auto industry in South Africa, and hence this particular move. What's also important is that in the last 4 years, there's always been a 368% increase in imports from China itself and almost 135% increase from India, and hence the industry there, the local industry has gotten impacted massively because of these cheaper imports in that sense, and better cars of course, but that is where the impact is for South Africa. The other key aspect that, lower price imports, essentially, the smaller cars have actually been impacting the domestic industry there in South Africa. So smaller cars from India have been taking a lot of share in that industry. But finally, what does it mean for individual players? The biggest impact could be on someone like Maruti Suzuki. Almost 30% of their exports go into South Africa, which is a big market for them, especially for the small car sector. And it's important to note that they have a target of almost 4 lakh vehicles in this particular year. 30% of that number is quite huge. So you could, and hence you're seeing that's impact and pressure on the stock over the last week or so, and probably this could be the reason why.
Right.
The other aspect is also that it's almost 3% of revenues for Hyundai as well, and Mahindra is also another player. So these are the few players who could get impacted, but Maruti definitely being one of them.
All right, thanks so much, Puneet, for that. And auto index is under pressure today. With that, it's a wrap on markets at 12. Thanks so much, but keep it with NDTV Profit.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop? So I get more. What will happen? Union Budget 2026 on NDTV Network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth.
we bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets. Hello and welcome to NDTV Profit. This is Hiral Dadia bringing you our all-new offering, Trending Stocks. And with me is Sharad Dubey standing at the NDTV Profit market pit with all the action in the markets today. Sharad, what's it looking like? Because it's an interesting day of trade so far with the new series.
Well, it's a very strong start to the February series, and Hiral, the markets, of course, yesterday we saw good up move in the Nifty and Nifty Bank in the closing trade, but today also we see largely it's in the green. Of course, some gyrations are happening, but net is still in the green, almost 100 points up. Let's see what Nifty Bank has in store for us, and lastly, let's pick up how the movement has happened. This has been a technically much better setup, a slight kind of correction happening in the last 15-20 minutes, but nothing to be concerned about. The key technical levels have been respected, but I would like to take you to the important triggers for the markets at 12:30 right now, and the first one is of course the Nifty. It has showing strength, and the February series that's also started on a really strong note. Now, how much it will pick up, especially with the budget online, that's something which we'll look out for. The 200 DMA levels, that important levels, the key support has been made. That's something to watch out for. But the next attempt, where will that be? That's the 100 DMA levels. That level to watch would be 25,612. So there is a gap right now. So that's what we'll see if a good momentum comes in the market. The strong technical setup is looking like for a positional trade as well, and this is for a Nifty Bank, which we had told earlier also to you. Apart from this, option data is also suggesting that a bullish momentum might continue on a positional basis. As this is the first day where the trades are being made in the series. Broader indices are showing better performances. That's a relief for the small cap indices as well, and even the mid cap indices. On the other hand, strong buying is coming in three sectors. The energy pack, spoke about the metal pack, and also the footwear stocks. That's pretty much interesting, though they are low volume counters on back of good earnings, and a declining dollar is aiding the market sentiment with rupee strengthening as well, and that is what the key takeaway is coming on this day of trade. Over to you, Hiral.
Thank you so much. In fact, I'll pick it up from there, and that's the reason why our watch list looks like that. ONGC, Oil India, on the back of the rising Brent crude prices, strong moves coming in on both these counters. That will be on our watch list, followed by Metro Brands, where they've seen a strong growth in the e-commerce business, Marico. The volume growth has been in line. However, the margin pressure is what is a concerning area. Commentary pretty strong. Strong numbers coming in from IGI as well, and the rally continues on an MCX when you talk about Q3 numbers. Moving on, we have Mahindra Logistics, where it has been a turnaround quarter. Spandana Spurti has expanded its NIMs, and that's the reason why that's in focus as well. And you have Dynamic Cables on the back of earnings that is in focus. Hind Copper, they've tendered for the copper block in MP, and strong moves there. And you have a Motilal Oswal, where the wealth and AMC business has led the growth for them, and that's the reason why you're seeing some strong moves. Maruti M&M, a South Africa tariff impact coming in on that one, and Asian Paints. Most analysts continue to remain bearish, though the commentary is strong. Tata Consumer, Kotak has downgraded the counter, and you have a RPG Life, where the margins are down over 600 basis points. Vishal Mega, lowest growth in 5 quarters. Home First, strong volumes, and Westlife seeing strong volumes. So this is on our watch list today. But let's head across to Sharad once again to take us through the rapid fire with Saumil Mehta of Mirai Asset Sher Khan. So over to you, Sharad.
Thanks a lot, Hiral, for that. Good afternoon, Saumil, and this is our rapid fire segment, and the first stock or the group of stocks I picked up is ONGC and Oil India. Both of the stocks have it their 1 year levels as well. Saumil, important technical levels for them?
Oil India positive, ONGC positive. ONGC next target on the upside in the very short term would be 273, which is the previous swing high, and 301. 300 levels target in the medium term outlook for ONGC. Oil India, definitely positive. A breakout for both the stocks. Target on the upside for Oil India would be 527, and above that would be 590 levels at the second target in the medium term outlook.
Somil, the next stock is MCX. Second straight day of good buying coming in on back of earnings.
Absolutely positive. Keep a trailing stop loss. I'll not suggest to fresh buying at this point of time, but keep a trailing stop loss at around 2,246, which is the previous swing low, and keep the position open and keep trailing the stop losses.
And Somil, what about Dynamics cables? Of course, the volumes at times are lower in these counters, but is there any positional bet coming in this counter?
Dynamics cables.
Yeah. Somil?
Okay, so dynamic cables. I'm not so positive on the stock at this point of time. It is a breakout would be above 356. I would not suggest to trade in the very short term. If it goes above 356, then I think it will be a breakout and trade in the medium to long term outlook, which is on the positive side. The next target would be around 480 to 490 levels.
And the metal space has been, sizzling over the last, you could say, a few months. But Hindustan Copper, interesting corporate development coming in. What's your view?
Hindustan Copper, definitely a buy at this level as well. A small triangle pattern has broken on the upside. Looks great to me. The stop loss is a little deep, 524, but it's a great stock to be in. I think the next level in the medium term outlook would be 700 as a target.
Interesting. Somil, what about Home First Finance? The volumes have also picked up here.
Home First Finance Company, it's a breakout actually. In the short term, yes, it is a breakout, but from the higher levels, it has slipped down a little bit. So I'll wait for the breakout again above 1320 and then trade in the medium term outlook, not in the short term. The support is around 1015, 1010, but yeah, positive on the stock, so buy on declines.
And Somil, what about Motilal Oswal Financial Services?
Motilal Oswal, I'm not too bullish at this point of time. My view would be neutral. Avoid this at this point of time. 200 daily exponential moving average is around 880 levels. Above that would be a good buy.
And also your views on Westlife Food World.
Westlife negative in the medium term outlook, but in the short term I'll be expecting a sharp bounce till 527 and 560, so that will just be a bounce. So if there is a position, if anybody has a position, can get out of the stock, but no trading at this point of time.
All right, that's the view coming in from Somil. Thanks a lot, Somil, for giving the entire perspective in the rapid fire. Over to you, Hiral.
Thank you so much for that. So interesting stocks that we're discussing so far. But moving on, RPG Life Sciences has reported numbers. If you pull up that counter on the screens, the EBITDA margin has been slightly weak, which has been impacted by higher cost of material. You have that's come in at actually 36% versus a 32%. The stock down nearly 9% in trade. It's the lowest profit that they've reported in the last 5 quarters as well. And the increase in employee cost is something which has led to the EBITDA impact. In fact, if you're talking about an exceptional item which has been prevalent in this quarter, which has impacted the profitability of RPG Life as well. Let me actually get in Ashok Nair, Managing Director at RPG Life Sciences. Welcome to the show, Ashok, and always a pleasure to speak to you at NDTV Profit. This is Hiral on this side. My first question coming to you is, we've seen this weakness that has come in this time around. Is this something that the management already expected in this quarter, or is this something which was really not expected, has come in, and you're expecting a sea change when it comes to the coming quarters?
So good morning. Thanks for having me here, Hira. So this was something we had expected. So if you see our domestic performance, which is almost around 70%, has grown by 12.6. and for the quarter 10.6. In fact, all our portfolios, whether it has been our immunosuppressants, whether it is our MABs, everything has grown around by 12, 17%. And naproxen, which last time I'd spoken to you, is continuing to grow at 15.7. Otherwise, the whole business continues to record a healthy growth. The challenge was again because of our MPI fire, which happened in last January. The good thing is we have almost restored it, but the time is taking for validation of those batches, because post fire we needed to do once again all those batches to be validated and some approvals of the fire NOCs. Having said that, all has got through. So this quarter we are in a place to get back to what we were performing as far as API concerned. So we don't see a concern there. And the good thing is all the clients have been supportive of us, and most of this by March 26, we are surely all our products will be in a position to get validated, and then commercialization will start. Now coming to the EBIT, the margin, it is mainly because if you look the EBITDA, yeah, I can understand we are showing a 24% as compared to earlier 30, but then last year during the same time there was a provision which got reversed, which was almost for the tune of 6 crores, which is 3.5%, and 2% basically is being affected because of our API margin impact and the product mix because of that. We also, to see that how we drive our further growth, we have invested in strategic talent, which is almost around 0.5%. So whatever we've done is with a very clear-cut strategy, and there's no surprises as far as we are concerned.
Well, to put that in much more perspective, joined by Varsha here. Varsha is tracking the pharma sector, especially RBG Life Science. Over to you, Varsha.
Well, thank you so much, Sharad, for that. Hello, Mr. Nair, and welcome to NDTV Profit. Mr. Nair, you just said that you are on track for the restoration of API facility. What about Q4? How is Q4 looking, and overall FY26? If you could guide us.
So as I said, domestic continues to have a robust growth. API is on the path to restore this quarter. So API, normally we used to do around 12.5 to 13% growth. And quarter 4, we are expecting to bring back the API business to that growth.
Got it. And also, sir, what was the sales that Naproxen did? You had guided for, 100 crore sales also. Are you on track for that?
So we are on a track of that. 100 crores is something which March is something which we said we should be able to achieve. We should be somewhere around that.
Understood. And sir, what about international business? Contributes almost 18% to the Q3 revenue. Was there any weakness also in international business, if any?
So international business, one of our key clients was taken over by a PE fund, and thereby they are looking into their inventories, they're processing, they're streamlining it. And as I said, that quarter 3, they were doing their own check and balance system. So those also will be back on quarter 4 for us.
And also, Mr. Nair, if you could help us with your capex plan, what is the capex estimated for FY26? Considering the product pipeline you have.
So if you see that for the last 2-3 years, we've been constantly infusing almost around 45 to 50 crores every year. So that continues to happen. And going forward for FY27 also, we plan to infuse the same amount of capex. Basically, it's towards plant expansion, approvals, and increasing the facilities and upgrading the equipments.
Right. Well, thank you so much, Mr. Nair, for answering all the questions, and all the best for the business. Well, Hiral company is expecting better Q4 at least and FY26 considering the restoration in the, API plant.
Yeah, I mean, that is going to be important because getting back to the growth trajectory is what is of utmost priority right now that we should be looking at as well. So you're talking about, I'll just recap quickly, restoration of the API facility is the key. Secondly, they're expecting validation of all products and commercialization to start by March 2026. And the API business will be back to that 12 to 13, 14% kind of growth in the fourth quarter. And in terms of Naproxen, 100 crores is what the company had guided. What they've indicated is that they will look at being somewhere around in that range, and a capex of around 40 to 45 odd crores will continue in FY27 as well as it has been planned. So that was the management of RPG Life, but let's get in Gaurang Shah
from Geojit Financial Services. Gaurang, welcome to the show and always a pleasure to speak to you on NDTV Profit. I'm sure you've heard the management of RPG Life as well. I mean, a 9% downtick coming in, and the management has indicated that this is something that has not come in as a surprise to them in terms of the weakness in the earnings. However, a bounce back in Q4 is what they're expecting on the API side of the business. Your view?
Thank you so much, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to you and to the entire team. A small disclosure before we go any further that all recommendations are going to be a part of our fundamental research team recommendations. Our company Geojit or we do not have any kind of investments in the recommendations that will be given by. No financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So I think there was one-off item also as well. Hiral, if I'm not mistaken, if I read the flashes right, they were moving too fast. And of course, the restoration of API facilities will again bring back the momentum that is lost. But it will all depend how the things pan out. Unfortunately, since we don't have a recommendation on RPG Life, I won't be able to give any specifics, but we like the pharma sector. We like the API, we like the generics, we like the CDMO space. Some of the companies that we have coverage on are Cipla, Sun Pharma, Gland Pharma, Natco Pharma, Mankind Pharma, Aurobindo Pharma, to name a few, Natco Pharma again, Glenmark Pharma. So we are quite optimistic about the pharma. The only thing, Hiral, in the short to medium term is any kind of adversities in terms of global news flow can create a short to medium term overhang on some of the counters which have larger exposure as far as the export market is concerned. But the sector looks extremely promising.
All right, sector looks promising, pharma, but one sector which is showing a mixed results or a mixed move is the auto segment. The South Africa's tariff announcements, this buzz has spooked some auto stocks. Joining in is Puneet here to give us the entire perspective. Is it really serious?
Well, for certain companies, most certainly it's going to be a big impact, because what is the news that South Africa will be imposing import tariffs on vehicles that are imported from two specific countries, that's China as well as India. Now, it's important because China accounts for almost 53% of all imports that go into the country in terms of cars. India, on the other hand, also has a sizable share of 22%. So consolidated, 75% of the imported cars into South Africa come from just these two countries. And South Africa is looking to have import tariffs of 50% versus the current 25%. Now, this is, of course, to intensifies the imports into the country and also to boost the local production, because a lot of small cars go from here into that particular country, and that is why the local industry in South Africa is suffering. What's also interesting is that in the last 4 years, the growth in the imported cars into South Africa from China has been at 368%, while for India that number stands at almost 135%, and a big beneficiary of that is Maruti Suzuki in terms of players. Now, Maruti almost gets 30% of its export targets met with South Africa, so this will be a big impact on them. And while the earnings are estimated in just about an hour or so now, this is going to be the larger talking point today for the counter. Apart from that, Hyundai India is also one of the key players. It's almost 3 to 4% of the company's revenues in terms of exports. And M&M, which is roughly 2.5% in terms of total volumes, will also get impacted because of that, because South Africa is a key export market for the 3XO amongst others. So definitely a big impact seen on auto players. But Maruti is certainly the big drag that you're seeing on the stock today, possibly because of this.
Well, thanks for that, but please keep the engine on. We'll be coming back to you again on the Maruti Suzuki preview. Gaurang, a lot of stocks Puneet discussed, especially with the South Africa's exposure. As if you look at M&M, and even Bajaj Auto also has some kind of exposure in Africa. So any kind of stocks you could see as some kind of pressure, because the export theory of the export story, I mean to say, of India was also playing out.
Yeah, so Sharad, so it was definitely, and especially in the last couple of month-on-month sales numbers that we were witnessing, we were seeing a encouraging sign as far as the export market numbers were concerned. Now, this is the a negative news flow, definitely, as Puneet was mentioning, for companies like Maruti, which have a larger portion or a larger pie of their top line and bottom line coming in from that part of geography. But let us understand one thing, Sharad, that we have managed to sign, seal, and deliver mother of all trade deals yesterday with the European Union. Before that, we have managed to secure 9 free trade agreements or bilateral trade agreements with other countries. South Africa, I guess it's a tipping point definitely right now, but if governments of both the countries sit across and if they have some common way out of this particular situation, then that could be beneficial. But it is definitely an overhang. Remains to be seen how it's going to impact the overall Q4 numbers and the numbers in the next financial year. As a disclosure, Sharad, we have a positive coverage on Maruti as well as M&M.
So positive coverage coming in for Maruti and M&M, but to get that in perspective, Maruti's numbers also come out and the preview is something which Puneet has got for us. Puneet, could you just take us through the numbers?
Well, it was a strong quarter this time around, but of course, the news on South Africa will be key. But almost a 24% revenue growth is what we're expecting for this company in this particular quarter. EBITDA will be up 11% with margins at 11.7. It's something that the street will take with both hands at this point of time. With profits also expected to grow by 15%. Now, a lot of this growth has come from the 18% growth in volumes itself in quarter 3 of FY26. A big beneficiary of GST rate cuts. Entry-level cars have grown almost 100% in the month of December for Maruti. So you will see that positive impact there. The other aspect is that what we'll be watching out for is any update on Victoris, because 70,000 bookings is what they got for this particular brand. If they're able to have deliveries expedited, which is one of Maruti's key strengths, will be something to watch. And also in terms of margins, because commodity cost has been quite high at this particular point of time, both aluminium and copper. If they're able to manage that, margins will be a key positive. But overall, any comments on demand and structural positivity will be something that we continue to monitor.
Thanks a lot, Puneet, for that. And Gaurang, we spoke about the Maruti Suzuki as well earlier. Anything else apart from that, especially in the CV segment? Is it looking attractive here? Because there were some broking reports also coming in, like Ashok Leyland or a Tata Motors CV.
So Tata Motors CV and Tata Motors PV, Sharad, is under review right now. I won't be able to give you more specifics on that because it's under review. Ashok Leyland, Eicher Motors, incidentally, also, along with Royal Enfield motorcycles, they manufacture Eicher trucks. They also have a JV with Volvo, and all those, Volvo buses that you see running up and down the highways are a part of joint venture between Eicher Motor and Volvo. Other than that, we have a positive coverage on a pure EV play called Electra Green Tech. And yes, more than the passenger vehicle numbers, more than the PV numbers, CV numbers were very encouraging for the last couple of months.
All right. So pharma we have done auto, but another space which is keeping Mahima busy is the consumption space. Lot of earnings coming in, lot of reactions. Mahima, what's there?
So I think the way the stocks have reacted was not the expectation ideally, but overall I think Tata Consumer gave a good set of numbers, but some pain points of course were there to stay, and probably that's why we're seeing the stock tanking. Overall EBITDA margins expanded 325 basis points. Growth in overall business was also at 29%, but I think something that the street has not liked probably is the plantation revenue that dipped around 16 points. International business faced margin pressure, as well as coffee prices remain uncertain going forward as well. Non-branded EBITDA also plunged by around 26% year-on-year on a constant currency basis, and all of these reasons are probably why the stock is facing pressure. Plus, we've also seen a run-up in the counter. Asian Paints is the other one where probably demand continues to be subdued and is expected to remain subdued, and competition intensity is here to stay. These two takeaways from the con call are probably putting pressure on the counter. Q3 of course was affected by shorter festive season as well as monsoon, and overall decorative business volumes were lower as compared to Q2. So that is also one of the reasons as to why the stock is tanking. People had more expectations. Lastly, Vishal Megamart, lowest growth in the past 5 quarters is what we've seen on this one. The same store sales growth came in at that 9.1% mark adjusted. If not adjusted, stood at around 10.3% mark. This was adjusted for preponement of Durga Puja, and loyal customers still continue to grow for them at 16%. Same-store sales growth, of course, was lower as compared to previous quarters as well. And the store expansion, however, continues for this one at 29 store additions this particular quarter, no store closure. So I think expansion for all of these tier 2, tier 3 players, retail players is on the cards, but we'll have to see whether the kind of revenue growth that they've seen, whether that continues or not. Of course, on a high base as well.
Thanks a lot, Mahima, for that, giving us the entire consumption pulse. But Gaurang, just a view on that. The stocks which Mahima discussed, Asian Paints, Tata Consumer, on the other hand, are falling in trade. Other side, the footwear stocks are also buzzing in trade. Anything good in the consumption space which is looking nice?
Well, so Tata Consumer, Godrej Consumer, Dabur, Marico, Britannia, Nestle, HUL, ITC features in the entire FMCG related investment themes and ideas. On Vishal Mega Market, we don't have a coverage, so I won't give any specifics out there, but we have a positive coverage on Avenue Supermart, that is DMart. We're positive over there. In terms of the footwear related sector, and of course the positivities that will emerge from the FTA that has been signed with European Union, we have an accumulated stance on Bata India.
So that's with regards to where Bata India as well. You know, a few of the other names that we need to look at is Spandana Spurti. Pull up that one. The loss has actually narrowed to a 95 crores versus a 440 crores is what you're tracking on this one. The NI actually has gone down by 57% when you talk about Spandana Spurti. The contraction in terms of where AUM is on the back of elevated write-offs as well. The stock seeing gains of nearly over 7.5%. Now, strong growth commentary is what you're seeing from the management. They've said that the MFI segment has actually stabilized quite a lot. They've said that most of the legacy write-offs have been done. And the portfolio yields are expected to improve on the back of the new book. Your view, Gaurang, when it comes to Spandana Spurti, because it's a very interesting take that's coming in from the management as well, and they're sounding absolutely optimistic.
Well, the MFI segment remains to be a little bit sticky, Hiral. If you actually go to see, there has been a lot of concern in terms of the run rate for principal and interest coming back to the balance sheet. We like the sector, the MFI sector, small and microfinance related players. Spandana Spurti is something that we don't cover, but we have coverage on AU Small Finance and Credit Access Grameen. If you compare the two balance sheets, all the three balance sheets in fact, then compared to Spandana Spurti, I think AU and Credit Access stands out a little bit taller.
So this is going to be interesting to see how this entire space pans out. But thank you, Gaurang, so much for joining us on the show. Completely out of time. But that it's time for a quick break. Thank you from the team that put the show together, Sharad and myself. Lots more lined up on the other side in lunchtime trades. Please stay tuned to NDTV Profit.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the finance minister speaks.
Tributes pour in after Maharashtra Deputy Chief Minister and NCP leader Ajit Pawar passes away in a plane crash. Ajit Dada, as he was fondly known, died along with 5 others when the plane crashed while trying to make emergency landing near Baramati. Meanwhile, India-EU deal lends support to sentiment on the Lal Street. Nifty manages to stay close to 25,300 while Sensex jumps close to 300 odd points. Energy, oil and gas lead gains and metals shine. FMCG auto on the back foot. And coming to the India-EU deal now, investors and policymakers alike will try to decode what changes in India and European trade landscape. The changes are set to reshape parts of India's import market over the next decade. It's Asian Paints that's under pressure after a disappointing set of numbers in the third quarter. Subdued demand, one-time exceptional loss, low decorative business volumes drag. Vodafone Idea meanwhile trims net loss and sees 3% uptake when it comes to the ARPU. All eyes are going to be on auto major Maruti Suzuki along with TVS Motor, BEL, SBI Life and L&T. Budget session of the Parliament kicks off with President Draupadi Murmu's address at the joint sitting of both the houses. The session will see tabling of economic survey tomorrow and the budget will be presented on Sunday. On to primary markets then, Shadowfax jumps more than 3% after listing at a 9% discount to issue price. Company plans to issue the fresh funds to strengthen its logistics network. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour as well, all while you grab lunch. But let's quickly take a look at what the markets are up to. You do have Nifty as well as Sensex that have paired some of their earlier gains. So Nifty that's up about 80 odd points right now as we speak, and Sensex also up about 200 points. Let's quickly take a look at some of the sectoral gainers as well. So it's actually India Defence, Energy, Oil and Gas, exactly in that order that are leading gains. Metals are shining, and you do have media also in good shape right now. What's not doing so well and is on the back foot when it comes to sectors is FMCG, auto, consumption, pharma and IT, exactly in that order. Quickly, let's also take a look at some of the nifty losers as well. It's actually Tata Consumer that is under pressure, 5.5% downtick coming in on that one. Home First Finance, 4.5% downtick thereabout. Vishal Mega Mart earnings impact also coming in with that 4.5% downtick coming in. Asian Paints down after that mixed weak, largely weak set of numbers. In fact, 4.5% downtick coming in on that particular counter. What's holding up quite well from within the Nifty 50 pack, in fact, is a Hind Copper with that impact coming in when it comes to the continued surge in silver prices. ONGC up about 7.8%, Hindalco, Coal India, Eternal, BEL, as well as Power Grid, some of your top gainers when it comes to the entire Nifty 50 pack. But let's talk to you about the world of commodities now, because that's where the spotlight should be. With that sparkle when it comes to gold prices, gold has managed to eke out yet another record high. Let's talk about the key tailwinds also coming in when it comes to gold prices. Anuj Gupta, who's a commodity expert, joins us on the show now. Mr. Gupta, very good afternoon to you.
Good afternoon.
You know, it is a good afternoon for gold, and one can say that it has been for a while. Let's talk about the key tailwinds here.
See, the safe haven demand is the major, the supportive factor where we have seen that gold and silver prices making a new high, testing a new high. Gold, tested a high of $50 to $85 per ounce, and silver is also tested the new high of $117 per ounce. So the safe haven demand and the weakness in dollar index, which is a major, providing support to the gold and silver prices. However, the geopolitical concerns, tariff concerns are definitely supporting the factor. But yes, the demand, safe haven demand is the major factor where we have seen gold and silver prices attracting customers a lot.
Absolutely. And you know, Mr. Gupta, a couple of more things that we're looking at when it comes to key tailwinds. So there's, of course, central bank buying that I wanted to try and understand a little bit more about. But what do you think about the entire geopolitical risk premium before that? Do you think it's all baked into the pie right now? Or do you think there's more when it comes to geopolitical uncertainty also helping gold prices?
See, geopolitical tension definitely is there, and there is no, not looking that it will, resolve easily because Trump, Mr. Trump is, trying to solve the issues, but not able to, resolve the issues. That's why we have seen the demand is shifting from dollar index to gold and silver. Dollar index almost trading around 96, which is, the 4 months low level. And gold and silver prices making a new high. Another thing is that they are looking to cut more interest rate in US by the Federal Reserve, and they are he's also looking to change the the Federal Reserve chairperson. So that is also impacting a negative on the dollar index. So geopolitical concern is there, and even the political uncertainty is also is there. So both are adding value to the gold and silver prices.
Well, absolutely. And Mr. Gupta, now that you have concerns around independence of the Federal Reserve, do you think that the debasement trade is also taking shape here?
Yeah, definitely. I think he's saying that they will change a candidate as early as possible, and the new candidate will, take a decision on interest rate and keep interest rate lower side. So that will also adding support to the gold prices, and that will create uncertainty between U.S. administration and Federal Reserve. So there is always a question on the Federal Reserve independence, and I'm sure that that will create again a fiasco between U.S. administration and the Federal Reserve.
And like I said earlier also, it's actually the central bank buying that entire piece of the picture is actually quite interesting because last year there were some concerns that, 2025 was a landmark year, yes, for central bank buying, but that was, one-off. But we're seeing in 2026 as well, some of that also continue. Do you see a continuation of this particular trend when it comes to central banks?
See, last year, if you check in December, November, Chinese central banks, adding almost 70 ton of gold in their portfolio, and even small economies also adding the gold and silver in their portfolio. And even we have seen not only the economies, but a few corporates, few industrial metal usage companies are also adding silver in their portfolio, gold in their portfolio, copper in their portfolio, because after the rare metal history, they are adding rare earth metals or industrial metal in the portfolio for the further usage. So the demand of metals, in spite of it will be the precious or base metal, both are adding by the central banks or also by the corporates or by the usage for future perspective, as they are expecting that the demand of industrial metal and the precious metal will increase, and the correction in the dollar index providing support to the gold prices, and that will shifting of the investment also. So the investment demand is there, safe haven demand is there, and also the central banks buying is there.
Well, absolutely. And there's actually more tailwinds than headwinds here, Mr. Gupta. But, when you talk about silver as well, you do have a bunch of brokerages that are actually quite bullish, especially when it comes to the near term. The next 3 months, they're looking at $150 an ounce when it comes to silver prices. Some are even penciling in much higher than that. Is that the kind of sense that you also have when it comes to silver prices?
See, the physical demand is there, industrial demand is there. In spite of, we can say that the demand supply mismatch is there. If we check in last 5 years, the demand of silver is increased by 30-40%, and the supplies are not as per the as per the demand. That's why we have seen a demand supply mismatch. And even you can say that the physical traders, the bullion jewelers, they are keep holding the silver as they are expecting that silver may test $130 or $150 per ounce in the coming time. So the demand for industrial side as well as the investment side is increasing. That's why we have seen the demand of silver is increasing, but supply is not as per the demand. So the demand supply mismatch is the main chunk which working as a supporting factor for the silver.
No, well, absolutely, and that's just about right when it comes to the entire tailwinds picture. There's actually a lot that we're looking at. There's a bunch of uncertainties as well that are yet to unfold when it comes to the year 2026. And Mr. Gupta, before we let you go, one question that is definitely playing on investors' mind is it too late to join this particular party when it comes to gold and silver? What do you think about that as well? And do you think ETFs are a good way to be betting on it, to be stepping into this entire picture?
See, the FOMO of missing out always be in the mind of the investor, because when the gold traded at 1 lakh rupees, that time the FOMO is there, and now it is trading around 1,50,000. The FOMO is there. So the FOMO is always be in the mind in every investor for the gold and silver, because it's a product where people were not looking in last 10 years, but right now they are looking for the investment perspective. So I think the ETF is the product where they can start investing on an initial level. Yes, we are expecting again a positive trend may be seen in gold and silver prices, expecting gold may test $5,300 per ounce and silver may test $130 per ounce. So the still room is there because geopolitical tension is there, central bank buying is there, and the investment demand is there. So all the factors are still positive for the gold and silver prices. So if somebody wants to start investing in gold and silver, they can start investing in a SIP way by using the ETFs.
And staggered manner is also the way to go. Thank you so much, Mr. Gupta, for joining in. And those are some bullish forecasts that you have, almost as bullish as some of the other brokerages as well. Thank you so much for joining us this afternoon. So there you go. That's the entire commodities bit when it comes to gold and silver, and how you can also join the party. It's not too late, like Mr. Gupta said. But speaking on the sidelines of Wings India 2026 Civil Aviation Expo event in Hyderabad, Akasa Air founder and CEO Vinay Dubey speaks to NDTV Profit's Danish Anand. Let's go across and listen in.
I think it's fantastic. I think, in India as a country, we have manufacturing that we can grow into. On the engineering front, we put out like 1.5 million engineers a day. We've started manufacturing parts and pieces of aircraft today for both Boeing and Airbus. And I think it's an amazing MOU. I think it's fantastic news. Adani is a great company. We do a lot of work with them, as you know, across multiple airports. And I couldn't be happier that we've taken this step forward to finally building and assembling an aircraft in India.
So very lastly, the union budget is just a few days away. What are your expectations from the industry point of view?
I think the expectation is a continued focus and investment in the aviation sector. I mean, I think it's widely recognized, not just by states and communities, but by the central government as well, that any kind of transportation link that you build, any kind of transportation infrastructure that you build is the foundation of the economy, right? Whether it's rails, roads, air, or seaports. And so I continue to expect a massive investment in the aviation infrastructure, because this really is an essential infrastructure industry, and I look forward to that, as has been the case in the budget for the past several years.
All right, then that's some interesting commentary, but it's time now for us to slip into a very short break. More news and updates on the other side.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी
Welcome back. Thank you so much for staying tuned in. It's time now to put the spotlight on an unfortunate development. A plane carrying Maharashtra Deputy Chief Minister Ajit Pawar crashed near Baramati while landing. As per the Directorate General of Civil Aviation, all 6 people on board the plane lost their lives in the fatal accident. Jitendra Dikshit, Executive Editor of NDTV, joins in with some more details here. Jitendra, this is a legacy that spans decades. Lots to talk about there. Over to you.
Yeah, that's right. See, this morning we got the unfortunate news of Ajit Pawar's demise. Actually, he had flown from Mumbai. His plane, which is a chartered aircraft, took off from Mumbai Chhatrapati Shivaji International Airport at around 8:10 a.m. and it was about to land at 8:45 a.m. At Baramati Airport. But before landing, the pilot reported low visibility to the air traffic control, and while the pilot was struggling to land, it met with an accident just before the airstrip, a few meters away from the airstrip, and the locals, which our correspondents have spoken to, they told us that they saw the aircraft flying at a very low altitude, and it crashed in few moments, and then there was a big blast and fire broke out. So initial responders were the local villagers who took out a few bodies, and then the civic authorities were called for the rescue. And what we know so far is that all the people on board were brought dead to the Baramati hospital. And now Air Accident Investigation Bureau is conducting an investigation. A 4-member team has left Delhi to reach Baramati. Apart from Air Accident Investigations Bureau, DGCA will also be conducting an inquiry and will be able to know what exactly caused this accident. But the preliminary information suggests that it was due to bad weather, because when this plane was about to land at Baramati Airport, the atmosphere was very cloudy, the weather was not good, and as I said, that the pilot reported to ATC that there was very low visibility. So primarily we believe that the accident happened due to bad weather conditions.
Well, absolutely, and that's something that we're looking at. It's actually a very sad day. It's a big jolt to Maharashtra politics as well. But when it comes to next steps for the NCP, what's the sense that you gather here as well?
That's right. Now, there are 4 big questions after Ajit Pawar's demise. The first question is, who will be the new president of NCP? Will the person will be from somebody from the Pawar family? Will Ajit Pawar's wife Sunetra Pawar will take over the charge, or one of his sons, either Parth Pawar or Jay Pawar, will be taking the charge of president, or somebody outside the Pawar family will be appointed as the president of NCP? There are few names, Praful Patel and Sunil Tatkare. They could be also appointed as the new president of NCP. The second question is, will both NCP merge now? Because just before the civic polls, we heard from both the parties, top leaders from both the parties, including Supriya Sule and Ajit Pawar, were talking of coming together. They were hinting that both the parties are about to merge, and this was substantiated with their alliance in Pune and Pimpri Chinchwad municipal corporations. And apart from that, the Jilla Parishad elections, which are going to take place next week, even for those elections on all 12 Jilla Parishads, both the parties had forged an alliance. So all these things, all these developments give weightage to the speculation that both the parties are going to merge. Then thirdly, third major question is, will the NCP under new leadership continue with the incumbent Mahayuti, or will it switch to Vikas Aghadi? So that is a big question, because just before the municipal corporation elections, we saw that there was a lot of acrimony between Ajit Pawar's NCP and Sharad Pawar's NCP. Ajit Pawar openly spoke about BJP. Even he alleged that BJP was involved in a scam when the party first came to power in Maharashtra in 1995. And there were several bitter statements given by BJP leaders as well against Ajit Pawar. So this has led to a speculation that NCP might leave Mahayuti and switch over to Mahavikas Aghadi. But this, on the other hand, some people say that this is not that easily possible, because Parth Pawar is embroiled in a land scam case, in Pune's land scam case, and if NCP takes that risk, it is likely that Parth Pawar has to go to jail. So that we have to see. Then fourth major question is, if NCP continues with Mahayuti alliance, then who will be the next Deputy Chief Minister? Because NCP President Ajit Pawar was Deputy Chief Minister, he was holding that post. Now, who will be the candidate for DCM's post if NCP continues to be with Mahayuti? So these are four major questions, and I think within next 3-4 days, discussions will start and we will get the answers.
Well, absolutely, and those are answers that are keenly awaited as well. But before we let you go, I quickly wanted to get a sense about his legacy as well, because this is a legacy that spans decades.
Exactly. Ajit Pawar has been in Maharashtra politics. He has been a prominent player of Maharashtra politics since last 4 decades, and he has been known for taking bold decisions. You might remember that rebellion of 2019, when the deliberations were going on between various political parties to form the government. So Ajit Pawar had led an early morning rebellion and took oath as the Deputy Chief Minister. In 2023 as well, he led another rebellion and parted ways from his uncle Sharad Pawar. He was known as a strict disciplinarian. He started his day very early. He started his day around 7 a.m. And people used to queue up outside his residence to meet him with their problems. And he was the one who had mentored many of his leaders, people from his own party. So I think Ajit Pawar has a very strong legacy. He was a very prominent face in Maharashtra politics, and from now onwards, the state politics will take a different shape, I believe.
Well, absolutely, and thank you so much for joining in with all of those answers and all of the questions that this raises when it comes to the NCP's next steps also. It's a comprehensive sense of the next steps, the legacy that Ajit Pawar also leaves behind. That is something that we're looking at right now. All right, then, so as unfortunate as that is, let's try and move on and try and take a look at TVS Motors that was flashing at the bottom of your screens just a while ago. TVS Motor, of course, reported its earnings, and you do have Puneet joining in with the earnings fine print here.
Well, thank you for that. It's the best ever sales, best ever revenue, and best ever profit that the company has reported in this particular quarter. And it's come at a very, very opportune time because it's coming at a very high base as well. So the company has done 37% in terms of revenue growth in this particular quarter. We were working and going on with estimates of about 24% on a standalone basis for the auto entity. So it's beaten the revenue estimates very handsomely. In terms of the EBITDA, that is also up almost 34% in this particular quarter as well. Sorry, the EBITDA is up 51%, and the number that we were working with is 34%, while profits as well have grown in this particular quarter by 52%, coming in at 940 odd crores. Now, the number that we were working with in terms of growth was 44%, 891 crores. So, the estimates were building in the sharp growth in revenue, and that's all led by volume growth as well in this particular quarter of almost 27%, 15.4 lakh vehicles that they've sold in quarter 3. But this shows the operational efficiency because you're seeing the operating leverage play out as well to show a 50% growth in profits for TVS Motor in this particular quarter. And this also includes a 40 crore impact of the labor code in quarter 3 as well. So barring that, it would have been another key expectations that were met and beaten handsomely by TVS. And you're seeing that sharp reaction on the stock now in terms of results, but a strong set of numbers. Maruti also is awaited very shortly.
Well, absolutely, and thank you so much, Puneet, for joining us with that update there. The stock, as you can see, is trading near the day's high. That's TVS Motor for you after that strong set of numbers in the third quarter. But tell you what, with that, that's all the time that we actually have on the show for now. Thank you so much for tuning in.
Most critical is with the low base of earnings where we stand, our earnings should start hitting early double digit. And that is what I think will give you all the drivers for returns in the market. See, budget, for example, a lot of things have always been done even outside the budget to support growth, right? And there is very little which is really left in the budget to really enable, it's more possibly easing more policy and things like that, but there is very little really led to give a push because there's always been a large support to infra. GST has already come about, which obviously has impacts on tax collections, but I think is a structural positive for India. So I think the most important outcome, yes, obviously a year out or so with geopolitical environment normalizes and global growth recovers, which enables our export to recover, it's a big positive or an extra positive.
I think not much is expected except people only looking about the changes that will happen on the long-term capital gain. If anything, that is the only thing which the market is slightly watching closely. I think budget is largely become a non-event because throughout the year government has taken not many initiatives. So I don't expect that budget will be a game changer that the way it used to happen in the past is one of the event. And last 2 years I'm saying that it comes closer to that. You have some noise happening on the certain stocks, assuming certain announcement will come. I think there are enough announcement which is there. I don't see that I will like to conclude too much except this the taxation aspect which I talked about. I don't think in market is expecting much from the budget also because government is putting efforts in every direction. So I don't think one should be only dependent on the budget. So it's still one event which will sail through and life will be normal in the first week of February.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop? So I get more. What will happen? Union Budget 2026 on NDTV Network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबान पे बस एक ही नाम, यो यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो यो हनी सिंह, दिस इज माय स्टोरी।
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volume action. But first, let's see what's on the show today, what's on the Small Cap Buzzers show today. Firstly, we'll be speaking with the management of Gopal Snacks. Now, this is because the company's profit has jumped nearly 191% on a YOY basis, and this is largely because the base quarter had higher raw material costs, which was not the thing in this quarter, that is the third quarter of FY26. But what's the way forward is something that we'll be knowing from the management of Gopal Snacks. Post that, a bunch of stocks that have been reacting on the back of earnings. Firstly, Mahindra Logistics. The company reported profit for the first time after 11 consecutive quarters of losses. So largely a turnaround quarter coming in from Mahindra Logistics. And if you look at the volumes, nearly 100 times its 20-day average. The second stock on the list will be RPG Life Science. Now, profit has dropped nearly 37% on a YOY basis, and this is the lowest profit number that the company has reported in the last 5 quarters. So what led to this is something that Varsha will be letting us know. For Landmark Cars, that stock has been gaining for the second consecutive session. Volumes are nearly 6 times its 20-day average. What's the reason behind this is something that we'll get to know on the show today. And lastly, we'll be also discussing about Spandana Spurti. Now, if you look at the commentary that has come in from the management, it's quite strong. The company is looking at its AUM to grow at a CAGR of nearly 25 to 30%. And if you look at the MFI segment, which is the core segment for Spandana Spurti, that also seems to be largely stabilized in the third quarter of FY26. Now, if you look at the benchmark index, that is the Nifty 50, that has been gaining for the second consecutive session. In fact, the index has moved above its 200 DMA in trade today. Among the sectoral indices is the Nifty Energy, which is the top sectoral gainer in trade, largely led by the PSU oil and gas companies, and the Nifty FMCG, that's the top sectoral loser. Largely, the drag is led by Tata Consumers, Asian Paints, and Britannia Industries. And if you look at the Nifty Small Cap Index, that's up nearly 1.9% in trade. And this is the biggest move that we have seen for the Small Cap Index since May 2025. So what are the stocks that have been gaining in the small cap stocks? Let's get in Mahima with all those details.
Right, Amit. So a lot of counters moving in the small cap space. On the positive side, you have something like an Infobeam Tech, which is up 20%, locked in upper circuit. Something like an STL Network, which is also up 16%. Lot of footwear names, even in the small cap space, buzzing very well. Something like a Mirza International, Liberty Shoes. Mirza is up 15 odd%. Liberty is up 14 odd%. You have something like a Mahindra Logistics, which is also up 14%. Avental up 10%. But on the flip side, you have counters like today's listing Shadowfax, which is down 10% as we speak. RPG Life as Somit discussed, down 8% as well. CRM Silk Mills also down by about 5 odd%. TVS Electronics down 4%. Dhampur Bio Organics, another day of pressure, down by about 3 odd%. And something like a Mangal Electrical is also down by about 2 odd%. So all of these counters, in the small cap space that are buzzing, and that's something that should be on your radar. But moving on and talking about, Gopal Snacks. Overall, if you take a look at the third quarter numbers, it's been a steady quarter, of course. There has been sharp recovery in terms of where the margins stand. And even in terms of, overall performance with regards to how EBITDA has grown, how, profits have grown, it's been a good quarter. Now, to discuss as to how the quarter has gone by, we are joined by Rigan, who's the Chief Financial Officer of Gopal Snacks, joining us now. Rigan, thank you so much, first of all, for taking out the time and speaking with us at NDTV Profit. My first question to you is with regards to where the margins stand. There's a huge jump that we've seen in margins this quarter. How sustainable is that, is my first question. And overall, from a one-year perspective, where do you expect the margins to stabilize at? What is the range of margin guidance that you would give?
Thank you for having me on this show. See, our margins, if we compare year-on-year basis, there has been sharp improvement in terms of raw material prices. So if I take you 1 year back, there was an increase in the palm oil duty in the last year. So that hit us very badly in the last year quarter. That was Q3 of last year. This year, these prices have stabilized. We were able to also pass on to the consumers over a period of time. And in the current quarter, we have started our Murasa Namkeen facility also. So that has also helped us to improve the supply chain facilities or supply chain issues which were there post fire of our Rajkot factory. And we were able to also reduce the trade discounts in the form of which has improved our gross margins as well as EBITDA.
Sir, could you give us some trends on what have been the raw material prices of late, and say for the fourth quarter, are you expecting any impact on margins, any sharp movement that you have seen?
See, in the fourth quarter, currently, the major raw material in our basket is chana. That is almost stabilized, as in line with the Q3 of the current financial year. So that is not going anywhere. Palm oil, yes, there has been increase somewhere in the last week, but since we are fully booked for Q4, so we are expecting our margins to be in the similar range of Q3.
Okay. Rigan, with regards to the raw material prices, this quarter, of course, has seen stabilization, and that's been the case last quarter as well. But earlier, because of raw material price hikes, you would have taken grammage cuts. Just wanted to understand, how has that panned out this quarter? Were you able to increase some of the grammages? Have you passed it on to the consumer? Or have you taken any grammage cuts? What has happened this quarter?
This quarter, yes, post the GST reduction from 12% to 5%, we have passed on this benefits to the consumer. So this quarter, whatever GST benefit was there or the reduction of the GST was there, that we have passed on to the consumer.
Okay, and with regards to where volume growth stands, what is that number looking like this quarter? You've seen overall revenue growth at almost that 2% mark, but volume growth specifically in your core segments?
Volume growth overall in terms of quarter on quarter, it has been around 5%, and year on year, it is close to around 4%.
Right. The Mudasa capacity, I believe the commissioning of the same was delayed. Is it fully commissioned right now, and what is the kind of incremental revenue one can expect?
Mudasa facility, yes, there was some delay on account of some uneven monsoon rains coming in. But that has been now fully stabilized. From 1st of December, that plant has commissioned fully, and probably over the next financial year, we would be seeing roughly around 50 to 60 crores incremental coming from that Mudasa facility.
Okay. Just help me understand as to what your capacity utilization is at right now, considering all your facilities, and what is the aim like to take the capacity utilization to in the next 1 year?
Currently, our capacity utilization is around 40 to 42%. that we are aiming in for the next couple of years to be close to around 50 to 52%.
All right, okay. The other aspect, Regan, is that, recently a very big major did acquire a gourmet snacking brand. A lot of, Gen Zs that we talk to are moving towards healthier choice options, are moving towards gourmet snacking. What is your view with regards to this? Of course, you cater to a different audience, but would you be looking to cater this kind of audience as well going forward in terms of product expansion?
In terms of product expansion, we are exploring various options available in the market, whether that can be through the inorganic route. So wherever our product basket, like currently, we might look out for something in the sweet category, or we might look out something wherever our geographical footprints are very minimal. So those kind of targets which we are looking in. In terms of healthy snacks, we are not looking much into that.
Right. So I believe that post the second quarter, you did refrain from giving any sort of guidance. But given the fact that now raw material prices are stable, your new plant has been commissioned, and volume growth is also looking quite good. Any guidance that you could share, say for the next financial year at least?
Yes. So now, since our post-Modasa commissioning, we are now internal workings we have done. And probably for the next couple of years, we are looking at 22 to 2300 kind of a number with an EBITDA margin for about 10%.
Interesting. Where is this growth coming from? Because from what I understand is that, overall, your core markets have not done that well as compared to other states. The growth in other states has been quite significant. Do you think the growth in your core markets or focus markets has peaked and you'll be exploring more geographies? Or where is this growth going to come from?
So growth is, yes, other states, since it might show higher in the percent because of the lower base, but we have shown, if you look at our current quarter's number, we have moved ahead in terms of core as well as non-core markets. And definitely for the next financial year or for the couple of financial years, if we look at Gujarat state, which is our core state, we would be growing around 15 to 20%. And in terms of other states, that is non-core states, we would be growing around 30 to 35%.
And you said 2,000 to 2,300 in next how many years?
I said 22 to 2,300 crores in another 2 years.
Okay, all right, okay, another 2 years. And 10% margins is what you're looking at?
About 10%.
All right, okay. And what is the kind of growth CAGR that you're looking at your bottom line for, your net profit?
So net profit, definitely, it should, if I look at in absolute value, it should grow around 70 to 80% in a couple of years.
Right. Okay. All right. Regan, thank you so much for giving us those details and of course helping us answer all those questions so candidly and taking out the time and speaking with us at NDTV Profit. All right, we're also joined by Prashant Tapse, Senior VP Research Analyst at Mehta Equities, joining us now. Prashant, hi. Very good afternoon to you. Your view with regards to Gopal Snacks, even BKG came out with its earnings. Overall, how are you seeing both of these numbers? And GST most certainly has done well in terms of where demand stands, but your view going forward for both of these companies, and which one would be your pick?
Hi, Mahima. Good afternoon. I think they got all the benefits in this financial year. They did a very bad year for FY25, but FY26 has been turned very positive. If you see first quarter with EBITDA margin of single 1 digit, and then slowly, gradually they have done almost 8% in the last Q3 earnings. I think 2-3 factors again, the raw material prices have helped them to get back to their normalized EBITDA margins, and still there is a target of 10 to 12% going forward. But I think volume wise, I think there is a lot of pressure going forward because they don't have any pan-India presence. They are very much focused on the western side of the country. So that will be some kind of pressure for the advantage for the other companies, but then negative for this company. But on the valuation terms, again, considering the Q3 earnings, also understanding the margins will remain same for Q4. So markets are still giving a very high valuation, almost trading at 100p and price to book valuation of almost 12 times. So any fresh position should be avoided at this point of time. I think we have to wait and watch for the Q4 earnings also. If they manage to get some extra alpha on the EBITDA margins, 8 plus something, then there can be some kind of comfort level to have a fresh position.
So wait and watch is the call coming in when it comes to Gopal Snacks. Now, before we move on to our next small cap stock, let's get in Sharat to understand what's been buzzing in the F&O segment.
Well, interestingly, we have seen what up move was there
in the early part of the trade. Now that has corrected, but Sensex is still in the green as well. Earnings specific moves are definitely there. BL ahead of the earnings, stock is up 3%, and Adani group of stocks also holding the fort for the second straight day. What's not working is definitely Asian Paints. For second straight day, there's a drag coming in. Also consumption names HUL and Maruti. Also, we are seeing some kind of a sell-off definitely happening. And let's look at the Bankex, how they are functioning. Largely, we see that the ICICI Bank and HDFC Bank are doing decently in trade. Kotak Mahindra Bank and Yes Bank also in the green. But it's a very important to say it's a stock-specific market, and a strong long build-up is coming in these counters. And of course, if you could just show the strong long build-up stocks. So these stocks which will be getting you in, as far as those stocks includes ONGC and Oil India. Keep them in mind. And if you look at the short covering candidates, also there are certain important names, and they also include most of these stocks are there in the financial space. This also includes Spandana Spurti as well. But nevertheless, this is the update coming in the FNO space, and the options data is suggesting a range bound move can be there. Remember, tomorrow is the first expiry as well.
Sharad, while you're with us, Spandana Spurti is one counter that has been in focus. It's among one of the top gainers in cash stocks, and this is largely because the guidance that had come in from the management side when it comes to the AUM growth is quite strong. In fact, they're also expecting their MFI segment to stabilize. Can you just give us more details on why the stock has been gaining and what was the strong commentary coming in?
Well, yes, Somit, looking at the numbers, Spandana, it looked actually optically a weak set of numbers, but the losses, that's where, they have actually come off the trade. And also to point out the management commentary on the AUM growth, that has been strong. The issues which were there in the MFI space, that's what has actually bottomed out, and that's what the management guidance was very strong. Look at that. The key highlights includes AUM getting contracted with the elevated write-offs. That was one of the key concerns in the market. A gradual improvement coming in the assets quality, and also if you look at the other key highlights, these are the ones which are shown in the screen. But what's actually aiding the markets or the stock itself, I would like to give in this important commentary, is a 25 to 30% AUM CAGR growth coming in, and also MFI segment that has largely stabilized. That's a very important point. I think we and Somit had discussed this. The management has indicated most of the legacy write-offs are over. That means a new book will come in, and when new book comes in, you'll have yields expected to be on the higher side as well, and that's what we are talking about. And importantly, the medium-term AUM growth is still at 25 to 30%. So commentary of management forward-looking is very strong.
Right. Thank you, Sharad, for that. Prashant, did you go through the results of Spandana Spurti? Any signs of recovery that you see, and post this run-up that we have seen in trade today, would it still be a good time to enter this counter?
I think no, not a good time to enter this point of time. I think the gross NPAs and the net NPAs are still elevated. Almost like last 9 months, when we compare, it is almost like 4% plus in terms of GNP, and net NPA would be almost like double from last 9 months to 9 months, from 0.48% to 0.98%. So I'm still having a lot of concern with respect to the unsecured loan book, which they are growing very fast. So there can be some kind of concern in these current markets. And plus, again, the AUM growth, what they're expecting to grow by 20-25%, I doubt, because last 9 months to 9 months, if you compare, there is a degrowth seen in the AUM growth. So management is too optimistic in this sector, but I think we need to better watch for more correction in terms of their valuations.
Right, okay, so that's the view coming in with regards to where Spandana Spurti is concerned. But the next counter that we're putting spotlight on is RPG Life Sciences. The company reported a weak third quarter with profitability coming under pressure due to higher material and employee costs. Varsha, who tracks this, is joining us with more details. Varsha?
Yes, so overall a weak set of numbers, lot of factors which are actually not working for the company. First is the margin impact that you're seeing is led by the higher cost of material, which was 36% versus 32% last year. This is with respect to sales. Then if you see, the increase in employee costs also led to EBITDA impact, and the company saw lowest profits in the last 5 quarters, and exceptional item also impacted profits for the company. But let's talk about the 9 months FY26 update and what's the company is being to. The domestic formulation, if you see, contributed 71% to the overall business, and the new products traction is improving, which is led by new launches. Talking about the international formulation, there was some weakness in the international business, and one of the reasons why you're seeing the impact in the overall business, which contributes almost 18% to the overall revenue. While API, if you see, contributed 11% to total sales, and growth was impacted due to fire incident in one of the manufacturing blocks, which is on the restoration side, and management is expecting this to get solved by March 2026. Onto the outlook, there are a number of projects which are underway for immunosuppressants portfolio for rupees 200 crores, and also they're focusing on the new geographies, new launches and new pipeline, and they have a target to take one of their brands, that is Nephrosi, into 100 crore band in the medium term. So overall, yes, a weak set of numbers, but management is expecting to come back in Q4 and in overall FY26.
Varsha, thank you so much for getting us those details. The stock down 8% as we speak. Prashant, your quick view on RPG Life?
I think considering the ratios of this company with respect to ROCs and ROEs, I think they are very healthy, almost like upper side of 25% to 32%. So considering these numbers, I think we need to give them a better time for at least a quarter to come back with their good numbers going forward. So I'm very much positive in their business outlook, but I think this is an opportunity for new fresh investors to look at this company.
Right. Landmark Cars is another counter that remains in focus. Second straight day of gains coming in on the back of strong volumes. Does it have anything related to the UK FTA? Let's get in, not UK, sorry, EU FTA. Let's get in Puneet with more details.
Well, thank you for that. Stocks are 4% as we speak and up 15% since January 23rd essentially. So in the last 4 to 5 trading session, it's been an upbeat for Landmark Cars. It started off with the quarterly update. It did get some respite, but the India-EU FTA is a big key update for Landmark, because a lot of imports from EU of Mercedes is one of the key beneficiaries. Now, if you look at what's on the cars, has been that imports of cheaper CBUs, and that's largely going to be a big benefit essentially for Landmark Cars. The other aspect is that roughly the import duty, which used to be between 70 to 110%, will be brought down to 40% initially and then 10%. So this will help incremental demand. Lastly, I just want to talk about Mercedes, which is a key client for Landmark Cars. Now, it operates roughly 24 outlets of Mercedes in India specifically. 16.5%, or almost 16 out of all 100 Mercedes cars sold in India are sold via Landmark. So if they are able to access the high-end luxury models at a cheaper import duty, this will benefit Landmark Cars as well. Mercedes almost contributes 39% of the company's overall revenue as well. So you have to keep in mind that this is a key brand, and while they have diversified with other brands like M&M, MG as well as Kia, Mercedes does drive the incremental margins in terms of both the actual sales as well as for the serviceability portfolio as well. So these are good times for the company. Quarterly earnings will be something to watch in terms of commentary going forward.
Right, sentimentally positive coming in the India-EU FTA. Prashant, how are you looking at this counter Landmark Cars? Do you really think that this could actually turn into any financial benefit for the counter?
I think too early to say financial benefit. I think if Mercedes wants to explore India as an opportunity after this India-EU deal, so I think Landmark Car will get some kind of first mover advantage with respect to expanding to the showrooms as well as sales propositions and the strategies what they're going to do in India. So I think that can very well help for Landmark Car at this point of time. But again, how good the financial benefit could be turned out, I think we have to wait and watch for management comments in the quarterly earnings show.
All right, okay, so that's the view coming in on Landmark Cars. But the next counter that we're looking at is Mahindra Logistics, that has reported a profit after 11 consecutive quarters of losses. Has delivered strong set of Q3 numbers. Revenue grew nearly 19% year on year. Jasmeet joins us with all the details. Jasmeet, the stock is up 13%. Is that justified?
Well, right, thank you for that. As rightly said, yes, the company has reported the profit after 11 quarters of losses, and the buzz in stock is justified. If you look at the overall margins, even the margins expanded this particular quarter. Now, here are the key takeaways on the particular result. We see that the company has set a strong set of numbers with a double-digit growth in the revenue. Further, the cost management and optimization will help the company to expand the margins going forward. Further, we also know that the business mix has shifted towards a higher-end pricing model, which has helped the company to gain the overall top line and margin expansion. Further, the company has also focused on the cost discipline optimization which they have been focusing over last few years and which has finally come to the play, which has helped the company to increase the bottom line and also expand the EBITDA margins. In terms of the overall, what worked in this particular quarter is firstly the direct to consumer and the omnichannel demand has stayed strong. Despite infrastructure challenges the company has been seeing over past few quarters, the company has reportedly gained the top line despite the challenges. Further, they also make a note that the company focused on the e-commerce, where they see that e-commerce is growing in a steady pace, which has helped the company grow. Further, the management also exits the low margin projects and focusing on the high margin projects, which has helped the overall momentum for the particular stock. If you look at the overall stock performance, the stock is a 15% odd, but over a year, the stock is up about 4%, while the 4% gain comes in after today's up moves. So basically, the stock has given negative returns over the last 1 year, but it's a wait and watch of how this particular stock turns around going forward in coming quarters.
All right. Jasmeet, thank you so much for bringing us those details with regards to where Mahindra Logistics is concerned. Prashant, would you be a buyer at this moment for this counter?
I think yes, it will be in my watch list. If the company really has done very well in the Q3 earnings, and I will wait and watch for Q4 earnings as well. So if they are turning out to be profitable even at Q4, I think that would be a right time to again relook into this business. I think the supply chain management expertise is in some kind of EBITDA positive margins going forward. Very positive on the segments which they are focusing on in terms of e-commerce, in terms of pharmaceuticals, in terms of consumer goods. I think there is a turnaround story which has been building out at this point of time.
All right, the stock is down 5% in the past 12 months, but today seeing an uptick of almost 14% and has held that 14% mark throughout the day. Prashant, with that, thank you so much for taking out the time and giving us your insights with regards to all of these small cap buzzers that we discussed on the show today. We're completely out of time on this edition of Small Cap Buzzers, but do stay tuned. Ask Profit up next.
February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey sing. This is my story.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it.
Hello and welcome. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vacharjani. And over the next half an hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that's flashing on the top of your screen. You can also call us, speak to us directly, and solve your stock-related queries as well. Before we do that and a lot more, it is very important that we look at how the markets are doing. Some key movers in the Nifty 50 firstly to start us off with, because you're seeing at one end where the oil marketing companies are doing well, the exploration companies are also doing well. So heat map, if you can pull up on the Nifty 50, will show you that perspective. Oil India was up in almost 5% in the trading session, and that momentum has continued to do so. ONGC is up 7% as we speak, while on the losing side, you've got Asian Paints that's continuing that momentum on the downtick. And that seems to be the picture of the markets. A lot of earnings that will be in focus today, especially for the Nifty 50. BL, Maruti Suzuki, amongst others, as well as are some of those counters that will be in focus. And Larsen, of course, will be in focus today on the back of earnings. If you look at the sectoral heat map, it will give you that picture as well. And in terms of sectors, which ones are buzzing in trade today, you saw the India Defence Fund do very well. FMCG could be the only black spot in that sense of the market today, and a lot of reactions in terms of the results that have not done well or disappointed the street in that sense, and seems to be the flavor of the markets right now. But Mahima, in terms of the broader market, what are you picking up?
I think, it's the positivity is being cheered on the broader end of spectrum. You have your mid-cap 150, which is up 1% as we speak, almost at its day's high point. Your small-cap 250 is also gaining by about 1.5%. So both the mid-cap as well as the small-cap 250 doing very well after a really long time. So I think, that's on a positive note. But if we can quickly pull up the BSE 500 and see as to what are the counters that are, looking good at the broader end of spectrum. And of course, then also see as to how the advanced decline ratio is panning out. You have counters like CSB Bank, which is tanking a lot, and this is on the back of its numbers that have come out. But something like a Sterlite Tech is locked in upper circuit. Red Tape up 15%. Mahindra Logistics, a small cap company, doing fairly well on the back of its numbers. Tejas is also up 13.8%. Hindustan Copper continues to rally. Data Patterns, Oil India, Electra, Green Tech, some counters seeing that gain of about 8 to 11%. But like I said, CSB Bank down 11% on the back of its numbers. And, as the numbers were released, we've seen the stock tank. Tata Consumer, a Nifty 50 counter on that list, down 5%. Home First Financing, profit booking. Radico Khaitan, Cartrade Tech, India Cements, Indocount, as well as something like a Hindware, down anywhere between that 3 to 5% mark. But you know what's interesting? On the losing side, except for one or two names, you have counters, down by about 3 to 4%. But on the flip side, you have all of these counters which are gaining in that range of 7 to 19%, and which is something that we are very happy seeing on the screen. But moving on, let's welcome in our guest for the day. We have Lancelot Dikuna, CIO ValueX Wealth Connect LLP, joining us now. And with him, we will be also joined by Akshay P. Bhagwat, Senior VP at JM Financial. Lancelot, I'll take up the first question, and this is from Sahib, who's writing us from this is from Sujata, who's writing us from Bengaluru, and she's asking about Hindustan Zinc. She wants to know whether she can still participate in the rally that we've seen on this counter on account of silver prices rising. Today only, I think I saw a Citi report which has now given a target of 150 for silver. But would you right now be a buyer for Hindustan Zinc?
So, Hindustan Zinc has already risen significantly over the last couple of, months. And if you look at the, where the valuations are, I think it's still trading at an expensive valuation, closer to 30 times earnings. And even considering the fact that there may be some growth, there will obviously be some growth, being that since they're the third largest silver producer globally with an annual capacity of about 800 metric tons. It will still, it still is expensive, and any, negative surprise in terms of output production that could, be a problem for the company, then you could see it re-rating back significantly on the downside. So the risk-reward ratio at this point of time is not really favorable for an investment into Hindustan Zinc at this time.
Got the view, Lancelot. But the next question that's coming in is on Oil India. It's a space that is definitely in focus today. The rise in Brent crude prices helping out the explorers, basically. So the question from Suvena here from Noida is quite pertinent at this point of time. She's holding 300 shares at 476 rupees per share. Stocks up 9% today. Seems like a recent buy. It's the price at bought at 476 with the stock trading at 491, and she's mentioning that she's been holding on for some time now and seeing the first sign essentially of being in the green. But Lancelot, given the news today, would you suggest Suvina to continue to holding this counter?
Yeah, I think from a longer term valuation perspective, if you look at the fact that crude prices have sort of eased up and they have started to, they will generate higher returns because they are one of the few companies who will benefit from the rising crude prices. But at the same time, these are cyclical industries. Crude prices can change based on various geopolitical factors, and hence one should be very careful in terms of exiting at the right time, because you can exit now and always wait for an opportunity to correct and then accumulate the stock again. So I think the fact is that since it has risen quite a bit and even probably higher than most of the long-term averages, one can look at maybe booking profits when you are in profits, or even exiting it and then wait for a correction to add to the stock again.
All right, okay, so that's the view coming in on Oil India. The next question that we have is from Vishal, who's writing us from Dubai. He's asking about Vatek Vabag. He's holding 120 shares at the levels of 909 and wants to know if you can continue to hold this from a long-term perspective or not. Lancelot, your view?
So I think, while the segment of business that this company is in is an attractive segment because it involves, the water purification plants that they are providing. But if you look at profitability in all these projects comes from efficient, efficient execution of the projects and a rising order book. So at this point of time, when you look at the order book and the fact that their growth in terms of execution is also slowing down a bit. I think when you consider the valuations, it is a little bit on the expensive side. So one should probably wait for a correction in the price before one can adding on to the stock.
But the important result there on the bottom of the screen, Bharat Electronics have come out with their earnings. Stocks flying as we speak. Revenue up 23% at 7,122 crores. We were working with a number of 6,548 crores. So the number is definitely a big beat there. EBITDA coming in at 2,118 crores. Roughly estimates were of 1,750 to 1,800 crores. So another big beat there, and that's why the subsequent margins at 29.7% are really strong, and at almost a 21% growth in profits at 1,590 crores. A lot of estimates baking in 1,400 crores. So definitely a big beat on all four parameters. The key thing was to watch in terms of timelines for the QRSAM orders, and that will be key because a total order book positioning of almost 57,000 crores is what's expected for FY26. But QRSAM forms roughly 30,000 crores of that, Mahima. That's
the order book position for 1st Jan has also come in at that 73,000 odd crores is a big order size that we're looking at. But like Puneet said, for all of these companies, execution is the queue, and we'll have to wait and watch out for as to how that pans. But Lancelot, your quick view on Bharat Electronics?
Well, I think it's a very positive number, and it's probably going to see a long road ahead for its growth, because the kind of orders that the government is announcing on the front of defense, a lot of it will go to high-tech areas. So I think it's definitely positive for the stock. And if one is already invested, one should be a long-term investor in this stock. Maybe if you are looking at booking profits, then you should wait for a while. And if a person hasn't invested, wait for any kind of correction before adding on to the stock.
Got that view, Lancelot. So definitely that some clarity on what's the guidance for FY26 was expected to be 15%. If it gets upwardly revised, will be the other key aspect and kicker in the stock. But let's go across to a caller for today now. It's coming in from Andhra Pradesh, and Ashok has a stock query for us. Ashok, very good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon, Puneet and Mahima.
Good afternoon, Ashok. Go ahead.
I would like to have your advice on PG Electroplast.
Okay.
The stock has been corrected, very much. And also on 2nd February, their Q3 results are due. So in view of this stock price and also upcoming results, is this the right time to take a position in PG Electroplast for a period of 1 year?
Got it, Ashok. And, very pertinent question. Definitely a stock that's seen correction. But Lancelot, would you recommend that trade getting into PG Electroplast? It's coming at a very interesting time when a lot of correction across EMS players. But for PG, what would you recommend for Ashok?
So, when you look at the valuations of PG Electroplast, even though it has corrected, it still is trading at almost 60 times earnings. And, they have an EPS growth, which is expected to be about 10 to 15% year on year. So when you look at the valuations, it is looking at as an expensive opportunity. It's an expensive opportunity. So one should probably wait out, and if it does correct, then look at investing into the stock.
All right, so that's the view coming in on PG Electroplast. I think we've got our next caller as well. Mohan is calling us from Bengaluru. Mohan, hi, a very good morning to you. Good afternoon to you. How can we help you today? I'm still used to the morning Ask Profit edition. But Mohan, how can we help you today?
Yeah, very good afternoon, madam. Actually, I purchased Fragility shares at the price of 55.20. Can I hold, or can I exit? Because I'm in like a negative side, so.
Okay, got your point, Mohan. I'll take this up with Akshay. Akshay, what are the charts indicating for something like a Sagility India? Enough data?
Yeah, data is good enough, but if I see technically, it's more of a neutral setup. There is a strong resistance building at the levels of 57, which is seen from the last 8 to 10 months. So, from for long-term investor, it continues to be stay invested. There is a chance the resistance may break soon. 48 is the immediate support you need to consider, below which you need to maintain a stop loss as a risk management tool. In case whenever the resistance of 58 breaches, that's a new momentum point where the stock will see a strong breakout, and possibly targets of 75 to 90 may open up in it.
Now, another big earnings flashing on the bottom of your screen, Maruti Suzuki was one, and since the morning, it has been in focus on the back of any import tariff increase from India. So the exports for Maruti was something that we'll continue to talk about, but revenue at 49,892 crores is what that number has come in. Broadly, beating estimates in this number, definitely. The operating leverage, and that's something that we saw actually in TVS as well, where the number for both revenue was very strong as well. EBITDA is something that we'll just get those numbers as well, but on net profit at 3,700 odd crores, it's a miss. Now it is a miss, and largely I'm looking at if there is any exceptional item, because we saw the labor code impact specifically for TVS as well. So that could be one of the key reasons, but also in terms of higher raw material costs, because this was a quarter where aluminium, copper, both were going to impact the results. So you do see that miss actually coming in on the EBITDA margins at almost 11.2%. It is a miss for Maruti Suzuki on margins, because the expectation was of 11.7%. So it's definitely a miss there. While volumes have been quite strong in this particular quarter, it seems to be that the EBITDA margin has come in below the estimates. You have to understand, because this is the first quarter where the SUV share actually is lower compared to the same time last year because of the revival in entry-level segment. So you could have seen multiple key facets which could have impacted the margins, but you see that stock reacting negatively, that big downtake coming in now. From the morning, what I was actually talking about is that South Africa could possibly increase the import tariff from 25% to 50% on all cars they import, and India has a 22% share, with Maruti alone having 30% of their exports coming in from South Africa itself. So there is multiple impacts that we are seeing on this one. But Lancelot very quickly, because the margin number is something that the street's not liking one bit. Stock's down almost 5% now. Any quick view that I can get from you on this one?
So I think, while margins are also are under pressure because commodity prices continuously rise. I think you've seen it in almost all the commodities that are there, whether it's copper, silver, everywhere the prices have been moving up. So I think taking an increase in the prices of the vehicles that Maruti is selling in the market without impacting demand is going to be a key for it to maintain its margins. Otherwise, margins are definitely going to get impacted. And we're seeing that re-rate, because even at the current level, it's still trading at 30 times earnings. So, which is a little expensive for Maruti. So, yes, there could be some more downside, but over a longer term period, if you can accumulate at lower price multiples, I think Maruti is going to continue to outperform over a longer period of time.
Just one quick aspect to point out as well, because in terms of the number for employee benefit expenses, that has risen up quite sharply in this quarter at 2,692 crores. When you compare that on a YY basis, that was 1,779 crores. So it is a material increase. You have to realize that there's also been addition of capacity that has come in. So that new aspect is also impacting and having an impact on in terms of the profitability as well. But overall, we continue to have and monitor this particular number. Margins, yet again, viewers, it is a make or break for auto companies in this particular quarter, because demand side, it did get a lot of boost and stability as well. So we continue to get you more perspective as and when we can, but that one-time impact, which I was talking about, that 594 crores on the labor code impact, that's been one of the key aspects, which is having that drag, exactly that 400 to 500 crore difference. So probably, if the management can have some more, in terms of commentary, will be something to watch, because this was something that we're seeing an impact across players. It was almost 40 crores for TVS, and all the IT companies, FMCG companies also reporting that. But Akshay, on the charts, I know it's a very volatile chart right now, but Maruti has seen a lot of correction. And of course, welcome to the show. From almost that high of 16,000, 16,500, is there anything that you can offer on the charts for Maruti right now?
Yeah, so initially, yes, there is a lot of volatility, the immediate reaction to the results. But what I see on the chart says that there is a 200-day exponential moving average around the levels of 14,500. 200-day exponential moving averages are known to provide trading supports for the market. So in all probabilities, there is a very high chance that the stock will try to attempt some pullback from the current levels, irrespective of the numbers. So roughly at this time, although it's a bit volatile out there, roughly 14,200, 14,300 can be concluded as a support. Downside licks capped, and there is a good chance there might be a trading pullback from the EMA, which I mentioned. And in case that happens, we're looking for a slight bounce back till 15,400.
And definitely, got the view, Akshay, and thank you for that. You have to realize that 12% is something that 11.8, 12% was the margin that you were expecting. So barring that 594 crore impact, and our colleague Somit helping us with that number of 12.4% margins excluding one-time impact. So I think that will be something that could offer respite to a stock that has corrected, but the larger issue will be, in my opinion, on the South Africa impact, because Maruti has prided itself on a target of 4 lakh vehicles to be exported in FY26. Now, if there's any deviation on that impact, will be something to watch. But we also have Mayuresh Joshi of MarketSmith India joining in now. Mayuresh, good afternoon. Thank you so much for joining in on this very short notice for Maruti Suzuki. But specifically, what do you make of the numbers? Because we are seeing a miss in terms of margins coming in at 11.2%. We're also seeing a subsequent miss on profits as well. Your first cut essentially of the numbers.
No, I think below estimates, and that is the whole construct. So I think how the volumes will play out going forward, looking at GST taxation is going to be extremely critical. But margins have been a tad bit below expectations. Going forward, I think what really transpires in terms of the EU deal and what kind of an implied effect does it have on auto numbers and volumes is also to be watched out.
In terms of Mayuresh, because the one-time impact has hit definitely the profitability, 594 crores of a labor code impact. But beyond that, also it does seem to be a miss, right, in terms of the margins as well. Possibly commodity costs is what your estimate goes by as well.
In all likelihood, yes, and that would likely continue with the exponential rise that we've seen across the metal prices, base metals in particular, which will obviously have an impact going into Q4 as well. So I think a part impact of that, and partially, I think, yes, the one-time labor cost has hit the numbers as well.
Also, Mayuresh, one more key point, which was on employee benefit expenses as well, because in this quarter, it's coming at 2,692 crores. On a YY basis, it was almost at 1,779 crores. So we're almost seeing an 800 to 900 crore increase. Now, I know they've had some capacity additions in this particular year, and hence the YY number. But even on a quarterly basis, it's up at 2,692 crore versus 2,000 crores. So anything that you can offer on this? Because while the capacity could explain this, that's a very big jump in employee expenses.
Maybe we'll have to look at that. So not really sure on that. So I think we'll have to wait for the final details to come.
And also on finally, because we have that news update coming in, Mayuresh, of that import duty going up in South Africa to almost 50%. Any views that you have on that as well? Because it could have some impact on Maruti, which almost gets 30% of its exports from South Africa.
Right. No, I think that will have an impact as well. So let's see how this entire stuff goes through again.
Got it. And as we speak, a very, very could say surprising, could say crucial, getting in all the adjectives, because we've almost seen a 5% downtick on the stock and a revival yet. So maybe Street giving it some respite on the one-time impact, barring which 12.4% margins would be a big beat. But multiple questions there, right? Because in terms of the increase in employee expenses, the increase in other expenses, what I could see as well, 5,400 crores versus 4,600 crores. So a lot of questions for Maruti, at least to answer in the con call, which will come at 4:30. And of course, we'll get you that big update on that. But largely all the time we have on this edition of a curtailed Ask Profit. But do stay tuned. India Market Close comes up next.
1st February 2026, what will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network. This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Budget 2026 isn't just about numbers. It's
Hi, and thanks so much for joining in. You're watching India Market Close, and it's another wobbly, volatile day ahead of the presentation of the Union Budget at the end of the trading week. Pull up the benchmark Nifty 50 and let's take a look at the journey so far today. It is trading with gains still, gains of about 0.2%, but it's significantly off the high point of the day. In fact, let's pull up the chart if we can, the intraday chart of the Nifty 50, and you will see the kind of volatility that you've seen even through the trading session. Take a look at this. So we're at very close to the low point of the day. In fact, this is the low point of the day. And you had a pretty strong start, but we've given up quite a bit of ground. At the start of trade, you had quite a few of the heavyweights that were contributing. So let's see what has changed since that point to now. Pull up the heat map for the Nifty 50. Okay, we can talk about this as well. But BEL, Eternal, ONGC, Reliance Industries, at the start today, you had HDFC Bank, you had ICICI Bank, Reliance Industries, as well as Axis Bank. So pull up the heat map and see how much green still remains on the screen. It's a fair bit. But Axis, which was the top gainer, is now just about flat. ONGC has moved its way up about 8% or thereabouts. BEL is at the high point of the day, doing well. Eternal, Hindalco, CIL. So completely different picture from what you saw in the morning. at the bottom of the screen, you have Tata Consumer that is taking quite a bit of a battering. Asian Paints, Eicher Motors, HUL all losing a tad bit of ground. And you have Bajaj Auto, Maruti Suzuki as well that are losing ground. State Bank of India just about 0.2%, HDFC Bank just about 1/3% or so, and Reliance Industries still okay, but off the high point of the day. It was gains of more than 1% at the start, and that is the shift in the picture really for the benchmark Nifty 50. The Nifty Bank also, I would hazard a guess to say that it's come off quite considerably from the high point of the day, but the broader markets and the factors, Sharad is standing by. Sharad, a few very sharp reactions to earnings, among them CSB Bank, but what are the factors indicating to you?
Well, thanks a lot for that, Alex. And yes, it's earnings specific moves coming in. Earlier, we could see BL and Maruti Suzuki, both of their numbers are actually coming. There were recent numbers coming in the last 20 odd minutes. Maruti Suzuki also, one-time impact is there. And we are seeing a correction happening here. BL a day's high level, and Maruti, there was a big dip. But then remember, the labor impact is also there, and because of that, the up moves happen. But what are the triggers for the market? That's what we are looking at. The options data is suggesting a range-bound movement. The markets have turned volatile. Alex had mentioned there was a bit of correction coming in. Yesterday, there was a strong momentum. The Nifty key support levels is the 200 DMA levels, 25,163 levels to be precise. But the stronger technical setup coming in for the Nifty banking play, and the broader indices are performing better. Energy, metal and footwear stocks, they are doing really well in the trade. Of course, earnings impact is there, but a declining dollar is aiding the macro sentiment for Indian markets. The European markets, if they have opened, largely I've seen is that they have opened on a mixed basis. Today, a lot of important macro events are playing out in US. First is, of course, the FMC meet, where the rates are expected to remain unchanged. Microsoft, Meta and Tesla's earnings are also there tonight as well. So we will be looking at these key triggers. But of course, Alex, it's earnings, earnings and earnings.
Yeah, absolutely. But you know, the thing is, and we've been tracking the markets all day, but the other big headline, and this is obviously a bigger headline than the markets, it is a very tragic accident that took place this morning, where a flight carrying Deputy Chief Minister of Maharashtra, Ajit Pawar, crashed near Baramati during landing. Some of those visuals are what you're seeing on the screen, and all of the people that were on that flight have tragically passed away. Of course, political class have already expressed their sentiments on the matter, and there are several developments that have to be spoken about with regard to Maharashtra politics. The context, of course, is that Ajit Pawar led his own faction, a split off from the NCP, and there were certain undercurrents that were talking about the possibility of a merger between the two. Whether that might have taken place or not is now a question that a lot of people are asking. And what happens to the alliance, the Mahayukti alliance that is in power right now, and quite a few seats that are currently held by the Ajit Pawar faction of the NCP. There is a void that needs to be filled. So we're joined in studio, of course, by Jitendra Dikshit, who is executive editor at NDTV. And we also have joining us remotely Rohit Chandavarkar, who is a senior journalist who tracks the space very, very closely. Rohit, thanks so much for taking the time, but allow me to ask Jitendra to just set the context for us, and then I want to come to you on a few specific issues. Jitendra, your initial thoughts about the void that is created here. You had the split from Sharad Pawar faction. What is at stake here?
See, Alex, now Maharashtra politics is set to change, and after this accident, there are four major questions which need to be answered. First question is, who will be the new president of NCP, Ajit Pawar's faction? Will the person be somebody from the Pawar family, Sunetra Pawar, Ajit Pawar's wife, or one of his sons, Parth or Jay? In this scenario, if one of his sons become the president, then Jay Pawar is a strong contender, because there is a case going on against Parth Pawar. He has been accused of being part of the Pune land scam. And in case if somebody from outside Pawar's family is being chosen for the president's post, then there are names like Praful Patel and Sunil Tatkare. So they might be given the charge. So this is one thing. And I think in next 3-4 days, deliberations will start happening, discussions will start happening over who will be taking charge of the party. Secondly, will both the NCPs merge now? Will both the factions of the party will merge now? Because during the corporation elections, which happened this month only, earlier this month, both the parties forged an alliance in Pune as well as Pimpri Chinchwad municipal corporations. And now also, right now also, when a campaign for Jila Parishad elections are going on, for all 12 Jila Parishads, both the parties have aligned.
Sure.
And there have been feelers from Supriya Sule as well as from Ajit Pawar in recent days that both the factions are getting closer, and what we got to know from our sources that in next 10 or 15 days some major development was going to happen and both these parties would have come together. So this is another aspect of this. Then third question is, will the NCP under new leadership continue with Mahayuti or join MVA? Because what we saw during municipal corporation campaign was an acrimonious relationship between Ajit Pawar and the BJP. Ajit Pawar made several accusations and statements against the BJP leadership, and BJP also responded in the similar manner. So lots of hostility and bitterness was going on between them, and there were speculations that Ajit Pawar might quit the Mahayuti and join the opposition alliance of Mahavikas Aghadi. So that needs to be seen. And fourth is, if NCP continues to be part of Mahayuti, then who will be the candidate for Deputy Chief Minister? Who will be taking place of Ajit Pawar? So these are four major questions which need answers.
And I'm glad that you've posed those questions. Rohit, I wonder if you have answers to any of them. Or, of course, it's too early. And first of all, it must be said that our thoughts and prayers are with the families of those that have lost their lives today. But as is usually the case in politics and in power, vacuums do not stay for very long. So therefore, Rohit, a couple of those questions. One, is there a possibility of a folding back of the Ajit Pawar faction into the Sharad Pawar faction? Or on the other side, is there a possibility of these of this party moving into the BJP?
Just ahead of the Maharashtra budget session, Maharashtra Assembly budget session, you have this shocking news suddenly coming and leaving a big vacuum. Jitendra has described very well about the situation within the Nationalist Congress Party, so I'll not touch that part. I will talk about the Maharashtra government. In the Maharashtra government, which is very relevant for your viewers right now, the finance portfolio was held by Ajit Pawar, and we are talking about a leader who's presented 10 annual budgets of Maharashtra government in the last 25 years. So now for the first time, we don't have Ajit Pawar as finance minister when the assembly session of Maharashtra for the budget starts. Who fills that vacuum? That's a big question. Who is going to present Maharashtra's next financial budget, government's budget? Secondly, of course, coming to the political part, there is going to be a huge vacuum left in the NCP because he was, like Jitendra mentioned, he was the president of NCP. Two factions of NCP have already shown signs of merging practically, not technically, not on paper, not constitutionally in terms of party constitution, but practically they have merged for the local self-government election, first two phases. Third phase is district council polls where they are likely to fight together. So I think this incident of today's is going to cause some emotional bonding within the party, within the estranged members of the family, and result in their coming closer. I know for sure that senior Pawar, Sharad Pawar, has kind of decided now to take a back seat. His Rajya Sabha term ends in April, coming April. So the big question now is who runs the NCP and how does it run? So my prediction is they will stay in the Mahayuti alliance. They will stay in the NDA alliance with BJP.
they will continue in power in Maharashtra government. They will have to find a replacement for Ajit Pawar's face as finance minister. And you will see more bonding within the two factions of NCP, which is likely to work as one unit in the coming years. Last point, once the district council polls are over in February, there are not going to be any major elections in Maharashtra for more than 3 years. Next election comes only in 2029. So NCP has a lot of time to kind of reunite, rearrange things and work as one force, which is what I can predict will happen. That's about it.
Okay, Rohit, just a quick follow-up to that, which is that in the event that they don't continue to be part of the Mahayukti, is there a dramatic shift that can happen in the government? In terms of numbers.
That's anybody who's watched NCP for for a few years can tell you that there is no way they're going to walk out of the government because Ajit Pawar is no more. There is no way that Chhagan Bhujbal, Praful Patel, Sunil Tatkare, and all these senior people working in Mumbai and Delhi, holding various positions, including membership of parliament or cabinet positions. There is no way they're going to walk away from power in the current scenario because the opposition has very little space in Maharashtra's politics right now. And they are enjoying, being in power, and they keep saying that the reason we want to stick to power is because that's how we can serve people. It's the new logic that we are hearing in the political space last few years, that the only reason I want to be a minister and I want to stick to my position is because that's the way I can serve my constituency. That's the way I can serve my voters. That's the way I can serve, I can deliver development projects, etc. So they will stick to that logic. There is no way they're going to walk out of the Mahayuti. They will continue with the BJP for at least till the elections of 2029. Now, 29 is a different issue because the BJP is already saying internally that they want to fight those elections alone. Both Lok Sabha and Assembly, they want to fight alone. So we'll come to that when 2029 arrives, and maybe equations might change at that point. Right now, there's going to be no change.
Okay, Jitendra, you want to add something?
Yeah, Alex, it will even in case in a scenario if NCP walks out of the Mahayuti alliance, I don't think it will make any difference because at state level also and at the center level also, the incumbents have very good numbers, and it will not make any major difference if the party walks out from the alliance from NDA or from Mahayuti. Secondly, I don't think that that NCP will walk out of the Mahayuti alliance in Maharashtra. And one reason which is being discussed in the political circles is Parth Pawar. Parth Pawar is embroiled in Pune's land scam case, and there is a likelihood, there is a possibility that he might be arrested also. So just to keep him away from going to the prison, NCP will not take such a risk. This is being discussed in the political corridors.
Okay, so this is perspective that you're getting from two people that have tracked this space very, very closely, and this is what we want to bring you as well. Gentlemen, thanks so much for taking the time, and appreciate that you've taken the time. Here's a small glimpse of the life of Ajit Pawar. All right, coming back to the markets, we are joined in by our two guests, Ajit Mishra and Dharmesh Kant. Good afternoon to you, gentlemen. I'd like to start with Ajit first. Of course, the technical setup is kind of wobbly today in the day's trade, but nevertheless, the broader indices are doing well. But technical setup for Nifty Bank is still better than Nifty. What are the key levels to watch out for as we are going towards the budget? Ajit?
Yeah, good afternoon, sir. Good afternoon, Alex. So what we are seeing right now is similar to what we were seeing last week. Means last week we were hovering around the 100 EMA mark, around 25,600. Now the tussle is around the long-term moving average, the 200 days of exponential moving average, around 25,150. So today Nifty made an attempt to surpass the immediate hurdle around 25,350, but we couldn't sustain. And again, we are inching closer to the long-term moving averages. So this tussle indicates still uncertainty is still on, when it comes to the index. And for any meaningful recovery, we need to surpass this first hurdle at 25,350, then probably around 25,600 is something that the market is going to test. In case if we break down 25,150 first, then probably we are again set to retest 24,900, 24,750. So as of now, Nifty is in a void. You've rightly mentioned that banking is on a strong footing. So that's the reason why we are not seeing any major damage in the index today. At the same time, we are seeing certain pockets or themes which are consistently doing well. So be it metals, PSU, banks, today it's defense. So something on that line is something that you should be focusing on while the index is still not offering any clear or decisive trend.
Regards to Nifty as well as Bank Nifty, Ajit, what would your top picks be? Because we're pretty close to the budget as well. So a lot of chitter chatter and movements that are happening with stocks that could be related to the budget as well. Anything on that front that you have?
What we are seeing is that sectors which are constantly, maintaining their positive stance, irrespective of the market bias, are likely to continue with this positioning. Even if, let's say, the situation deteriorates further or we see a recovery or rebound in the market. So PSU banks, metal, select auto, that is something that you should be focusing on in run up to the budget. Among the PSU pack, Canara Bank, which is still holding around record highs, trading in a very tight range. After this breakout in the defense counters today, we anticipate there could be a possible up move in the PSU pack after this recent consolidation. So here the risk to reward is favorable. It's currently quoting at 156, so we'll stop at 150. 165 to 175, positionally something that you can target in Ken Bank. Another stock that we like, after almost 3-4 months of consolidation, that we have finally seen a breakout, that's ONGC from the energy basket. Strong volume, strong price action. And all the indicators are pointing towards the retest of the record highs, maybe close to around 300 positionally you can maintain as a target. So we'll stop at 254. One can go long in ONGC even at current levels.
Right, let's go on to the stock of the day. And just some time ago, the earnings had come in, and we're talking about CSB Bank, a big, massive correction coming in the day's trade. And the stock is under pressure. There are 4 important reasons for it. The first one is the numbers which had come in. The asset quality, that has deteriorated. If you compare that sequential basis, the higher provisioning, that's what has spooked the street, both sequentially and year-on-year basis. We have seen a big provision being undertaken. Bottom line has missed the street estimates as well. And remember, the stock is up more than 50% in the last 1 year. So profit booking is also coming across this counter. Even the valuations, that's also on the higher side. And nothing much there, to be honest, for CSB Bank. The profit is flat. It was expected that it would be on the higher side, but that's where the analysts have missed their estimates. GNPS and NPS, that's the concern which comes in. The asset quality, it has deteriorated really sharply. From 1.81% last quarter, it's now at 1.96%. And NNPA is also significant deterioration, almost 0.67% coming in. Operating profit, that's around 32%, but still on the lower side from what the street was expecting. And provisions, that's where the concern is. It's up 36% on a sequential basis. And we see the stock tanking in trade, almost 16% it's down in trade. If you just show the intraday chart to give us the entire perspective for CSB Bank, then we'll understand, see the tick coming in. It was a massive fall and it's near its day's low level. Stock is down 16%. Dharmesh, I want to get you on CSB Bank. Of course, there was an angle of the gold loan book also, which they have. And there was a good up move coming in. Management also, the street was very bullish on. A big profit booking. Is it a good time for a buy the dip strategy? Or is some issue there? Because asset quality deterioration is really very bad.
Yeah, definitely. It seems like there's some issue there because this looks to be a one-off kind of a banking results which have come through. Till now, at large, whatever, be it private, public or NBFC space, they all have reported a very good set of numbers, particularly on the asset quality front. We have seen across the board there has been improvement in both gross and net NPA with improvement in credit cost and lesser provisioning. And this goes totally in contrast to to what others have reported for the CSB Bank numbers. So one has to, analyst call has to be awaited, and after that only clarity will come. Why this miss and whether this is temporary in nature or it's something which is there in the built-up stage. So. Anyways, it's a small bank, so there are better choices, far better choices. So why to jump and or catch a falling knife?
A falling knife. But pull up the slightly longer term charts if we can, maybe the 3-month, 6-month charts, because the stock had risen quite considerably in that time frame, right? There you go. So quite a bit of that ground already getting lost, getting taken off the table. Now just about 2% lower for a 6-month chart. But the question, Ajit, on the charts therefore is a lot of trailing stop losses would have gotten hit today if you are trading stock, and so therefore the question is, what would you do?
So Alex, I would definitely wait for the close, because usually we see that the initial reaction turned out to be the initial reaction, and eventually we end on a with a clear understanding. In case if we fail to hold to 400 mark, let's say in today's session, which also turns out to be the neckline area of the previous consolidation range and the long-term moving average, then probably I need to take that losses, because we are engulfing the 2 months of up move, and in case if we are breaking below the long-term averages on a crucial day like result day with volume, so definitely this indicates panic. So as of now, I'll definitely stay put. We are very close to that mark, so just 10 rupees from the current levels. In case if there will be any rebound, let's say around 445, 450 also, then also I suggest to reduce the position and let the stock stabilize for time being now.
That's CSB Bank. There is panic selling that's happening as well. But let's, head across to my colleague Somit Sarkar, who joins us with all the chatter in the dealing room. Somit, I'm sure, I think this is the time when you'll be hearing quite a lot of things. I mean, there is action in the market. You have budget, which is just round the corner as well.
Well, yes, there is a lot of action. Volume numbers are quite strong for the last couple of trading sessions. So yeah, a lot of stocks that have been buzzing in trade and in dealing rooms as well. Firstly, it's DLF that's on radar. Now, the stock was under pressure of late, if you see. But today, dealers are saying that the selling pressure is largely over, and hence the stock has recovered swiftly from the day's lowest point. It's up now around 2% in trade. Dealers believe that some positive news flow regarding the launch of Dahlia's Phase 2 is expected to come in soon for this counter, and that could be one of the key triggers for DLF. When it comes to Jindal Steel, there are buy flows on institutional desk. Both foreign and domestic institutions have been accumulating this counter in trade today. Even the delivery volumes are expected to be on the higher side. When it comes to Paytm, there are buy flows on the large HNI desk. Dealers are expecting some positive announcement to come in soon for this counter. And for SBI cards, there are buy flows on the HNI desk. The stock has corrected a bit, but buy flows continue, and dealers believe that the third quarter numbers could be on the positive side. They're expecting the credit cost to be lower for SBI cards. And Bharat Dynamics was part of our segment yesterday, and the stock is up nearly 6% Now, there are multiple reasons. All different stocks have been buzzing in trade. For BL, it's the result, but for Bharat Dynamics and other stocks, there's the buzz on the street that I mentioned yesterday was that there could be multiple order announcements that could come in for defense companies.
Interesting names that you mentioned Bharat Dynamics right now, Somit, and I think the entire space that has been buzzing as well when you talk about the defense pack as a whole. 6.5%. Let's just pull up the Nifty Defense Index, and that will tell you the entire story of what's happening with the defense pack. From a BDL to a Mazgon, Mishra Dhatu, data patterns, gains in that range of 6 to 14% is what you're seeing. And the index as a whole itself is up around, 5 to 6%, if I'm not mistaken. There you go, 7% up move coming in on the defense pack. And I think this is the conversation we should be having today. Dharmesh, how are you looking at the entire defense pack which has been buzzing? Is this a pre-budget up move that we are seeing so far, with stock seeing gains in the range of 6 to 15%?
Yeah, definitely for last few days, if you see the build-up, it's pre-positioning before the budget. But on the defense, on a structural theme, we have been bullish for almost 2 years now. Last 1 year was lost. Most of the stocks did not do, meaningful upside traction, but at the same time, the downside was protected. I think if you look at the entire space, it's sitting at a book-to-bill ratio of 5x. So on an average, any company is looking forward. So 4-year, 5-year kind of a revenue built up with 20% kind of a CAGR is already there on the books of most of the companies. And the way the government of India is now aggressive on Make in India and the content, domestic content requirement getting increased from 30 to 50% and eventually to 65% going forward augurs well for all these companies. BEL reported numbers just a while back and the numbers were excellent. It's not only a 20% kind of a net profit growth, but there was a margin improvement as well. And the structural issues which were there is getting resolved. I mean, HL is the topic out there, where with the supply of GE 414 engines, you will see Tejas being delivered to the Air Force very soon. I mean, 5-6 we are expecting next year itself. That will again boost the entire revenue and the operating profit and profitability out there. So it's not a quarter-on-quarter kind of sector to look at, but if you are looking on a multi-year kind of a theme, it's a very good sector and a very solid sector to be in. And our topics out there is BEL and HL.
Okay, in fact, BEL is kind of on an upper circuit right now as we speak. Ajit, with the kind of rally that's coming in terms of defense names in today's session, what should that strategy be? Someone who's looking to enter ahead of the budget buy, or someone who's holding this is the best time to sell?
So it's a very important question, considering that it's been almost 1.5 years now where most of these stocks were either struggling, except a couple of names like BEL and HL, which were holding ground strongly, while the rest of the counters are in the range of, let's say, around 30 to 40% on an average, witness a decline this recent past. So in my opinion, one should not rush into a trade considering a single day move. No doubt today's move is definitely encouraging, considering the kind of move that we are seeing in the defense index also. But at the same time, one needs to be selective. So BEL definitely, hands down is among the top performing name, and that is what reflecting in the results also. Then comes HAL, BDL, Mishra Dhatu, wherein we are seeing steady traction. But those who are already having long position in the defense-related counter, they should not average down at current level. Let the defense show at least a bit of a stability after this single-day move. Let's say there could be a possibility that the defense index might take a breather around 8,300, 8,400 mark. So around that area, in case if it manages to hold for a couple of sessions and extend the move, then probably they can think about adding their existing position and looking for the newer highs in the coming weeks.
All right. Certainly a pack to watch out for ahead of the budget presentation. There's an expectation that there could be a higher allocation towards the defense spend in the upcoming financial year. On that note, Ajit, thanks so much for taking the time and for the advice that you've dispensed today. Pleasure speaking with you as always.
Same here.
All right, let's talk about the automotive space, and Landmark Cars stands out, particularly in the context of the EU deal that we've been speaking about since yesterday. The implication for a company that sells some of these European-made cars is that a lowering of the cost would make it more attractive, and therefore the business prospects look better. There's also a significant stake that was picked up by a domestic mutual fund. But we've got Puneet joining in to tell you about everything that you need to know about how the business can improve going forward. Puneet, first we'll talk about Landmark Cars, then we'll talk about the earnings that have come through Maruti Suzuki as well as TVS. But on Landmark, what's working?
Well, most certainly it's the India-EU FTA, as you rightly highlighted. Now, the reason is that one of the key clients, which is Mercedes, does account for almost 40% of the company's revenue. So if it gets access to, more expensive, more luxury cars at a cheaper rate in terms of reduced import duties, that does benefit Landmark Cars tremendously. Now, it's one effect to have cheaper cars and being able to sell them. The other aspect is the serviceability, and that's where Landmark Car gets the major beneficiary, because while the new car sales margins are roughly 3 to 5%, the after-sales service business does about 18% margin. So that could be the incremental addition and the icing on the cake, essentially, in that sense, to get that benefit for Landmark Cars. Now, just to put some 3 to 4 key numbers into perspective, they operate roughly 24 stores of Mercedes in India. But more than that, it's almost 16 cars out of 100 sold in the country are through Landmark. So you get that serviceability benefit as well. And as I said, 39% revenue for Landmark is from Mercedes itself. So that's the key aspect for Landmark. For just a quick bit on the results as well, both TVS and Maruti, while TVS was a stellar performance, the highest ever sales, highest ever revenue and highest ever profits, it's backed by a strong operating leverage that the company has gotten. So you will see almost a 37% growth in revenue, but a 50% jump in EBITDA and profits, and hence it's a beat across all fronts for TVS. The story isn't as simple for Maruti Suzuki, because what they've interestingly done is taken the labor code impact in its expenses rather than a one-off, and hence the EBITDA has fallen in this particular quarter by almost 11.2%. Now it will be that the 11.2% barring that impact would have been 12.4%, and we'll have to get some more perspective on how has the raw material cost been amongst others, but that's the major difference, that for Maruti you see such a sharp reaction earlier on and then a recovery in the share price. So that's the key reason the labor code is taken as expenses and not as a one-off. But overall it's been a strong set of revenue growth, at least for Maruti, and commentary in the conference call will be something to watch.
Yeah, certainly the impact of GST as well. Thanks so much, Puneet, for rounding that up for us. Of course, we'll get a view from Dharmesh on the automotive pack as a whole. But first, we'll slip into a very quick break. More on the other side, so do stay tuned.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network. This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
Welcome back to India Market Close, and the story of the day seems to be the defense sector, which has been buzzing in trade. The question is, why are the stocks rallying? First up, you have strong Q3 numbers that have come in from BEL, and these were points that Sharad was just putting together as to what's really working for them. The commentary that the HAL management has given out in terms of revenue contribution and the supply chain bottlenecks that they were facing earlier, all of that is seeming to be pretty positive as well, which you can see at the bottom of your screens as well. And the expectation is that probably there could be higher allocation for defense spends in the budget. So there is a pre-budget positioning that's happening. There is delivery-based buying that's happening as well in terms of defense names. And that's the reason why this kind of rally that's coming in apparently. But let's discuss this with Jyoti Gupta, who's the defense analyst at Nirmal Bang. Jyoti, welcome to the show, and always a pleasure to speak to you at NDTV Profit. This is Hiral on this side. Because you've been tracking the sector so closely, my first question to you is, what has caused this time this kind of buying interest when it comes to defense as a space in today's session? Because there has been a sudden surge. It's mainly BEL which has been in focus on the back of numbers, and some bit of commentary that's coming in from HAL right now. What are you picking up?
Third and fourth quarter typically for defense industry is good. We should expect some good earnings coming from a couple of companies. HAL and possibly HAL may not may give us similar lukewarm numbers, because I don't think any aircraft have been delivered this quarter as well, but I think fourth quarter is going to be very good. Overall, the sector would, I think full year we should close with something like a revenue growth of 15 to 20%, and margin should be close to 20-25% for the industry. The second half is definitely good for the overall industry. The third quarter, I don't think it will be a mixed performance from the company. So overall, I just feel it's the sense that India-EU trade, agreement could, it has possibly brought some sort of an agreement structurally positive for the Indian defense industry, primarily through improved market access, deeper technology collaboration, and stronger supply chain integration with European OEMs.
Sure.
That's the reason.
Jyoti, you're not on the clearest line, and we're trying to make sense of what you're saying, and I can for the most part. I hope the viewer can as well. And so therefore, necessarily, we're going to have to keep the conversation a little short. Based on the kind of gains that you're seeing on the screen today, though, would you say that valuations at this point are challenging? Do they capture the prospects that you've just spoken about? Or do you think there's still room in a few of these pockets? And what would your suggestions be?
I think most of the price of the valuation is pricing. So I don't see a headroom right now at the moment. But definitely after fourth quarter, once we see the results, they should look better. I think some amount of pricing is still required in the defense industry.
Got it. All right. Jyoti, thanks so much for taking the time. Pleasure speaking with you as always, and for the insight that you provided. Dharmesh, I wonder if you have a different opinion here. You've had the likes of BEL that's upper circuit right now, or close to it. You have the shipbuilders that are 6-7% higher. The entire index is up 7%. Would you advocate caution, or would you say that this is part of a structural move, long-term move higher?
Alex, it depends upon, whether it's Alex, it depends upon whether a trader is, coming into a defense trade right now, or you are an investor. So if you are an investor and you are having a view of, say, 2 to 3 years, or at least to say, I would suggest it should be 5 years, then it's a structural play. Because if you look at the order book on which all these defense companies.
But moving on, of course, we spoke about a lot of defense stocks buzzing in trade, but consumption stocks are also something to look out for. Asian Paints, I think for the second straight day, we are seeing a big downtick coming in, and today also it's down 4%. Tata Consumer also will be coming to Mahima in some time and do this discussion on that. But to just give it a perspective, Dharmesh, for the consumption space, Asian Paints, Britannia, all of them are down in trade. Anything which is looking a bit attractive here, or you would like to stay away from the space?
Yeah, sure. We have stayed away from the consumption space for quite some time, last 6 to 9 months, in spite of GST cut and all. We were away from the sector, and the reason is very simple, because the growth can be 12 to 15% at best. You can hit 20% in few of the quarters. At the same time, the valuation multiples are stretched, and to our mind, last 1.5 year, how the market has behaved, it's just a valuation resetting is happening. So now the valuation multiples which a company will enjoy will be in line with the growth prospect which is foreseeable in the near future. With that caveat in mind, I think, I mean, you can still have a trade. But you cannot have a trending of wealth creator buy from most of the consumption space, because still, in spite of this correction, Asian Paints is trading above 70 times PE multiple, and same is the case with the other in the FMCG space like Marico and all. So the numbers may still be okay types, but the valuation resetting will keep on happening.
Okay, all right. By the way, so we've got amidst all of this absolute volatility and all of these stocks moving very sharply, a debut on the stock markets, and that's Shadowfax. It's not had the easiest time of it. It's down about 10%, 11% or thereabouts at pretty much point of the day today. I had a chance to speak with both of the co-founders of the company, Abhishek Bansal as well as Vaibhav, and here's a slice of that conversation. Abhishek, I'll start with you. Shadowfax, the name, for those that don't know, and huge fans of Lord of the Rings, where did it come from?
No, I think we are all big fans of Tolkien. I think some of the people that we look after when we were starting, they used to carry over this trend of keeping names based on Tolkien stories. So I think it fit well with the theme that we were looking at. And given we were B2B, we didn't really bother too much about being a customer-friendly name at that time. But ever since we kept the name, I think it has grown on us.
It has grown on you. And certainly your investors are going to be hoping that it grows on the rest of the market. It's not been the rosiest start, shall we say, to life on the Lal Street, but initial reactions to that, anybody?
No, I think, see, the way we are looking at it is it's a long-term story for us. We are extremely proud of what we have done. We are very, very humbled to where we have landed as part of this journey. I think it's a long story ahead for us. This is not even a destination or close to a destination. As I always say, our ambitions are just 10% done in building what we believe Shadowfax can achieve. So it's a long story. I don't think an hour or two is going to be something that we want to take back. We have done something well today. We believe the growth that we have delivered over the last few years, the growth that we are going to deliver over the next couple of years is something that the street is going to love as we continue building the business.
Okay, so that's a strong message from the co-founder. I wonder what the other co-founder has to say about the path ahead, right? Because ultimately you're talking about building scale in your business. Some of the proceeds are going to be utilized to do just that. So can you take us through the initial timelines?
See, our thought process is to invest in capex on the facilities, on the sort centers or the facilities where a bulk of automation happens. So we'll be investing in automated sorters, X-ray machines, convener regulators there. So those would be the things that we'll be investing in. And the journey in the short term as well as from a near long term perspective is also to consistently work on it, focus building it in the right direction. There is nothing specific that we will do a front loading of all the capex right away altogether. The philosophy that we take care is just to be in the right optimization or in the right utilization of our facilities so that it gives us the right operating leverage.
Okay, so explain this to me, right? So we were looking at the SWOT analysis of your company, and one of the strengths is the kind of touch points that you've already reached. But a weakness is the fact that in the near term, you might just have a tough time of it and you might just be losing cash. The point is that you have a business with a relatively narrow margin. So I'm just trying to wonder and get a sense from you, what are the kind of levers that you can utilize to spur that on? Weber spoke about operating leverage.
No, I think there's a phenomenal amount of operating leverage in our business. If you look at what we have delivered over the last couple of years, we have grown from -7% EBITDA to 3% EBITDA in the first half of this year. And this is while we have grown from 7,000 pin codes to 14,000 pin codes. So whatever you're looking at, there's a lot of operating leverage in the business that exists. There's a lot of inefficiency because we're still expanding really fast. We are opening new cities, new capabilities, new facilities, and we'll continue doing that. But what we are doing this is is from the cash that we are also generating from the business. If you look at our operating leverage, right from elements like last mile, where basically as we get more orders, densities come in, our cost per order goes down. Think about middle mile trucking, which is about 20% of our cost. As our trucks get better utilized, as we get that critical volume in every city, we get operating leverage on our trucking networks. Think about the fixed cost that is there, the facilities, the capex that Weber just spoke about. I think as you gain volumes, you gain operating leverage over there. Lastly, the central tech team cost, the central cost. If you look at our numbers over the last couple of years, our employee cost as a percentage of sales has come down by almost 30%, and that's clear operating leverage. And that is something which will keep on happening as you continue to scale. One of the significant advantages that we have built while being lean and being efficient is also the kind of technology backbone that we have built in. And the tech stack, typically if you look at companies, it does not grow at the pace at which the revenue is going to grow. And that is something which is going to, again, as I say.
Okay. So that was some part of the conversation. The other aspect, of course, is that they're at 14,000 pin codes right now. They want to take it to 19,000 pin codes. And they're saying that there is a little bit of a vintage that plays out. So the longer that they spend in a pin code, the more that they're able to sweat their assets. It becomes more efficient. So that's one. And two, I asked him about the aim for margins. They're at what, 2.8, 2.9% EBITDA margin right now. And what they're saying is that in the West, comparable businesses are able to get pre-teen margins, and that is the aspiration for them. So how quickly from low single digit to pre-teen, it would change the game quite
a bit, but the gestation period is very huge. Dharmesh, quick view when it comes to Shadowfax. You've got a listing which is below, I mean, what, a 11% cut right now. Any views?
See, the management is sounding pretty aggressive and confident about the business, and having all the players in the foray, their operating margins are actually a bit better, and they have grown. I mean, they've captured the market share rapidly in the last 3-4 years. So all the fundamentals do point to the management's confidence, which they've been sounding about. But with this kind of a listing, I mean, this market is not rewarding anything, which is hope. Kind of a trade playing out. So we have to wait for a couple of more quarters to see if this 2.9% goes to 3.1 or 3.2. So, I mean, then one can look at, initiating a buy coverage on this company. I don't mind buying it at 150 with a stable kind of upward margin trajectory.
That's the view for Dharmesh on this. But on to our bull versus bear pick for today, and that is Asian Paints. What's working for the stock and what's not? Mahima is here to share all the details.
Right, so I think it's the perfect day to choose this counter as bull versus bear because, it makes sense to put out the positive points as well after the 2-day pressure that we've seen on the counter. But I think if you look at the positive commentary that came in from the management, which was the highlight for me, was that management said that they will endeavor to to try to gain market share from here on. Of course, it still remains a leader in the paint space, but they are expecting market share gains going forward. When I asked the management, he did not quantify that for us because it's difficult, of course, but market share gains is on the cards. On the flip side, the commentary coming on demand was not very positive. They said that demand has remained subdued and will continue to remain subdued, considering if the capex doesn't, the capex growth cycle does not pick up. On competition, of course, management has continuously said that competition remains intense, and they've maintained that tonality in this con call as well. But despite that, we've seen that this time margins have come in at the higher range of that 18 to 20% guidance, came in at that 20.1%, and they've said that this is a sustainable range of guidance that they'll maintain. Moving on with regards to where the different segments, the two big segments for Asian Paints, while industrial segment has remained strong and resilient, here also margin guidance has been maintained. On the flip side, you have decorative business, which have had lower volumes as compared to where it was in Q2. So this is still a pain point when it comes to Asian Paints, and they will have to, and in fact the management has also said that now they're focusing more on B2B. So from here on, I think industrials will be more an area of focus for them going forward. Now analysts are seeing industry revival and they will have to, and in fact the management has also said that now they're focusing more on B2B. So from here on, I think industrials will be more an area of focus for them going forward. Now analysts are seeing industry revival on account of premiumization going forward. This is something that is a common reading across notes, but on the flip side, you have weak performance despite of a lower base. So outlook still remains challenging is something that a lot of brokerages have also said. So we'll have to wait and watch out for as to which of these play out well for Asian Paints going forward. In terms of brokerage, which is underweight with a target price of 2194. So this is the overall view of how bull versus bear stacks up for something like an Asian Paints.
Thanks a lot, Mahima, for that. And it's really confusing which one to pick. Joining us is Shivangi now. Good afternoon, Shivangi. We are having less time. We could just start with your technical picks or maybe a BTST, STBT call.
Very good afternoon. Thank you for having me. So first up on my radar is, of course, BSE and all disclaimers applied. We've seen that this stock has retraced back from its 50-daily exponential moving average. Even on the longer time structure, we've seen that this stock is kind of forming a narrow range formation on the monthly basis. Of course, the Y-on-Y revenue growth that the stock has shown has been quite remarkable, and the investor confidence is reiterated here. Technically speaking, we are seeing a bullish crossover, kind of a signal here, which is making it quite lucrative at these levels. And of course, with the market, recovery, this stock is looking quite positive. So recommending a buy here with the target of 29.35 and a stop of 27.65 levels.
Those are your BTST, STBT calls as we speak as well. Another stock I want to discuss very quickly is Eternal. 86% upside is what Jefferies has on the counter, and they have a buy for a target price of 480. The stock is already up really 5% in trade. Shivangi, any view when it comes to Eternal on the charts after a 5% up move today?
Definitely, Hiral. Eternal is kind of a long-term portfolio stock, even though the stock has witnessed some sort of pressure in the short term from the last 4 months. But, the entire quick commerce space, the idea and the kind of, expansion that the company is going through, this one's definitely a must-add. Of course, these levels, the risk-reward ratio is quite favorable, and we're seeing a good amount of short covered over here. So one could actually start accumulating this one, and immediate basis, the next target that one can look at is around about 275 odd levels, and positionally, if one has to look, one can look at 290 odd levels here. So yeah.
You're talking of 290, you have a Jefferies, which is very strong fundamentally. Dharmesh, any view when it comes to Eternal? And on top of that, I would also want to add a Paytm, which was buzzing. I mean, it was a herd on street which Somit got for us, where there are buy flows on the large H&I desk, and they're expecting some positive announcement soon. So if you have to look at Paytm, Eternal, Swiggy, all the new age companies, how are you looking at them?
So I have a bearish view on Eternal and Swiggy both. So last 6-7 months, we have been consistently maintaining that, and all platforms I have sounded negative about this. So why Jefferies has given this report, Jefferies are well positioned to answer that. But to my mind, even if you grow the operating profit at 25% CAGR for next 10 years, that is FY36, then also you end up with a valuation multiple on EV/EBITDA basis of more than 30x, and with a top line, at least top line should be around 5 to 6 lakh kind of a crores kind of a top line to have that kind of a profitability in place. So I don't see that happening with the heightened competition getting into space with Amazon is getting into there, Walmart's Flipkart is there, and then Reliance is also coming into a big way. So trading bounces will keep on happening. I mean, the stock can be range bound from where it is at 320, 330, and that is how we look at it. Paytm, I mean, again, it's been settled with some, fundamental revenue deficit kind of flows where the revenue will be trimmed, and it's actually being trimmed commencing in Feb onwards. So news flow, I don't know what's the news flow out there. So we are avoiding this. So you have to be very selective and careful about picking any new age companies going forward.
But just let's pull up ONGC and Oil India. Both of these stocks hit their one-year high levels as well. ONGC in the trade maintaining that up move, up 8%. And Oil India, that's also we are seeing a significant up move. It's almost hit its upper circuit as well of 10%. But interestingly, there are a couple of reasons for it. The Brent crude spike has been there overnight prices. It went up 3% odd. And interestingly, a good positional setup is also coming in. Shivangi, I want to get you on this. Oil and gas space, a significant up move. The Nifty Energy Index, as you call it, that has seen a significant up move and the biggest intraday up move in the last 11 months. What are your views in this space, and do you think this ONGC Oil India rally can come? Any good pick in this space?
Definitely, Sharad, the Brent crude oil price have kind of impacted both of these. In fact, oil was kind of showing signs of positive divergence even yesterday, as it bounced back from 430 odd levels. There was immense amount of buying that was seen at these levels, which was a sign of bullishness here. We've seen that this stock has kind of made a bottoming out structure on the daily basis, and even on the weekly frame, we are seeing a kind of a breakout from the previous resistance level. So definitely this one's looking quite positive. But of course, we've seen a good up move in the last two sessions, more than 10 odd percent. So we could wait for a slight bit of cool off to again, start accumulating this one. But of course, 500 is next on the cards. But recommending a wait and watch and cool off to start buying on the dips for this one.
Okay, so a point well made on that pair, right? ONGC Oil India. But so you have Tata Consumer that is not doing particularly well in trade today, and just the first flush of the numbers would have indicated to you that the numbers are not so bad. And this is actually something that you saw with GCPL as well in trade yesterday, Godrej Consumer Products. The numbers look reasonably good. Maybe the street might have taken a little bit of an issue with the commentary in the conference call that took place. Dharmesh, if you've seen both of those numbers, what are the trends that you're seeing? Because the underlying volume growth looked okay for GCPL at the very least. Their home care segment looking okay. Indonesia as a business bottoming out perhaps. And certain positive trends even for Tata Consumer. Why is it getting battered today?
Yeah, Alex, I mean, again, it starts points to the beginning of the conversation where I said valuation resetting is happening. So the number of GCPL was okay types. Indonesia is still a problem out there. Bottoming out, you can call, but I mean, I did not get the feelers from the management, listening to the management that Indonesia trouble is through and they are seeing a contraction in the business out there. Coming to Tata Consumer, Q3 numbers look particularly well. I mean, 35% kind of a profit because all the verticals delivering well. But if you look at 9 month number, it is sub 20% growth, 18-19% kind of a growth, be it revenue, EBITDA, and operating profit. And the valuation multiples again are in excess of 50. 1 year forward PE multiples. So, but that is, I mean, what the market is considering it. Just looking at the numbers, definitely, I mean, there is a good set of numbers. But the problem is the valuation multiples for this consumer product companies.
So that's with regards to where consumption as a pack goes. Shivangi, any view when it comes to the consumption pack? Because you're talking of stocks like Marico, Dabur, Tata Consumer, GCPL, interesting moves that we've seen post the numbers as well. And yes, it is event based. There is a lot of conviction when it comes to fundamental views with regards to consumption. What are charts indicating?
So here consumption has been one laggard space since the longest time that we've seen, and we've seen that even the previous budget, which was supposed to be around the consumption theme, did not really work that well, because we've seen on a year-on-year basis there are better stocks that have moved much more, and sectors and themes that have moved much more. Of course, Tata Consumer has moved over 30% in the last 1 year, but overall, we've seen kind of volatile cues in between, and this definitely has been a portfolio stock and not a trading one. So my recommendation on these stocks would be one could actually diversify and have these stocks in their portfolio as a diversification factor. But of course, for the momentum play, I would avoid these stocks.
All right, that's the view coming in for Tata Consumer. But MCX, that stock has also done really well. Second straight day of buying after Q3 numbers were very strong. Volumes have also picked up. Dharmesh, MCX as a stock, what are your views on it? Because there's a lot of volatility in the major asset classes, and the key beneficiary is what MCX is. That's what the volumes and the numbers say.
Yeah, definitely. I mean, next 1 year, this volatility is likely to be there, and we are seeing, super bull cycle in all the metal space going forward to say 1 or 2 year time frame. So keeping that in mind, and MCX is the main intermediary dealer out there. So I think as exchange play, MCX BSE looks pretty well set to reap the benefits of an expansion in the market and the volumes. And valuations may look a bit on the higher side, but the type of growth these companies are likely to witness going forward for next 2 years, I think it's a good portfolio buy. One should keep into the basket. As far as trading is concerned, I think Shivangi is better placed to guide on both of this, which levels to enter and where to take profits.
Specific comment on Asian Paints, we've not really referred to it, but the street clearly not liking what it saw in the print on the numbers, Dharmesh.
Yeah, I mean, see, the problem with Asian Paint is the volume growth was there around 8%, both for home decor and the industrial paints. But value growth was missing. I mean, for industrials, it was around 4.5, or 4.1 or 2%, and 2.9 for, for home decor. And that is where the problem is. Even management was very candid in, accepting the same. And they very clearly said there will be 500 to 600 basis point of differential between volume growth and value growth. And that is what is, hurting the stock price as of now. Again, the valuations it has enjoyed a higher valuation multiple, but still it's hurting them now, that higher valuation multiple. And secondly, they were very categorically, specified that competition is there to stay and that heat they are feeling. So industrial division, which is around 9% of their total business, they are trying to fall into B2B segment. So they are walking away from their home turf. So that I think market is not going to take it, very pleasantly.
Thanks a lot, Shivangi and Dharmesh, for your time giving views both on technical and the fundamental perspectives on the stocks. But this is the second straight day we are seeing the ending of the markets going by strength to strength. Nifty comfortably above the 25,300 mark and a strong recovery coming in across the sector. Nifty Bank also we see it's up almost 0.7%, almost a 4%. Nifty comfortably above the 25,300 mark and a strong recovery coming in across the sector. Nifty Bank also we see it's up almost 0.7%, almost a 400-point up move coming in. And if you look at the mid-cap and the small-cap indices, they also have performed really strong. Look at mid-cap, that's up 1.7%. Small-cap index, let's have a look at that. That's up 2%, a significant basket buying coming across the institutions. And we have heard about the small-cap indices opening their NFOs as well. But stock-specific moves, let's see what's happening in the Nifty. We see largely BEL stock up 9%, ONGC Oil India holding the gains up almost 8%, Eternal up 5%. We have seen the Q3 earnings impact also coming in, but largely we have seen a good up move coming from the banking names. But what's not working is Maruti, Asian Paints and Tata Consumer. That's where the selling is happening, but net, the overall markets are cheering, the broader markets are cheering. Let's look at the sectors, what's happening. Defense was a massive up move in the day's trade. It's up 7%. Near its day's high levels. The PSEs are doing well, the energy pack, metals, PSU banking index, all the sectoral doing well, the energy pack, metals, PSU banking index, all the sectoral indices are doing well except FMCG, pharma and a little bit of healthcare. But net, the advanced decline ratio is clearly in the favor of bulls, and we can see it's almost in the ratio of 4:1, and this is the second straight day when we are seeing strength in the markets. Also, apart from this, let's show you the BSE 500 index where the top gainers are there, and look at it. Majority of them are, you could say, from the defense space, from the metal. Oil India making it to the list. Earnings impact is coming. Sterlite Tech, Tejas Networks, the telecom theme stocks also doing really well in the trade. But what's not working? CSB Bank, it had actually fallen almost 18% in the day's trade. A slight recovery coming from the management's commentary, but the consumption names taking a beating. Asian Paints down 4%, Berger Paints down 4% as well. CCL Products also, concerns are definitely there. But net, a very strong day when it comes to the overall market setup, and there's almost 2 trading sessions left for the budget going ahead as well. Apart from this, let's talk about what are the cues for tomorrow to watch. Remember, there's an India's industrial data out and US Fed interest rate decision. Late night it will be coming. It's expected that the rates will remain largely unchanged. These are the interim dividend
you should be watching out for. But board meeting is there of fundraise for Capri Global. Go Fashion is also there. Hoodco's fundraising is also there. Embassy Development also do have a view on that. JNG Electronics 63% lock-in comes out tomorrow as well. Earnings post market hours, these are the mid-cap names which you should be focusing on, as largely the bigger Nifty players have already given out their earnings. L&T is something which you should be focusing on, as the private capex statement is something which the street will be looking out, and it's very much important for the cement play as well. Other companies which will be coming out with their numbers, of course, include Blue Star as well, Colgate, especially from the FMCG pack. Paytm, Voltas also make it to the list, and this is something which you'll be watching out for. But it's a action-packed week when it comes to the earnings, and that's all, folks, for India market close. A second straight day of strength coming in the markets, and this augurs well as we have a run up to the budget. Up next, we're having Market Express by Himangshi. Do stay tuned.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke.
Hello, good afternoon. You're watching Market Express on NDTV Profit. I'm Himakshi Bahugna. Let's take you through the key market action, big movers, and also top business stories after the closing bell. First up, let's see how the markets have fared today. So it was a good day of trade on the Lal Street as markets have ended on a positive note for second straight day. Benchmarks have also witnessed a solid start to February series as Nifty closed with over half a point gain, while Sensex has ended with near 500 points gain. If you look at the broader market, so they have outperformed the benchmarks as small cap index have ended with 2.5% gain. And looking at the sector, so it was another good day of trade across most of the sectors, with defense counters leading the pack, followed by energy and metals. And on the losing side, pharma and FMCG stocks witnessed some sort of selling pressure in trade today. And let's look at some key earnings of the day. First up, we have Maruti Suzuki that has reported mixed results for the third quarter. Revenue rises sharply, but profit falls short, hit by a one-time 600 crore impact from the new labor codes. Now, operating earnings are also broadly in line with the expectations. While margins take a hit here, the company sees steady growth, but cost and regulatory changes weigh on the bottom line. Next up, we have TVS Motor. So that has delivered a robust third quarter with strong double-digit growth across the board. Now, revenue has surged 37% to 12,476 crore rupees, while the EBITDA has jumped 51% to 34 crores, expanding margins to 13.1% from 12% last year. So net profit has also seen a solid 52% rise, coming in at 940 crore rupees. And, the company has taken a one-time hit of 41.4 crore rupees on account of the new labor codes as well. But overall, if we look at TVS Motor closes the quarter on a powerful footing. And next up, we have Craftsman Auto. So that has delivered a strong quarter with net profit jumping to 107 crores. And this is a sharp rise from 12.9 crores a year ago. And if you look at the revenue, so that has also grown 30.5%, nearly 31% to 2,057 crores. And this is supported by solid demand across the key segments here. Operational performance, if we look at, so that has also improved. EBITDA has risen 57% to 312 crores. So this is also lifting the EBITDA margin to 15.2% from 12.6%. So what's the takeaway here? This is a robust quarter driven by strong revenue traction and also improved cost efficiencies for the company, marking one of the company's best performances yet. And Novartis India has posted a weak set of numbers with a dip in key metrics. EBITDA has declined 12.9% to 22.2 crores versus 25.5 crores, while the profit has also fallen 36.8% to 16.1 crores from 25.5 crores. Revenue was down 7.6%. It stands at 85.9 crores as compared to 93 crores in the same period last year. And if you look at the operating margins here, so they have eased to 25.8% from 27.4%, and this is reflecting, softer top-line performance for the company. Next up, we have Bharat Electronics. So that has surged in trade after posting a strong quarter. Profit has jumped over 20%, and this is backed by robust revenue and also healthy operating earnings. Margins have improved slightly, reflecting efficient operations, and the company's order book remains solid at over 73,000 crores, highlighting continued demand for its defense and electronics products. Let's look at some brokerage notes, viewers. The brokerages have remained sharply divided on Asian Paints post its Q3 results. So Jefferies, if we look at, so they have remained positive, pointing to the steady volume growth and also resilient margins despite competitions. Morgan Stanley, however, and Citi, they have, they are staying cautious, and they're also saying that demand is patchy here. Growth, misses the expectations, and also competitive pressures remains, equally high, keeping the outlook extremely challenging. And brokerages are also largely bullish on Marico after a strong third quarter marked by healthy growth across the key segments. Even as margins stay under pressure, Morgan Stanley says that the quarter is in line with steady execution and also improving the growth visibility. Jefferies is staying more upbeat, and it's also lifting its target as the momentum continues across core brands, premium personal care, and also overseas markets despite a softer showing in foods. Viewers, Tata Consumer has reported a strong third quarter with margins up sharply on the back of robust growth in its key businesses. Now, India Foods and Growth segments post solid gains while plantations, also do well for the company. International operations, if we look at, so they have faced some sort of margin pressure, and coffee price volatility weighs on the non-branded earnings for the company. Next up, we have Vishal Mega Mart. So that has posted its lowest growth in 5 quarters with same-store sales up 9%. So lower than previous periods. Loyal customer numbers continue to rise, jumping 16%, and the company adds 29 new stores as expansion continues steadily. Next up, we have Spandana Spurti. So the stock has surged in trade after posting a narrower Q3 loss of 94 crores. This is much lower than last year. And net interest income, if we look at, so that has improved, and assets, show some gradual recovery there. The microfinance segment stabilizes, and also the management signals strong medium-term growth and keeping the investors optimistic about the company. Next up, we have CSB Bank. So that has, cracked as rising asset stress and higher provisioning weigh on the results here. The bank posts a marginal profit of 153 crores in Q3, even as net interest income grows strongly. Gross and net NPAs rise sequentially. This is prompting some sort of profit booking despite earlier support, from a strong gold loan book. Next up, we have PC Jewelers. So that has posted another steady quarter, marking its third straight period of recovery. Operating performance improves to levels last seen a few years ago. This is helped by sharply lower debt and also interest costs. So management is saying that the company is close to becoming debt-free and also signs off an aggressive expansion plan ahead. Viewers, SBI Life has posted steady growth for the third quarter. Profit rises moderately while premium collections jump more sharply. Solvency remains strong here, though slightly lower than the previous quarter. Customer retention shows a small dip across both 1-year and 5-year policies, reflecting some sort of softening in the persistency. Next up, we have L&T. So Larsen & Toubro has secured a major order worth 5,000 to 10,000 crores for its civil infrastructure business, and the contract is, for the extension of the Riyadh Metro, strengthening L&T's footprint in the large-scale international transit projects. So this win adds significant visibility to the company's order book and also underscores its strong execution capabilities in the global mega infra builds. Next up, we have Rail Vikas Nigam Limited, that is the RVNL. So that has been declared the lowest bidder for a 242 crores contract awarded by the South Central Railway. Now, the project involves a key rail infrastructure work and is also scheduled to be completed within 24 months. And winning this bid strengthens RVNL's order pipeline and also reinforces its strong execution presence within the Indian Railways network. Next counter we have is ABB India. So that has secured a significant order from Titagarh Rail Systems to supply traction and also auxiliary equipment for upcoming metro projects. Now, the contract includes systems for 22 6-car train sets and also an additional 18 train sets, marking a strong boost to ABB's transport solutions portfolio. Now, the execution timeline for the entire order is 3 to 4 years, offering solid medium-term revenue visibility. Let's look at some brokerage notes. Citi is turning sharply bullish on silver, lifting its near-term outlook to around 150 an ounce. And the bank has said that the investor money is driving the move, much like gold, but with bigger swings here. So Citi calls silver gold on steroids and sees strong upside before prices look stretched. In fact, Shadowfax Technologies, which is an Indian logistics solution provider founded in 2016, makes a muted market debut. So the company offers e-commerce parcel delivery and also suite of value-added services, and also its shares list around 9% below the IPO price. This is reflecting cautious investor sentiment before recovering, slightly on the bargain buying. Next up, we have HAL. So Hindustan Aeronautics Limited is moving to boost India's civil aviation sector. its SJ-100 aircraft will help the airlines tackle supply chain delays, says that the company, CMG DK Sunil. Now, the company plans to start commercial production now, within 3 years, and also aims to lease some planes to domestic carriers. Now, the company is also targeting a tenth of its revenue from civil aviation over the next decade, and this is signaling a big push beyond defense. Here's a Boeing forecast that India and the broader South Asian aviation market will require 3,290 new commercial jets over the next 20 years as passenger demand grows. So according to sources familiar with the company's outlook, the plan, reflects expectations of rising air travel within the region and also the expansion of domestic and international networks. Now, India alone is expected to account for a significant share of its, of these aircraft deliveries. And this is driven by low-cost carriers and also fleet renewals. So Boeing is also seeing strong demand for related services and also maintenance. And the outlook underscores South Asia's role as one of the fastest growing global aviation markets. Here's the budget session of Parliament has officially begun with President Draupadi Murmu addressing a joint sitting of both the houses. The session will run in 2 phases till April 2nd, where the key focus areas expected to include taxation, government spending, fiscal consolidation, infrastructure push, and also employment. So what's also drawing attention, this year is the timing. Finance Minister Nirmala Sitharaman will present the Union Budget for 2026-27 on Sunday, that is February 1st. And so this is an unusual move because it has never happened on a Sunday. And the economic survey will be tabled just before the budget, with markets already building expectation. Now, this session could set the policy tone for the entire year. And Amazon has sent an internal email prematurely notifying some Amazon Web Services employees of planned layoffs, sparking confusion and also concern among the staff. Now, the message signed by a senior AWS executive incorrectly stated that affected employees in the US, Canada, and Costa Rica had already been, informed of the job losses and also referenced the layoff plan under the internal name Project Dawn. Now, a scheduled meeting linked the announcement was quickly cancelled after the error, and the company has not publicly confirmed the overall layoff plan, although earlier reports said that broader job cuts were expected this week. And shifting our focus to global investors now that are already placing their big bets on India's digital future. So global investment firm Blackstone is planning to invest over 10,000 crores to develop a hyperscale data center campus in Chennai, strengthening its digital infrastructure footprint in India. So the project, this is led by Blackstone's data center arm, Lumina Cloud Infra, will be built on a 16-acre site in Ambattur and also feature an initial IT load capacity of about 216 megawatt. Now, the land acquisition for the campus was completed in association with Bengaluru-based Berry Group, which will help deliver the project. Now, the investment underscores rising institutional interest in India's expanding data-driven economy and also digital services demand. Here's the AI wave that is driving data center demand is also fueling one of the biggest investment races globally. SoftBank Group is in talks to invest up to an additional $30 billion in OpenAI, according to people familiar with the matter. Now, the discussions are set to be part of a larger funding round that could raise as much as $100 billion and also value OpenAI at around $830 billion. Sources have said that SoftBank already holds an estimated 11% stake following a previous investment, and the talks highlight SoftBank's continued push to deepen its exposure to artificial intelligence, and details of the proposed investment remain under discussion. And as technology becomes more powerful, concerns around safety, privacy, and also digital protection are also rising. WhatsApp has launched a new high-security option called Strict Account Settings, designed to offer stronger protection for users who may be at higher risk of targeted cyber attacks. Now, the lockdown-style mode, which can be activated in the app's privacy settings, limits the features such as media and attachment sharing from unknown contacts now, and also disables the link previews and also silences calls from unfamiliar numbers. Now, WhatsApp has said that the feature is aimed at people like journalists or public figures who may face sophisticated threats and also add layers beyond the platform's existing end-to-end encryption. Now, the rollout will take place over the coming weeks and trade some app functionality for enhanced safeguards. Viewers, we've been tracking the day's big corporate and economic headlines so far, but we now turn to extremely tragic news that has shaken the nation this morning. A tragedy that has left Maharashtra grieving, politics stunned, and an entire state grappling with an irreplaceable loss. In a tragic development, Maharashtra Deputy Chief Minister Ajit Pawar passed away after his plane crashed near Baramati during landing. To pay respects, Maharashtra is observing 3 days of state mourning. The senior leader was killed along with 4 others during the landing. Now, the state government has also declared a public holiday with flags to be flown at half-mast and official events suspended during the mourning period. Chief Minister Devendra Fadnavis and Deputy Chief Minister Eknath Shinde have expressed deep grief, calling it an extremely difficult day for Maharashtra and remembering Pawar as a steadfast colleague and also a committed public servant. Leaders across the political spectrum have offered condolences as the state prepares for the final rites in Baramati. According to sources, Pawar's body was identified by his wristwatch. Ironically, NCP's official election symbol is a clock. So it's certainly a heavy day for Maharashtra, and the funeral is set to be held tomorrow. Now on to another tragic news. A massive avalanche has swept through the Sonmarg area of Jammu and Kashmir late last night, engulfing several buildings and vehicles under heavy snow. CCTV footage captured a powerful wall of snow rushing down the mountainside, covering homes within seconds. Now, officials say that no casualties or injuries have been reported, even though the impact appeared severe. Now, the region had already been, under a high-intensity avalanche warning following continuous snowfall. Heavy snow also forced the closure of Jammu-Srinagar highway and also led to the cancellation of all the flights at Srinagar airport, leaving many travelers stranded. Authorities remain on alert as snowfall is expected to continue. Whereas the Madhya Pradesh High Court has ordered an independent judicial commission to investigate the water contamination crisis in Indore's Bhagirathpura area, where several deaths over December and January are suspected to be linked to polluted drinking water. Now, the court has described the situation as alarming and said that the matter requires urgent judicial scrutiny. A one-member commission will examine whether sewage ingress, pipeline leakage or other failures led to the outbreak of vomiting and diarrhea. Now, the state government has told the court that 16 out of 23 have recorded deaths may be linked to contaminated water. The petitioners argue that the number could be higher. Now, the commission has been asked to submit an interim report in 4 weeks and also has been granted civil court powers to summon officials, inspect the sites and also order water quality testing. Now on to some international news, viewers. The U.S. Federal Reserve is set to announce the outcome of its 2-day policy meeting tonight, with markets widely expecting interest rates to remain unchanged in the 3.5 to 3.75% range. Now, the meeting comes amid unusual political pressure on the central bank, with the Trump administration pushing for further rate cuts. Now, this also marks one of the final 3 policy meetings before Jerome Powell's term ends later this year. Now, Powell will hold a press conference after the policy statement, and also investors globally will watch closely for cues on inflation, future rate paths, and also, the Fed's response to recent scrutiny. And President Donald Trump has said that the United States will work something out with South Korea after his surprise announcement proposing an increase in tariffs on Korean imports now to 25%. So the comment comes the day after he accused Seoul of failing to meet the commitments under a trade agreement reached last year. Washington says that tariff rates were earlier reduced to 15% in exchange for South Korea's pledge to invest $350 billion in the U.S., expand access for American cars, and also remove certain agricultural barriers. But officials now argue that Seoul has not moved fast enough on the legislation to deliver the promised investment. South Korea, taken aback by the announcement, is preparing high-level meetings in Washington this week as both the sides attempt to, de-escalate the tensions between the countries. And US President Donald Trump has said an additional US armada of military vessels is moving towards Iran, and also expressed some sort of hope that Tehran will make a deal with Washington amid the rising tensions. Trump has described the deployment as a show of force while still holding the door open for negotiations. Even as Iran's foreign minister said that there have been no direct talks requested with the US, the deployment comes amid heightened US military activity in the region, including the presence of carrier strike group and also increasing regional unease about possible escalation. Iran's leadership has warned that any sort of use of neighboring territory or attacks against it would be deemed hostile, underscoring the fragile standoff. And Texas Governor Greg Abbott has ordered all the state agencies and public universities to halt the new H-1B visa hiring with immediate effect, saying that taxpayer-funded jobs must first go to the Texans. Now, the directive, which lasts until May 31 of 2027, bars state institutions from filing new H-1B petitions unless they receive written approvals from the Texas Workforce Commission. Agencies must also submit detailed reports by March outlining how many H-1B workers they employ, their job roles, visa expiry dates, and also proof that qualified Texas candidates were considered first. Now, the move aligns with an ongoing federal review of the visa program under the Trump administration. Now on to some sports news, viewers. Delhi Capitals skipper Jemima Rodriguez has been fined 12 lakh rupees for maintaining a slow over rate during the team's WPL match against the Gujarat Giants. Now, the sanction imposed under the league's code of conduct now counts as her first offence of the season. Delhi has lost the game by 3 runs in Vadodara, slipping to 4th place on the points table with 6 points and a negative net run rate. The team is now locked in a tight battle for a top 3 finish and also will face bottom placed up Warriors next in a must-win clash. Well, viewers, that's all on Market Express today. Thanks for spending your valuable time with us. Keep watching NDTV Profit for more continuous market coverage.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का.
Maharashtra's Deputy Chief Minister Ajit Pawar passes away after his private jet crashed in Baramati. Pawar to be cremated with full state honours tomorrow. The state declares a holiday for today along with 3-day state mourning. Market ends higher for second consecutive day. All sectors barring pharma and FMCG close in the green, with Nifty oil and gas as the top gainer. Broader indices finish over 1% higher. Auto majors Maruti Suzuki and TVS post their Q3 results. Maruti's profit misses estimates and margins shrink, while TVS Motors standalone profit jumps 52%. Both the companies see one-time impact of labor codes. BEL gains over 9% after its profit and revenue jump over 20%. Beat the expectations. Order book stands at over 73,000 crore rupees. Shadowfax closes lower after a weak debut on the bourses, list at 9% discount to the IPO price. Parliament's budget session begins. Trump's tariffs, SIR and the G-Ram-G Act are the key issues likely to be on the agenda. President Murmu says the government is committed to social justice, adds that work is being done to further empower the poor. Hello and welcome viewers. This is Profit 360 on NDTV Profit and I'm Himakshi Bhogna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. But first up, today, as you all know, that the nation is in shock. A tragedy that has left Maharashtra grieving, politics stunned, and also entire state grappling with an irreplaceable loss. In a tragic development, Maharashtra Deputy Chief Minister and NCP President Ajit Pawar and 4 other persons were killed after an aircraft carrying them crashed in Pune this morning. The Lear Jet 46, operated by Delhi-based VSR Ventures, crash-landed around 8:45 a.m., 35 minutes after taking off from Mumbai. Now, the other victims included Pawar's PSO, an attendant, and 2 crew members, the pilot in command and the first officer. A statement from the Civil Aviation Ministry also outlined the sequence of events leading to the crash. So what actually happened? At 8:18 a.m., the plane established contact with the Baramati airport. The plane had left Mumbai minutes earlier at 8:10 a.m. The plane's next call was 55.6 kilometers from the Baramati airport. The crew inquired about the winds and the visibility. The aircraft then reported its final approach to runway 11 and the runway was not in sight to them. At 8:30 a.m., first landing attempt at Baramati fails. After go-around, the aircraft was asked about its position and crew reported on final approach of runway 11. After a few seconds, they reported that the runway is in sight. At 8:42 a.m., second approach for landing was initiated. At 8:43 a.m., the plane reportedly went silent, means it stopped sending automatic dependent surveillance broadcast. Now, the ATC saw the flames around the threshold of runway 11 at 8:44 a.m. What did the eyewitnesses say? Let's listen in.
आंखों से देखा है, बहुत दुख भरी, दर्द भरी घटना है। ये हमने देखा कि एयरप्लेन जब नीचे आया था, ऐसा लग रहा था उसका क्रैश हो जाएगा, ऐसा हम सोच रहे थे, तभी क्रैश हो गया। हम देखे कि हमें लगा नहीं क्रैश हो गया है, लेकिन एयर ट्रैप पे उतरेगा ऐसा लगा, उतर रहा है, लेकिन क्रैश हुआ और उसके बाद स्फोट हो गया उसका, जबरदस्त स्फोट होने के बाद वो हम देखने आए, पहले देखा तो उसको आग लगी थी पूरे प्लेन को, और उसके बाद 4-5 स्फोट हो गया विमान में उसका।
Viewers, for more on this, I'm being joined by my colleague Saurabh Gupta. Saurabh, AAIB team is en route the accident site. What do you know so far as probe is concerned? And as I know that you're on ground zero, what are you picking up?
Well, final arrangements now will be made because remember, Ajit Pawar is, of course, Deputy Chief Minister of Maharashtra. He was in position. So obviously there'll be a lot of protocol in terms of last rites. He will be, of course, given a send-off with full state honors. But a tragic, really, incident claiming the life of, a politician who's much loved, especially in these parts of the country, in Baramati, which is really, the pocket borough of the Pawar family. Now, as far as the crash is concerned, everything seemed fine because even go-arounds in aviation are pretty common. They're not out of place. But what happened was that when the pilot didn't read back the clearance to land, for example, when the ATC gives the pilot an instruction, the pilot always reads it back to the ATC for confirmation. That didn't come, and just minutes later, the plane was in flames. And that's something that perhaps is now a matter of investigation. What happened? Because whatever had to go wrong has gone wrong in those last few minutes. Otherwise, things seem pretty normal. The pilots didn't report anything, at least as far as any abnormal behavior of the plane or anything was concerned. In fact, they were regularly communicating with ATC. Remember the Baramati airport, the ATC is manned by the flying club and the others who are there. It's not a fully functional airport. In that sense, it wouldn't have all the modern equipment that an ATC would have. But this was a visual approach, which means the pilot would be visually watching the runway. But the first time around, he couldn't see the runway. There was a visibility issue that was reported. This was the second attempt after the go around at landing, and that's when the crash happened. And now, of course, the tragic news that Ajit Pawar is dead. The top leaders of the state have arrived in Baramati, and there will be state honors, of course, for Ajit Pawar, and of course, a very, very tragic incident for the Pawar family as well.
Absolutely, Saurabh. In fact, we were getting to know that, he was identified by his watch, by the wristwatch that he was wearing. And, ironically, NCP's party symbol is also a clock. And so it's certainly a very, very tragic news that has come in. And in fact, leaders across party lines have paid tribute to Ajit Pawar as his sudden demise, came as a shock for everyone. Let's listen in to those reactions.
महाराष्ट्र के उपमुख्यमंत्री और जमीन से जुड़े हुए जननेता श्रीमान अजित दादा पवार, इनका एक विमान के एक्सीडेंट में बहुत ही दुखद निधन हुआ है। इसकी वार्ता आने के बाद समूचे महाराष्ट्र में बहुत ही दुख का वातावरण तैयार हुआ है। हम सभी के लिए इस प्रकार के जननेता को खोना एक अपरिमित इस प्रकार की हानि है। व्यक्तिगत मेरे लिए वो एक बहुत ही दमदार और दिलदार इस प्रकार के मित्र थे और हम दोनों ने साथ में काफी संघर्ष का काल भी देखा है।
हमारे सहयोगी अजीत दादा पवार जी का प्लेन एक्सीडेंट में दुर्दैवी मृत्यु हुई है। ये हमारे लिए बहुत ही बेहद दुखद है और महाराष्ट्र के लिए भी दुखद है, उनके परिवार के लिए तो बहुत ही दुखद है।
समूचे महाराष्ट्र के लिए केवल नहीं लेकिन राष्ट्र के लिए एक दुखद घटना है। पवार साहब का एक बहुत लंबा इतिहास केवल जनसेवा के साथ नहीं लेकिन जनता के साथ जो जुड़ाव उनका था वो बेमिसाल था। महाराष्ट्र ने एक कुशल नेतृत्व को खोया है। मराठा होने के नाते एक कुशल मराठा सैनिक आज हमारे बीच में नहीं रहे।
Viewers, as the nation mourns a heartbreaking loss, serious questions are also being raised about the aviation safety, oversight and also preparedness. To help us understand what may have gone wrong and whether this tragedy reflects, deeper systemic challenges, we are joined by one of the country's most respected voices on aviation, Sanjay Lazar. Sanjay, sir, welcome to the show.
Thank you. Thank you for having me.
Sanjay, sir, this tragic crash adds to a string of serious aviation incidents in India in the recent years, from major airline accidents to regional and also charter aircraft mishaps. From your perspective, are there systemic risk patterns that regulators and operators are overlooking at this point of time?
Thank you, Himakshi, for having me on your show. It's a very sad day for all of us in Maharashtra, in Pune, in India, that we've lost Ajit Dada. I had the good fortune of working with him 15 years ago. And, you spoke of his watch being identified. He actually worked by his watch. I've attended meetings with him at 5:30 in the morning, 6 in the morning, and he was so punctual and dead on time. Ironically, I live in the Baramati district. Supriya Sule is our MP as well. So it's very personal as well at some level. To answer your question, yes, it brings to bear a question mark on what could have happened in this incident. We already know, and as you so eloquently put it, the PIB press release states that they had a go around, and then the pilot spotted the airfield, did not give a read back to the ATC, and then of course disaster struck. That airport, as you know, has been in functioning for over 25 years. There are 2 flying academies in that airfield. We have the Carver and Redbird as well over there. So it's not unknown to have many flights coming in and out. There have been a few accidents, but this brings to bear the point of view that though VSR is a very recognized and known name in aviation, a similar Learjet incident happened in Mumbai 2 years ago, and same Learjet 45XL. And that investigation report is still not released by the AAIB almost 2 years later. Now, we do know that the pilot in command here was quite a well-qualified pilot, and the first officer, Sambhavi, was also an instructor at the Madhya Pradesh Flying Club. So it's not that lack of ability. We will need the AAIB to look into what had gone wrong with the aircraft in the dying seconds of this flight, and I would not like to speculate. Coming to the larger picture of the regulator, I have long been a votary for a revamp in the regulatory system. We had a CAA bill, in 2014, which got shelved. It's time that, the regulator is made more independent and more professional than it is already. I have been speaking about this, writing about this, and I will continue to do so because I believe India, is the 3rd largest aviation nation on earth, and we're getting 2,000 new aircraft coming into our skies. We need a more professional and a larger, well-regulated setup. Unfortunately, there's a lot that escapes between the cracks here, and we need to have tighter surveillance. It's all okay to say, this is one odd accident in many, but it's happening too few and far between nowadays, very often, and that's what we need to control about.
Please, Sanjay sir, and also, like you said that, these Learjets and everything needs to be more regulated now. That's the ask as per, all the aviation experts and also people in the know. But how can we really reduce the air crash incidents? If you could just shed some light on that as well.
Well, we have a robust training program. They have a robust, investigation and vigilance programs into pilot training, etc., across the country. There's no doubt about that. This is not for a minute to say that we are an unsafe country. But what I try to say is that, the DGCA has become a huge superstructure today. And it's time that we looked at regulating the regulator and fine-tuning it so that we could have different wings. It's all goes to one person. There are, of course, 19 different divisions and heads. I could, speak for an hour on that if I had to. But I think the time has come and the aviation ministry needs to understand this is no longer about putting, having bureaucrats in one role and not. You need professionals, long-term professionals who are selected for their skills, not who they know. And let's get that clear first. The second part is tighter maintenance and management on private operators and public operators, both. Both need to be sharpened. We've already seen the Indigo crisis. We had an air crash last year. We've had a few other crashes, in in the last couple of years. It needs to be tightened up in all aspects. And I think it's time the Parliament also looked at it and revived a CAA bill to make an independent aviation authority, some separate organization that looks after the engineering, the licensing, the training, because the time has come. If we are going to go to 300 airport and 3,000 aircraft, we need to have tighter management.
Absolutely. Sanjay sir, also, this tragedy comes at a time when India is aggressively expanding its aviation sector. So adding new airlines, more aircraft and, more regional routes, are we really scaling up faster than our safety ecosystem can support? And is this crash a wake-up call for the regulators out there?
Well, it's ironical. I was on another NDTV channel yesterday celebrating the Adani-Umbrella deal. And, what a big step it is for our country in aviation. I'm proud of it. This morning, we were to flag off the wings in Hyderabad. That's another major step. We had the HAL and, the Superjet from Russia being inaugurated last week. So we've had series of instances. We've had growth, unparalleled growth in our country. It's time we also revamp the 1929 structure of the DGCA and the regulator. Let's make this very clear. We are not growing faster than we can control it, but we need to put in place a proper system. And unfortunately, we're all, wearing, blindfolds on our eyes and just going forward as though everything is going to be okay. You don't want to come to a year where you have 3, 4, 5 accidents because things are slipping through the cracks. We've seen the report in the Indigo crisis, talks of systemic failure, etc. But nobody was pulled up within the organization of the DGCA. How could you have systemic failures when the regulators were not keeping their eye on the ball? That's my point here. You need greater accountability. Just yesterday, another newspaper has said that they want to now revisit the FDTL with the airlines, which they've just passed in November. Ridiculous, again. So these are things we need to do for safety in our country, aviation. And listen, there is no price for safety. We've lost one of Maharashtra's tallest leaders today. Let's understand, I'm not saying this was an unsafe accident. I'm not saying that at all. But what I'm saying is, aviation is such a serious business. We cannot trim corners here. That's what we need to look at very strongly.
Absolutely. We cannot trim corners here, and there should be an accountability. Mr. Lazar, thank you for speaking to us on a day of national grief. Thank you for helping us understand the complexities behind aviation safety and also why incidents like these demand not just mourning but also serious reform. And as investigations continue, what remains clear is that accountability, preparedness and stronger safety systems must become non-negotiable, because every life lost to such tragedies is one too many. And viewers, we are getting a breaking right now. IIP for December has jumped to AQ26 month high of 7.8%. The IIP data is out. Industrial output has risen 7.8% versus 6.7% in November. If we look at the industrial output, versus the estimate, so it stands at 7.8% versus the estimate figures of 5.9%. Now, if we look at the mining sector output, so the growth stands at 6.8% versus 2.7% year on year. If we look at the manufacturing output growth, so that stands at 8.1% versus 3.7% year on year. December IP growth of 7.8% is considered to be the highest in 26 months, is what we are getting to know right now. And also, if we talk about the electricity sector output growth, that stands at 6.3% versus 6.2% year on year. Primary goods output growth also stands at 4.4% versus 3.8% year on year. And also capital goods output growth at 8.1% versus 10.5% year on year. Consumer durables output growth stands at 12.3% versus 8.1% year on year. And also, if we look at infra goods output growth, 12.1% versus 8.4% year on year. And also intermediate goods output growth stands at 7.5% versus 6.4% year on year. Now, I am being joined by Aditi Nair, Chief Economist, Head Research and Outreach, ICRA, on the phone line to decode these numbers for our viewers. Aditi, what are you making of the IIP number that has come out for December?
Thank you. Well, certainly the number has been better than what we were expecting, and it has surpassed the figure for the previous month as well, which we had thought was partly boosted by the base effect. Given the fact that exports were, did not show a very high growth in this month, we think that this is being led by restocking ahead of, given the consumption during the festive season. So possibly it is a restocking-led effect which has led to the IIP growth being so high in the month of December.
Right, right. So, Aditi, 7.8% IIP is also the strongest print in over 2 years. So how much of this, genuine demand recovery is, versus the favorable base effect?
Possibly it's not so much of the base effect. I think it's a reason that we saw high growth in consumption during the festive period. And it's possibly a reflection of the restocking which needed to be done subsequently. If you look at the quarterly averages, definitely Q3, the quarterly average growth for the manufacturing sector within the IIP has been better than it was in Q2, but not by a very huge amount. And the base effects related to Diwali basically sort of cancel themselves out over the course of the quarter. So that's a better way of looking at it. I would imagine that we will end up with a growth slightly above 7% for the overall GDP for Q3 based on the IIP number which has come out today. Of course, I'm talking about the current base and the new base could be different materially from the numbers that we've been seeing on the present base that we have. But yes, I think that overall we should be in for a growth which would be slightly higher than 7%. As far as the current base is concerned for Q3.
Okay, Aditi. And also, what does this mean for GDP growth in Q3 and Q4? Also, should the expectations be revised upwards?
So like I said, we're looking at a number which is slightly higher than 7% for GDP growth for Q3. For Q4, it's a little premature to say, and of course, we'll be well into the new base year when, by the time Q4 data comes out. So, broadly, I would expect with the base effect and with some amount of pullback in terms of the support from export, Q4 GDP growth should be lower than Q3 GDP growth, both in what we'll be getting for these 2 quarters.
Okay, so Q4 should be more than Q3 is what we are anticipating. And also, how sustainable...
No, the reverse. Q4 will be more than Q3.
Okay. I beg your pardon there. And also, how sustainable is this, momentum given the global headwinds and also weak external demand?
So, my view, unless we get trade deals with the US, the growth will be slightly weaker in the coming quarters as compared to the 8% that we saw in H1 and the 7% plus that we're expecting in Q3.
Okay, Aditi. And also, if we look at the consumer non-durables, so they have also swung from contraction to strong growth there. So does this signal rural demand, finally turning a corner?
The sense we have is that rural demand has been building up for the last few quarters. So I don't think consumer non-durables turning around in the month of December is necessarily a reflection of rural demand turning around. I think it's more of inventory alignment after the GST rationalization, etc., and some pickup in urban demand as well. What we were expecting was that the initial impact of the GST rationalization would have been on big ticket items, which is what we've seen during the festive. But the more lasting impact of the GST rationalization with a lag, and that's possibly coming through now.
All right. Thank you so much, Aditi, for being there with us and decoding, the numbers for our viewers there. Thank you so much for joining us on the show. And viewers, shifting gears now, let's look at how the markets have fared today. So markets have continued to hold on to the positive sentiment as the Nifty ended in the green for the second consecutive day. In fact, Bharat Electronics and ONGC, have led the gains in the Nifty basket. But broader markets have observed higher traction as the main indices from the mid and small cap space gained over 1.5% each. Now, but for a detailed analysis of the winners and the losers in today's trading session, let's go across to my colleague Mahima.
So markets have definitely ended on a positive note, well above the 25,300 levels is what we're seeing. The Nifty ended around 0.7% higher. Even in terms of where the broader markets stand, the mid-cap 150 ended 1.7% higher, and the small-cap 250 ended on an extremely positive note, up 2%. In terms of where the Nifty stands, the top gainers included names like Bharat Electronics on the back of strong numbers coming in, and ONGC on account of Brent crude rising. Eternal and Coal India as well gained over 5% on Nifty. Broader markets, of course, did outperform the benchmark indices. CG Power, Oil India gained the most in the mid-cap 150 space, and Tejas Networks and Data Patterns gains the most in the small-cap 250 space. Hindustan Copper was again one of the standouts, gained around 12% in trade today. All sectors ended in green, barring Nifty Pharma and Nifty FMCG. Nifty Oil and Gas among the top sectoral gainer. Nifty Oil and Gas as well as Nifty Media and Nifty Metal gained over 2% in trade today. So this is the overall view as to how markets have panned out today after a really long time on a positive note.
Thank you so much, Mahima, for that market roundup. And with that, it's a wrap on this edition of Profit 360. Viewers, stay tuned to NDTV Profit for more news and updates.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
Budget 2026, the growth agenda.
Hello and welcome to the show. Budget is just around the corner and corporate India is really watching out for the finance minister's budget speech. What's really going to be the key head turners? And while there is global turmoil, how is India resilient? What has been government's contribution? And at the current moment, what does the budget need to really address for a far better fortified economy of India? Let me welcome on the show R. Mukundan, President Designate of CII, and Chandrajit Banerjee of CII. Gentlemen, so good to have you on NDTV Profit. Beginning with you, Chandrajit Banerjee, how do you see the current socio-economic, geopolitical scenario and the India's position in it, and what will corporate India really require at this point from the government?
So, I mean, because you are relating socio-economic to geopolitical, and we having just come back from Davos, I would start by saying that if there is a spot in the world which the world looks at as a reliable partner at this point in time, it is India, and because it is stable, we have had the best of economic growth. We have had also inclusion through our many projects like digitization, the DPI, and all of that, which has really benefited all. And we have seen a high growth rate, a very high growth rate, which is the highest in the world amongst emerging economies. But at the same time, we have seen inflation, which has been so very well controlled. And so the supporting fiscal conditions, the macroeconomic fundamentals and stability, and the structural reforms that one has seen. We've of course all seen the reforms expressed. So looking ahead, we see the next 12 to 18 months growth prospects to be very, very strong. There is a strong bounce back of demand, for corporate sector doing well. And then the business confidence index very strong, and even to end with, I would think that there is good stable growth in private capex. So these great fundamentals for us to see as we look at the budget, which is up there in a few days' time.
All right, the excitement in your voice about the budget is quite infectious, Chandrajit Banerjee and R. Mukundan. Now, of course, we are faced, the entire corporate world and exporters like yourself, manufacturers like yourself, have been faced with a unusual problem globally of tariff war, where the Indian government has had a two-pronged strategy of diplomacy with the US and negotiations there, and on the other hand, doing FTAs with several other regions to open the market for the Indian producers. How do you see, as a corporate representative, this particular scenario and the uncertainty impacting the corporate world?
Thank you, Nisha. I think let me first start by saying that I want to compliment the government for a very, very deft handling of a very complex situation as it has evolved. And I think you already highlighted that. I think we have done it in two ways. Never waste a crisis. Focus on internal reforms. If you look at GST 2.0, if you look at what we've done with the labor codes, and in addition to that, also open up the economy by signing multitude of free trade agreement, whether it be with UAE, with UK, whether with Oman, and now with EU. I think what government has done is to make sure that Indian industry continues to be competitive and has got access in the markets around and is able to sort of withstand the pressure which came in with the uncertainty which unfolded because of certain changes in the geopolitics as we saw it. And that has come out actually in terms of numbers too. The trade has held up well, the exports have held up well. Of course, some sectors which have been impacted, but I can say that very quick handling by the exporters and the government jointly to identify new markets and identify new routes to access markets has led to a situation where I think most sectors, while they took a dip, I think have bounced back very well. And I think this the latest EU-India trade deal also augurs well. That does not mean we don't start working towards signing up one which is left just now, which is a US deal. It's work in progress, and hopefully that gets done. But what is very critical, which is going into this budget, is it actually lays the foundation for what needs to come next in terms of elements which will take us forward, which is high growth, high level of innovation, high level of sustainability, and high level of external engagement. If you combine all this,
yes,
finance minister has already alluded to that this budget, she's going to focus on indirect taxes, which is a very welcome move because some of the things which can be unlocked there are yet to come. In addition to that, I think if we can also access new ways of funding the government to open up and continue its focus on infrastructure and building innovation platforms, I think we would have done excellently well. And that would address one of the core concerns I think we all have as India tries to grow, is the growth of skilling, growth of talent, and growth of what we call sound jobs in a world which is increasingly has to embrace AI, has to embrace digital.
That's right. You've encapsulated a lot of points and a huge wish list there coming in from corporate India from the budget, R. Mukundan. But Chandrajit Banerjee, out of all these aspects, of course, fiscal prudence is a challenging task, and that's going to be very important. Considering that rupee has dropped to its lowest ever levels, and on the other hand, there are global macro factors which are really impacting our economy as well, and also our import bill and oil bill is dependent on our purchasing power of our currency. Putting a lot of these aspects macroeconomic wise, what do you think should be the main point and agenda of the finance minister?
See, I think one of the biggest achievements of India in the last few years have been its fiscal prudence. And this has been very strictly adhered to since the time of COVID. Actually, we have been very strong as far as fiscal discipline is concerned. And I think our view would be that fiscal discipline and growth can go together. And a right type of focus on the right type of spending. And that's going to be critical. What India did was to have a very strong focus on public capex. And I would imagine that increasing capex by 12% or so in the forthcoming budget would be a prudent way of looking at to how do we spur economy and counter some of the points that you mentioned. The other area of when you talk about fiscal discipline, etc., is the debt to GDP ratio. We are at 54.5, right? And if we are able to keep that with a tolerance limit, that would be very important. The third part, of course, is the fiscal deficit itself. We have a glide path. Adhering to the glide path, keeping that 4.2% for 27 fiscal would be extremely important. That's a very critical area of work. Now, as we do that, there are certain spendings that we would require. The quality of spending, and so better targeting of subsidies is something that one would expect, and one would expect. How do we reduce leakages? And I think that's something it's a very important. When we are talking about direct benefit mechanisms, and this will keep the macro stability intact while we are looking at higher levels of growth rate. So capital expenditure creates jobs, it boosts productivity, it will of course also crowd in private investment.
Yes.
I think this is the sort of and one last point on that is state level capex. How do we really focus from moving from the central level capex to seeing to it that the states are incentivized and given more space and even loans for state level capex to pick up?
That's right. Very, very critical points mentioned there. But when we talk about capex cycle, with the GST reforms, where a lot of deductions have been done to really boost consumption, and that has been done recently, probably the elbow room for the government to really spend is going to be limited. R. Mukundan, will private capex pick up in a big way? And what is needed for that to really happen?
So one of the things, Nisha, I want to highlight is I think the private capex in many sectors actually has picked up. I think as the capacity utilizations have jumped much closer to 80-85%, many companies have started to sort of invest, and I think you would continue to see a boost in the private capex going forward. It was lagging behind the government capex spend for 2 years back, but now it probably is catching up, and the companies are very well incentivized to put capital on the ground. With the signing of many of these FTAs and the access which Indian companies have got, I think that's a big boost to external sector that is also going to drive capex. And many of the foreign companies, the international companies, are also looking to invest in India. Because the diversification of supply chain, building resilience in supply chain away from dependency on one single country, I think is now a theme which has gathered even greater momentum. And I think India offers the optionality for people. And I think these reforms which government has put in place and the signing of these FTAs has only strengthened the attractiveness of India as a destination market. What we need to do is when capital does come in, we need to act with speed. So it's not about ease of doing business, also the speed of doing business needs to and in that, some of the bottlenecks we do have is, for example, access to land is one of the key bottlenecks. We've been saying create a national digital land bank, which people can access, get access to land when the industries have to be set up, and also access to the whole element of labor so that the living condition of labor improves. So what we've also been recommending is things like providing access to hostels for a labor force to stay in good living conditions. So these are all things which I think come at the tertiary level, but now they're becoming increasingly important. What you highlighted just a bit before is that not only should the center work, now a lot of this effort has to shift to states, and states have to also improve the ease of and attracting business to their to their industrial centers. And I think a lot has been done by few states, a lot of heavy lifting, but I think every state must now need to pull forward, and anything government can do to incentivize that, to make sure the states are egged along and nudged along to deliver on ease of doing business and the speed of doing business, which is always a welcome move. And whatever budget can do in that manner in terms of nudging would be very positive element.
The Atmanirbhar Bharat, momentum that was started by the government earlier has never made more sense than in the present context. R. Mukundan, you will agree with that. And also the PLI schemes by the government. There again, a few of the at least startup companies and certain sectors have really pointed out that it should be not sunsetting much sooner than the really projects take off from the ground. What else can be done on PLI, and what is the ask of the corporate India when it comes to these kind of projects by the government?
So I think, Nisha, one of the things you highlighted is when many of these schemes start, there is always it takes time for them to gather momentum. And very clearly, early sunset of some of these things is counterproductive at times. And I think it's only fair to ask, and within the fiscal prudence government can do, I think it's important that we pursue. So there are things like critical minerals, there are things like electronics, there are things like some of the key defense areas. These key areas, I think, helping the private sector to come up to speed, to fill the gap and make sure that it can invest with boldness is going to be something which is going to play a lot of big dividends. India is going to become a hub for sourcing, not just for the key minerals, key processes, or not just for electronics in the long run, but also for defense. I think these areas augur extremely well. As one of the key areas I want to just say is that world tends to move from 2%, 3% to 5% of GDP spend on defense. It will open up a huge market for Indian private sector, which is already having built capabilities due to Atmanirbhar, which you referred to. I think same way we've seen the big boost electronics has got in exports, in accessing international market. I think we should double down on that and increase the outcome. Also, one of the other areas, we just tend to not to speak about agriculture and food processing, a big opportunity.
Yes.
I think the opportunity for Indian food to reach world market after processing is again a big opportunity, which I think we should continue to focus. And bringing jobs here through GCC again is a service sector area, but I think today these GCCs are doing very complex processes, and I think building scale in them is also going to help us. So it's going to be all-round effort, areas where I think there's high import dependency and export opportunity. There is going to be areas where agriculture can play a larger role in food security around the world. There is an opportunity in what we call as a defense security around the world. And finally, building capabilities in service sector, where I think India can serve the world as a center for giving its capability access to entire world to become more efficient and more competitive.
That's right. Indian companies have to be much more competitive, and their funding plays a very important role. Mr. Mukundan, any word on that? Because, FDI is something that we have been attracting. FII outflow has happened. Japan has raised its interest rate, which has been really funding a large part of our infrastructure. On the other hand, there is a global turmoil. So how do you see the funding requirements, especially from global pools, and what can India do for domestic pools?
I think if you look at the private sector, I think what government has done in terms of emphasizing on what governance standards, it will make sure that the foreign funds, when they want to come to India, access the capital markets, there'll be robust resonance with them. In fact, what you see in Indonesia unfold today was because of concerns on the governance issue. So I think the government rightly has focused through Ministry of Corporate Affairs on making sure the governance standards are one of the best in the world. So leave that aside. I think in terms of the government funding itself, which is an element which is the key talking point during the budget, I think the focus needs to be looking at the opportunity which the capital market affords to government in terms of also going through what I would call disinvestment 2.0, where we can we can go another round of fresh disinvestment, which can then, that capital can then be used to develop what I would call infrastructure and strategic fund, which then government is able to pinpoint and target its finances to build resilience in sectors which it wants to sort of focus on. So clearly, it's going to be focusing on capital markets, making sure those capital markets, both equity and debt, are in vibrant condition, and at the same time, utilizing that capital market resonance to sort of raise capital for the government through some of the world-class companies government already has created.
That's right. In fact, on that particular front, MSME is a space which needs a lot of upliftment, a lot of support and funding as well. Chandrajit Banerjee, what does MSME need from the budget?
So, that's going to be very, very critical. Actually, now MSME is micro, small, medium, that itself three very, very different categories. So if I can really first focus on the mid-size and the smaller companies, I think what is the present constraint? Number one is, of course, the constraints of capital. capital support. And here comes in the issue of patient capital, some sort of a capital support mechanism that can be available to them, especially for manufacturing projects, which could be typically between 50 crores and say about 1,000 odd crores. And that scheme could we could create a sort of a mechanism where we could look at funding or rather looking at an interest free loan. So there's a participation in it and covering 50% of capital with a sort of a long-term for a 10-year sort of a moratorium and a phased sort of a repayment. That will help enable them to take the type of risk that we would wish that they are able to take, which is not possible for them at this point in time. So we are looking at a sort of a 10,000 odd crore type of a fund of funds, so to say, for growth capital, modernization, R&D, be ready for IPO or be ready for acquisitions and all of that. And that also gets into technology. And really, those are the type of stuff that they would require. Now, looking at the micro side of it, which is again a very, very important, where we need to see to it that we create mechanisms with partnership with the large companies, because the micros are going to support the large companies also in many ways, to create how do we build them up into the chain of competitiveness. So digital transformation for them, getting them to be a better entrepreneur, which are in tune with the times of today. So all of this is a system which we should sort of the budget itself could be an enabler to all of this in a very big way.
That's right. That is one important aspect there. But Mukundan, tax concessions, that must be a huge demand from corporate India. Tell us about what is expected and what corporate India wants.
See, on taxation, one of the things we've been wanting to say always is, we need certainty and a long-term certainty. I think that's one of the key things which we need to work on, we continue to focus on. I think in terms of indirect tax, we've been saying that a lot has been locked up in disputes. Maybe one-time amnesty scheme could work for everybody. Second is, if you look at customs, I think we can look at a very visionary digital transformation of customs, which is paper-free India as far as custom processes are concerned, so things can move at digital speed. In terms of direct taxation, again, I think we need to move from towards a trust-based tax administration where dispute is prevented rather than created, and this needs to work through the advanced rulings which come in, where we actually man them with adequate number of high court judges so that they can give advanced rulings for to ensure that dispute is prevented. And we need to also look at some of the areas like simplifying IT procedures, whether it be for TDS, TCS. There are so many categories. Can we simplify them? Can we make them 2 or 3 categories? I think these are the elements which the budget needs to focus on. Clearly, indirect tax is one big area which I think the government needs to now sort of take up the step. Direct tax work has been done, but here the main effort would be to further simplify what has already been done in the last 2 budgets.
That's right. In fact, budget tax simplification and efficiency has been a constant journey by the government. And there again, a lot of success has been achieved. But my final question to you, Mr. Mukundan, and that is on job creation. Personally, for me, as I see from my vantage point of the whole economy and the corporate India, job creation is one of the critical factors which can really pain the economy going forward and the citizens of the country. How is corporate India looking at it? And whatever steps the government has proposed in the previous budgets, are they really working?
I think the government and industry are both focused on ensuring that jobs as a key matter is addressed, not just in the budget, but as a general growth agenda. I think growth itself creates job and job opportunities. But I think one of the key elements we need to say, in addition to investment and growth, is the skilling effort which we do. Is our skilling effort future ready? For example, do we have enough of digital, enough of AI, enough of skills which are perfect for the market? I think the several schemes government has introduced in the last two budgets have done very well in terms of making it more robust. We are actually looking at India's skill not only for Indian industry, but also India's skill for addressing the world needs. As the world population ages, I think this is the right time that we need to focus much harder on making sure that we have got a skilled talent which is future ready, and creating that pool is going to be extremely critical. It is a journey, and I completely agree with you. I think if there's one challenge we all need to be constantly on the lookout is this jobs question, not just from the perspective of that India has got a large pool of manpower coming into the market, but also in terms of the AI challenge. How do we keep everybody ready for the challenge when the time comes? So clearly, it's an area which both government and industry are focused on, making our institutions more resilient, more able, and more capable. When I say institutions, these are education and skilling institutions, and working with them along with industry, I think is a way forward, which I think government has already laid out a good roadmap.
That's right. Many points made there, and this is one particular aspect where probably the labor code also gives a lot more sanity to the labor class and makes the area much more conducive for the working class as well. But R. Mukundan, Chandrajit Banerjee, thank you so much for sharing so many insights from economy to company to taxation on how the budget should really come along with corporate India in the growth journey of India. Thank you so much, both of you, for joining in, and we'll pick up this particular topic post the budget. Thank you. All right, with that, it's a wrap on this special edition of What Corporate India Wants from the Budget 2026. Thank you so much for tuning in. Keep it with NDTV Profit.
Budget 2026, the growth agenda.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूं, कोई सुनता ही नहीं।
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate
It's human versus AI today on Your Money Matters. Wondering what we're talking about? Well, it turns out, and this is something my producer told me, a lot of people are going to the various large language models out there, your chat bots, ChatGPT, etc., and asking for advice on financial planning. And so I thought, why don't we discuss real world cases with a financial planner and compare it with the responses that you get if you feed the same queries into a chatbot. And we'll discuss both with the financial planner I'm speaking to today. Let's see what turns up. We've got Megha Malpani, who is a partner at Zvest Financial Services, joining me today. Megha, thanks so much for taking the time. I'm intrigued about what your responses are going to be and what the chatbot throws up. I'm sure that there will be parallels, but there's a more involved process. It's not just the outcome, right, when you're talking to a financial planner. So let me get started with the first question, which actually is somebody who wrote to me on Instagram. And he's saying that he's buying a house in his hometown and he has a home loan of 40 lakh rupees, or will have a home loan of 40 lakh rupees by March. And that is by the time it is complete. He says that he's put 40 lakhs in cash. His question is, he's anticipating an incoming amount of about 40 lakh rupees in March. Should he pay 20 lakh towards a loan and invest the remaining in mutual fund and slowly pay off the loan, or should he completely clear off the home loan? He says he's 35 years old. He's got his mutual fund investments in Parag Parikh Flexi Cap Fund, which is worth about 40 lakh rupees right now. He wants to hit that 1 crore mark ASAP. He's not defined what the time frame is, but it's ASAP, and his currently monthly SIP is 60,000 rupees. So what would you take from that information?
Right. Thanks, Alex, for having me here. And, this case the query is quite common, wherein we often get cases about prepaying a home loan versus investing. Now, the way we advise is on 3 parameters. I think, if you try to understand it from 3 perspectives, psychological, financial, and from a taxation angle. To my mind, psychological aspect is as important as the financial aspect, and let's try to decode what it is. Now, if someone is debt averse, is not very financially prudent or not very disciplined, and does not have the ability to handle drawdowns which equity market is going to present at different points in time, it is better to prepay the loan. However, if these conditions are not met, from the psychological aspect, one can easily move to the financial analysis bit. Now, as far as the financial analysis bit is concerned, let's analyze it from 3 or 4 important parameters. First being whether he's a sole earning member in the family and who are the financial dependents. Now, if he's married, his spouse is working, then it might be prudent to consider taking the loan. However, if parents are financial dependents, the risk transfers have not happened yet, then, taking a liability does not make too much of sense, given the fact that there are inflows to cover the home loan. Also, it is important to consider where he is working and what is the stability of the job, especially in the given scenario. Whether you're working for a startup, whether it is technology, or you're more, towards the professional services bit, that would also help us ascertain how stable the job is. Third important point being, at what rate of interest can one take a loan? Now, to my mind, for the next 12 to 24 months, a realistic rate of return expectation would be in the range of 12 to 13%. Let's take 12%, for example. The post-tax return would be around 10.5%. take 10% deviation, we come down to about 9%. So if the home loan is available at a rate which is more than 9%, the answer is a clear no towards taking a home loan. However, if the investor is getting a rate of interest which is at least 100 basis points lower than 9%, it may make sense to consider taking the loan. Also, it is important to analyze whether how much percentage would be left, after paying the EMI. So if EMI constitutes a larger part of his take-home salary, which could be in the range of 40 to 50%, the answer is again a clear no. Now, from the taxation perspective, the new tax regime actually does not offer any advantage to taking a loan per se anymore. These conditions have to be considered, together to ascertain whether he should take a loan or not. Now, as far as, reaching the goal of 1 CR ASAP is concerned, and as you rightly pointed out, ASAP is not defined. However, to my mind, I have few observations. One, 40 lakhs in a Parag Parikh FlexiCap kind of a fund, it is a good fund, no doubt, having generated meaningful alpha over the years. However, going forward, it would become important and prudent to, kind of rely on asset allocation parameters. Now, if he is partially paying the loan and the remaining has to be invested, he might want to bucket his expenses from a time horizon point of view. Say, for example, a 1 to 2 years kind of a bucket could go into equity savings or could go into an income arbitrage kind of a fund. If he's investing lump sum for a longer period in the given market situation, he may consider, hybrids, large cap and large cap based flexi cap funds through an STP mechanism, not to do lump sum at this point in time. Yeah. Also, it would make sense to incrementally keep adding to SIPs as and when you kind of get bonuses, salary hikes, and as and when you get bonuses or any windfall gains in the form of bonuses or anything else, it might be okay to prepay the loan because there is no pre-penalty as far as the home loan is concerned. So to my mind, once you kind of build a framework on the on the parameters I just alluded to, it would we would be better in a better position to address whether he should take a loan or not take a loan.
Okay, so fair point. What I'll do is let me run through what is being said by the chatbot. And it's not really pointing out to one option. It's presenting the options and saying, you can choose what you think is the best option. So the first option that is being suggested is you can pay off the full 40 lakh loan. This makes you debt-free according to the chatbot, and saves on interest potentially to the tune of 3 to 4 lakhs per year at about 8%. It would be slightly lower than that if you're at the higher scores with regard to your credit score, and then reduces stress as well, something that is not really measurable, and use future SIPs to rebuild investments towards that 1 crore mark. I guess this is something that people who are risk averse in terms of debt can consider. The second option that is talked about is pay 20 lakhs towards the loan and invest 20 lakh in mutual funds. You can keep the reduced loan and pay EMIs while investing the rest in the same fund, is what the chatbot has said. It says that you can keep the reduced, alternatively, you can keep the reduced loan and you can invest the rest. If mutual fund returns exceed the loan interest, which is likely, your corpus is growing faster and you're likely to hit 1 crore faster, but the market risks also apply. They're saying that the recommended way to approach this is to go partial if comfortable with the risk and invest 20 lakh rupees to accelerate growth, as the math favors it over loan costs. Increase the SIP if possible in order to reach that 1 crore mark faster. So it's a pretty straightforward response to a query. My assumption, Megha, would be that it would give you more parameters if you were to prompt it further. But what was your initial take on it?
So, Alex, as they say, personal finance is more personal than it is finance, right? So, to my mind, it is important to understand an investor from a behavioral perspective. So, if you saw, I kind of recommended to see the psychological aspect first before moving to the financial implication, because as you rightly said that somebody is debt averse and does not have the ability to handle drawdowns, it would kind of make you falter on both sides. You have taken a loan and you're also seeing kind of market correcting. So I think about AI, it gives you more certain recommendations, whereas when you're kind of dealing with somebody in person, it helps you in understanding the context much better. So of course prompts are important, and to my mind I think also what happens is life is also very volatile. It is like a stock market in itself, right? You have recessions, you have job transitions, there could be illnesses, there could be so many host of factors, right? So you need to kind of, once you have somebody to speak to, it kind of helps you to get reassurance when you need and avoids you from taking any ad hoc decisions. I would not recommend continuing in the same fund forever, because while it is a good fund, but it is also important to understand that mutual funds also go through cycles. No Q1 fund remains a Q1 fund forever. And I'm someone, who strongly believes in asset allocation. So there is no debt here. There are no hybrids here. There is no precious metals here. There is no offshore equity
and by the way, this is a question from a real user who's reached out to me on social media. His name is Sayam Kumar. So why don't you suggest, Megha, how he can take this up? And of course, at this point, the caveat is that he's not stipulated any of his long-term goals, which is okay. He's 35 years old. Maybe he doesn't have clarity. And he wants to reach that 1 crore mark, which a lot of people, Megha, see as your first step, which allows you that multiplicative growth down the line, right? So why don't we help him, or rather you, not me, I'm just asking the question, about how he can have that appropriate asset allocation, maybe add a couple more equity mutual fund schemes, just so that he has that diversity, not just in market capitalization, but also possibly in style. You can also list out a few that you like.
You want me to mention the funds?
Yeah, and it's not a recommendation, but you can say from your perspective, this is what you would do.
Yeah, so, this is not a recommendation because I do not know the investor. I have not evaluated him on other parameters, but some of the funds in the hybrid space, ICICI Prudential Balanced Advantage Fund is good. In terms of large cap, DSP large cap is nice. In terms of flexi cap, SBI Focused Equity Fund, Parag Parikh Flexi Cap Fund, ABSL Flexi Cap Fund has recently started doing well. In terms of mid cap funds, one can consider HDFC. In terms of small cap, you can consider SBI Small Cap or Abundant Small Cap. Gift City, I'm not sure, if it makes sense at this point in time. And, the caveat as far as offshore equities are concerned, funds keep, accepting and stopping any further increments. So, one needs to also consider at the time of making investments. But, at least it is important to have not just, diversification in terms of market cap, but also in style of investing, right? Because if you understand, Parag Parikh Flexi Cap Fund is largely a value style of investing, and value has done very well for the last 4 to 5 years. We are kind of seeing green shoots as far as quality parameters are concerned, and it might make sense to kind of add those to your investment consideration set as well.
Let me ask you this. So suppose he's got a 60,000 rupees, as he's pointed out, right? So 60,000 rupee SIP right now, and he's got incrementally 20 lakhs that he can invest. So what would he do with that additional 20 lakh rupees if he pays off 20 lakh rupees and he uses 20 lakh rupees? That's the middle ground, assuming that he can do that, and assuming that he can, let's put two scenarios, right? If he invests the entire 40 lakh rupees plus continues his SIP of 60,000 rupees, if he does 20 lakh rupees, if he does the 60,000 rupees, incrementally, how can he shift his allocation?
Yeah. So, the lump sum allocation, as I said, can be done through STPs, more in hybrid and the large cap, flexi cap category. And the mid and small cap, precious metals, etc., can be done through the SIP route. So that way, given where the valuations for mid, small cap and precious metals is, a larger holding period and also a longer deployment period would help fade out the volatility. And as far as the lump sum goes, that can go into categories which are more fairly valued at this point in time, of course, through STPs.
Okay, and just finally, Megha, just to drive home the point for Sayyam, what should his ideal allocation be towards equity and then these balanced advantage, etc.?
Alex, that's a very difficult question to answer because, I would not know anything more about him than the information that you have shared. So I don't think I would be in a position to give, exact range of percentage allocation right away.
Okay, that's a fair, and that's a good answer. Let me take you through the second question. And this is Pallavi Singh who's asking this. She says she's 25 years old. She's got no SIPs running except for a corpus of 1 lakh rupees that is locked in an ELSS fund that matures in October of 2027. She's confused right now about how much to save as an emergency or for emergencies and how much to invest in mutual funds to take a budget trip to the US in the next 3 years. She's got a salary of 90,000 rupees and she's wondering how to go about saving and investing to achieve this goal. It's a relatively more straightforward question. Do you agree?
Yeah, and a tough one.
So, but how would you approach this?
Yeah. So first, I think Pallavi, she should kind of focus on building the emergency fund, and the emergency fund, how much to have is again, subject to the parameters we laid out in the earlier case as well, which is about stability of income, job security, financial dependence. Have the risk transfers been done for self and for the dependents again? Now, if these are in place, considering there are no other savings whatsoever except that 1 lakh, which is also in a locked-in product till, I guess, October 2027, one might want to have about 9 to 10 months of monthly expenses in an emergency fund. What we always suggest is in early years of investing, because there are no other, while money is fungible, as the portfolio advances, different pockets offer liquidity needs without a potential drawdown. However, in the early years, that is not the case, and we recommend 9 to 10 months of monthly expenses to be saved. If, these are not in place, as in, the job has significant threats, etc., then maybe you would want to consider to increase the, emergency corpus significantly. Now, as far as the US trip is concerned, I think let's break down, the expenses into different categories, ranging from tickets, visa costs, in-country travel, flights, etc., accommodation, sightseeing, etc. Let's, for the sake of simplicity, assume she is doing a 15-day trip. Now, travel, flights would be in the range of 70 to 75,000 if done at least with a 6-month kind of a window. If you talk about doing a budget trip, which would be, kind of staying more in hostels and not spending on cabs, etc., food, etc., all put together would range in an approximate range of 10 to 15,000 rupees a day. Multiply that by 15, you're talking about 1.5 to 2 lakhs of expenses. Internal flights, sightseeing, etc., would be again in the range of 1 to 1.5 lakhs. Let's understand that, the Indian rupee has depreciated in the range of 3 to 3.5% every year. Assuming this was to continue, the number of 3.25 to 4.25 lakhs that we estimated would actually move to about 3.6 to about 4.6 lakhs. Now, add to it travel inflation and another sundry expenses, we are talking about 4.5 to 5 lakhs of expenses, which, she would probably have if she's planning to do a US trip 3 years from now. Now, understand that you are not going to be needing everything at the end of 3 years when you're doing the trip. The tickets, the hotels, etc. have to be booked at least 6 months in advance. So you actually have a runway of only 2.5 years. And equity, by its nature, might not be the most prudent category to invest in with that kind of a time horizon. So my advice here would be that, the the amount which is left in ELSS, because it would kind of, cover at least 4-ish years, 4.5 years, can be used for any advance bookings she would have to do to, about 6 months ahead of the trip. But it is very, very important for her that she also starts planning her building her other corpus and long-term equity objectives also. So, to my mind and my calculation would suggest that, a SIP of around 12,500, assuming a 10% kind of a post-tax return into a hybrid kind of a fund would be best suited in this case. But it is also important to understand that this is a discretionary expense. And if markets do not, work in your favor, it may make sense to defer the decision, by a year or so, if need be. So one has to be prepared for that. But other than that, emergency corpus is extremely important, and also, also start investing towards other objectives and goals.
The one thing that you may not have considered, Megha, I don't know if you have, but have you considered incrementally increasing the amount that she invests every year for the next 2 years? Because we're now nearly at the end of a salary cycle, right? So you've got new salaries that kick in April, hopefully, for this person as well. For Pallavi, you can look at a 25-year-old getting, between 9 and 11% every year. Let's hope that that's the case, right? So you could have incrementally an increase in the amount that she can save by 10% every year. Is that something that can move the needle by a little bit at least?
Yeah, it should, because that is a given rule that with your increments in place, one should look at stepping up the SIPs on a yearly basis. Whenever you kind of sitting and doing your reviews, I think that is an important item to consider always.
Okay, so this is what the AI bot had to say. It says build an emergency fund first. Aim for 3 to 6 months of expenses. So assuming that your expenses are 50,000 rupees per month, then you should have 1.5 to 3 lakh rupees in a savings account or in a liquid fund for safety. The estimate of the US fund has been kept at 2.5 to 4 lakh rupees in 2026 based on current trends. So it's not really given you the projection as you've given, Megha, accounting for rupee depreciation heading into 2028, right? Or thereabouts, 2028, 29. The monthly savings plan with 90,000 rupees, it says cut expenses to save 30 to 40,000 rupees a month. I think somebody with higher income is capable of doing 30%. It's not so easy for people at 25, especially if they're living in places like Mumbai and Bengaluru. But assuming that they can do this, 30% is quite a significant amount. And after the emergency fund, they're saying invest 20 to 30,000 rupees in low-risk mutual funds, that is debt or hybrid. This kind of fits with what you were saying as well, for 3 years in order to grow safely towards the trip goal. They've also given suggestions here on things like an HDFC hybrid debt fund or an ICICI Pru short-term fund, which is not going to give you a very high return at this point. It says that you can use that ELSS down the line as well. It says that you can use the ELSS as a boost down the line, and you should track your progress every 6 months and adjust savings. You want to add something to this at all? It kind of rhymes with what you're saying, if it didn't exactly give all of the details that you did.
Yeah, I think this is more in line with whatever I have said. However, it is also important to consider, Alex, that she's just 25. So, I would not ideally give her, debt and hybrids for funds which are except for the US funding. Right? We might want to resort to more equity-oriented schemes given the long time horizon she may have. But that is, of course, we'll know better once, we have better and more nuanced details.
But Megha, if a 25-year-old with practically no savings came to you and said, look, I want to do a US trip in 3 years, as their financial planner, wouldn't you say, hey, you know what, maybe you should consider a cheaper option? Maybe go to...
I would definitely do that.
Maybe go to Bali.
I would definitely do that.
Maybe go to Bali, you'll save a lot more. So I'm just saying, for somebody that old, wouldn't you say that this is the best time to start investing, so that when you're 40 years old, you can do 3 US trips in a year?
Absolutely, because see, we do work with younger investors and we see that they actually want to take more frequent trips. So they kind of do not look at expensive options like, the US to begin with. So you're right, Bali or Thailand would be a much better option.
Okay, all right. On that note, I think we've had a pretty interesting conversation, woman versus machine. Megha, thanks so much for playing the role and for a lovely conversation.
All right. Pleasure talking to you, Alex. Bye.
All right. Well, take advice from artificial intelligence with a pinch of salt. And sometimes it's better to have a conversation with somebody just so that you can hear from them that you're not necessarily making the right choice with your money habits. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit on करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं।
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards. Coming soon on the NDTV network. 1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop? So I get more. What will happen? Union Budget 2026 on NDTV Network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends.
Budget 2026, the growth agenda.
Budget 2026 is going to be about the growth agenda. But in the words of HSBC's Pranjul Bhandari, it's also something where reform meets restraint. Now, why do we say this? Before we get Pranjul in the conversation, just a bit of a math that I want to bring to the table for all of us. Now, what is the budget math like? Capital expenditure or CapEx, which has been the big bulwark of what every budget speech and math has been, is this, that we've moved towards numbers of nearly 10 to 10.5 lakh crores, but the revised estimates, at least this year, came out to be lower, and the FY26 budget estimates still forecast a 10% high growth. Will this happen? That's one key question. Let's move on from the capital expenditure math to the tax revenues of the central government. Here too, the assumptions to some people seem stiff, but for a lot of other people, there are multiple ways in which tax revenues could actually get bolstered in the times to come. So let's keep a keen eye out for the number for FY26, more than what the revised estimate for FY25 turns out to be. Moving on from the tax revenues to the fiscal deficit number. Here, you would argue that almost everybody is on the same page. So while the fiscal deficit number jumped up during the COVID period, we've been on a steady glide path post. The expectation is that this 4.4 number could also be met because this government is very, very focused on meeting the fiscal glide path under any circumstances at all. So these are the key numbers with which the budget thing works with. And of course, like I said, capital expenditure remains the big bulwark of almost any budget speech. The question though, to our guest, Pranjul Bhandari, as she joins in the studios, or rather on the show, is whether or not this period of restraint that the government might have to exercise, will it be impacted by the need for reforms? Pranjul, great having you. Thanks so much for joining in. And I loved the headline, if I can call it that, of your report, wherein you mentioned that reform meets restraint, but you do believe that on most counts, the government will be able to live up to the numbers that the street has been working with or the government is forecast.
Yes, absolutely. Thanks for having me here. So look, there is the budget for FY26. The government had made lots of promises last year. So the first question is, will that be met? And then what are we expecting for the next year, FY27? Now, FY26 was an interesting one because we suddenly saw like the GST tax cut on top of the income tax rate cut. So therefore, tax revenues had been very weak. But interestingly, non-tax revenues came to the rescue. And within that, it was basically dividends. Dividend from the RBI, dividend from PSUs, especially oil marketing companies. I think that has been able to plug a lot of the hole which the tax rate cuts created. And then the government was also able to cut some of the current spending, basically, money it puts into different schemes. And I think on the back of all of that, the 4.4% fiscal deficit target of FY26 will be met. I'm also going to stick my neck out and say that for FY27, the next fiscal year, the government will be bringing down the fiscal deficit from 4.4 to 4.2% of GDP. Now, this is important. It is important because the government has a public debt target for FY31 Over the next 5 years, it wants to bring down public debt every single year. And from that, we can back calculate what the fiscal deficit should be in order to bring down the public debt. And when we do that calculation, we expect the fiscal deficit to fall from 4.4 to 4.2% of GDP in FY27. I would say this is not a very difficult task at all. In the last few years, we've been bringing down the fiscal deficit by a lot more, like 0.4, 0.6, 0.8% of GDP. The government has had to really cramp expenditure. But this time around, it's only 0.2% of GDP, which I think will happen on the back of some cuts in some of the centrally sponsored schemes. Now, the government runs a lot of centrally sponsored schemes, but unfortunately, in the last 5 years, they've actually doubled in number. You don't want to have too many because then you're running thin and you're too widespread. You want to focus on a few and really do well in those. So I think some sort of merger between schemes is going to happen, and that will help us bring down some of the expenditure, which will help us reach the fiscal deficit target. So all in all, my point is that without too much effort, I think we will be able to tread on this glide path that the government has laid out. And generally speaking, this is good for macro stability.
Pranjul, I saw that you said that for FY26, it's elevated non-tax revenue, which will help the government meet the fiscal deficit target. So in the absence of, or will an elevated non-tax revenue be a must for FY27 as well? Or cutting down in these capex schemes that you spoke about, or expenditure schemes that you spoke about, be enough to continue on the glide path?
No, I think we'll need help from all fronts.
Okay.
I'm assuming that the non-tax revenues will also grow by about 10%, which is my forecast of nominal GDP. And I think I'm not out of whack here. Generally speaking, at the rate at which the economy is growing, different sectors generally align towards that as well. So my sense is that dividends from PSUs, RBI dividends and all will sort of align with that 10% growth. And that's what I'm assuming at this point of time.
Okay. Sorry, please finish.
But since you have me here on this point, I also want to make a very differentiated point, which is that I think there's going to be a change in focus between 2025 and 2026. 2025, in terms of growth, was all about the informal sector rising back on its feet. We saw rural demand rise. We saw urban informal sector consuming a lot more. Consumption was the big theme. So informal sector and consumption were the big themes. I think in 2026, it's going to be more about formal sector getting back on its feet and investment picking back up. I think after taking a break for a year, we will be pivoting back from consumption to capex. And I think we will also be pivoting from informal sector growth to formal sector growth. And in a way, I can argue that right now we are in the crossroads of these two different worlds. And that's why growth right now is so confusing to read. At any point, I'm able to give you enough indicators that show growth is slowing and enough indicators to show that growth is rising. And generally, when that happens, it means the economy is in crossroads. And I do think we are in that crossroads. And from that perspective, my sense is that the capex budget will be kept elevated by the government, when we hear from them on February 1st.
So, Pranjul, even if the revised budgetary expenditure for capital expenditure comes off a bit for the current year, you believe that there could be around a 10-12% rise in capex. And part two of my question, is that because the government has done enough on consumption, boosting consumption, income tax cuts, GST cut, etc. Sab ho gaya. Now let's focus back on capex?
I think so. Yeah, I agree with you on that. So we are expecting about 10 to 12% increase in capex. Where will this money go? I think the traditional sectors have been road and railways, but more over time, even urban infrastructure is rising, which is very important. And I also think that capex loans to states is also something that will increase. It's a 5-year-long experiment that the central government has done. Every year it has risen this by a little bit. And I think in FY27 also we will see a big increase in capex loans to states. By the way, this is also important because the GST tax cuts have meant that, some revenue losses happen for states. So in a way, you try to compensate from all of these things. And I think capex loans will be a very important one out there. In terms of consumption, I must say that last year, the GST tax cut and all the income tax cut, it actually cost the government 0.8% of GDP in revenues. I think that's quite a big number. And I don't see a need or space for that to be repeated this year. So yes, I think there's going to be a pivot in the government budget from consumption towards capex.
Okay. And the line on your note says that a slew of reform steps and a neutral fiscal impulse are likely to be the hallmark of the budget. What reform steps are you envisaging?
Yeah. So look, I'm not going to say that there's going to be something new and dramatic that's going to change the face and shape of India overnight. What I do want to say is that I think some important things have been announced over the last year, and a concerted push will be given on all of them. On the domestic front, this whole deregulation drive that's happening in central government statements, I think that will pick up space, and I'm going to watch out for that. I think, capex will rise. There will be capex diversification. I think there'll be pruning of schemes. Some of the old centrally sponsored schemes will be done away with to clean up, the act to some extent. So these are some of the domestic reforms. And in some of the external reforms, I think we could see a little more subsidies to small firms and exporters, particularly exporting firms. We could see more openness in FDI. I think there's going to be a very big push in right-sizing customs duty, because right now we have a lot of issues like inverted duty structure or too high import duties that is making cost of production high in India. So right-sizing the whole customs duty regime, I think, is going to be a very important one as well.
Got it. Okay. Pranjul, so one is the budget and the government actions. Two is how is it that people think about it? And I think while the rating agencies verdicts have been constructive to benign, there is a fair degree of variance in how global agencies of various sorts think about growth numbers for India. Now, you do this via PMIs on a month-on-month basis as well. You would have predictions for what happens over, let's say, FY27 too. What do you think about the variance in these estimates? Is it a factor of how the world is right now, that it is so unpredictable? And what is your own target for the next 12 months or 15 months, as the case may be?
Yeah, so for growth, look, it's a very uncertain world, right? Every day the tariff rates for different countries are changing. There's new sort of geopolitical risks. Markets are moving wildly between risk aversion and, risk taking. So these are very difficult times to get a forecast done. But I would say that my sense is that when I look at India, I think right now a lot of the growth is coming domestically. We are not doing very well in exports. We may have done a little well in the first half of 2025 because of front loading of exports, but I don't think we did as well as many other ASEAN countries I follow, like, for example, Vietnam and Malaysia. So we haven't been a very external sector-driven growth. We've been more domestic-driven growth. What has helped us in the last 12 months is all these tax cuts, RBI easing, and then a lot of exogenous factors. The fact that oil prices suddenly went down, the fact that rains were very good. So all of that has helped our growth, but mostly domestic. My sense is that in the next 12 months, many of the things that helped us in the last 12 months are going to fade in importance, like rain, like oil prices. In a year-on-year basis, oil can't fall dramatically more or as much as it had fallen in the last year. And therefore, we'll have to look for new ways to grow. One new way to grow is that there are tailwinds coming from all the policy easing we saw last year. Like we saw the RBI cut a lot of rates, give some liquidity here and there. Credit growth has now started to pick up, and the hope is that it continues to pick up over the next year. So the tailwinds of the policy easing that has already happened may help us grow over the next 12 months. But we are at an interesting crossroads, as in it is possible that some of the green shoots that we are seeing in credit growth or some private capex in a few sectors, they fizzle off, or they gather strength and then they keep going. And that is the level of uncertainty that I have, in my forecasts. And with that, I would say for me, real GDP growth will be somewhere between 6.5% to 7%. 6.5% if we are not able to really, move on to this whole credit growth and capex story, and about 7% if we are able to move to this new world.
Got it. Okay. Pranjul, as we wrap up, I'm going to ask you to do the impossible, and which is try and give us some sense of how can one predict anything in a Trump era with all the uncertainty that comes in. Now, it's a difficult question. You might not have firm views on any of these, I'm just trying to understand, as somebody is looking at India and India growth and how it may get impacted due to various moves that happen. How do you, when you're writing a report, think of the uncertainties that come in by every decision by a decision that could come in almost every second day? And point two, it now no longer seems to be a tariff event against India because India has not signed the trade deal. I mean, it's happening against EU, it's happening as a clutch of other countries as well.
Yeah, I think what helps me keep my focus on my forecast is macro stability. I think it's very important to be in the position we're in which our inflation is fairly low, our current account deficit is also sustainable, broadly speaking, and we have fiscal deficit that is coming down every single year. And I think that creates some sort of confidence in the economy. Now, look, there are questions on growth. There's a question on timing. There are some times when other themes are interesting, like, for example, AI theme, and a lot of equity money is going there and not coming to domestic economy themes like India. But eventually, what sees you across cycles is, a strong sort of macroeconomic backbone, which I think we have at this point, and I think that is to our strength. And I'll make one final point, a little geared towards bond market. We've been so worried, every single day we are seeing the bond yields rise a little bit, despite the RBI trying to help out with OMO purchases. We worry a lot about things, but sometimes things can change a lot. And I just want to leave you with this thing on states. We are so worried about state funding and state fiscal deficit rising and creating very large borrowing. But if you look at the numbers, you'll see that the state fiscal deficit has already reached its maximum number of about 2.9 to 3%. States are not allowed to borrow more from these levels. So at this point of time, states can't really splurge from here. And I think that is going to be news for the bond market in a couple of months down the line that will bring in some comfort that state borrowing may not rise as dramatically as they have been in the last couple of years. So once you're doing the hard work, bringing down fiscal deficit, keeping inflation low, some of these positive surprises will spring up as time passes.
Pranjal, thank you so much for all the wisdom and the nuggets. Really appreciate your time and have a good budget. I look forward to talking to you post the budget is done.
Yes, absolutely. Good luck to you too.
Thank you. And viewers, thanks for tuning into this very special conversation. It was lovely talking to Pranjal Bhandari. I hope you got some idea about what the budget and the next few months or next few weeks could look like.
Budget 2026, the growth agenda, it's a budget for Bharat. What would it actually mean for all of us sitting here, all of us watching? That's going to be the key conversation that we're going to have today with none other than Keki Mistry. Welcome to the show, Keki, and always a pleasure to speak to you as well.
Thank you. Thank you very much.
The experience that you've had so far, the number of speeches that you would have heard so far as well, I'm sure you would be able to always think, you know what, this is what it's going to look like in terms of the budget. And these are going to be the focus areas. If you have to look at 2026, what according to you are going to be the key priorities of the government?
All right. So in my view, the budget will be around 5 or 6 themes. I think the first theme will be on growth. And we can talk about each one later. One is growth. Second will be employment generation and therefore encouragement to industries which create jobs. Third will be consumption. Encouraging consumption, because the Indian economy really thrives on consumption. It's 60% of the economy. That's the third theme. Fourth will be for the rural economy, because that's where a large part of the population stay. Fifth will be fiscal prudence, because I think they will continue with their aim at keeping fiscal prudence and probably bring it down a little compared to where it was even last year. And the last bit will be on encouraging manufacturing. So these will be the 5-6 broad themes of the budget, in my opinion.
Okay, so let's break this down. I'll club 2 of them. If you have to talk about fiscal prudence and growth together. Now, we're targeting a fiscal deficit of 4.4% for FY26, right? Do you believe there is some room for a slight slippage that could come in, say 20-30 basis points, if the money is then utilized for higher multiplier activities like infrastructure?
Not in my opinion. In my opinion, whatever is planned for infrastructure should happen, but private sector should be encouraged to invest more in infrastructure, or private sector should be encouraged more to create jobs. And there are ways and means of doing it. For example, take manufacturing. Now, there was a time when we used to have something called investment allowance, where when you bought a plant and machinery, then at that time 25%, and then at some stage I think it became 20% of the cost of that plant and machinery could be written off against your profit and loss account for tax purposes in 1 year. Then there was a period of time when there was accelerated depreciation. So when you, again, in addition to your normal depreciation, if you set up a new factory or a new unit which met with certain conditions, then you would get additional depreciation. So something like that could be created to encourage manufacturers to produce more, to create more facilities. Because if you create more facilities, you will automatically create jobs. And jobs will lead to consumption, consumption will lead to more demand, and more demand will lead to more manufacturers wanting to produce more. So it's a chain which will keep the economy growing. So in my opinion, fiscal prudence is important. We should not let go of the fact that over the last 4 years or so, every year we've seen the fiscal deficit coming down. Because a higher fiscal deficit will be inflationary. And once it becomes inflationary, then you have a new challenge to sort of encounter.
You know, but when you add to this, you know, yesterday, in fact, just we had IMF who's come out and upgraded your FY26 growth outlook, though they've said there will be some bit of stagnation that could be coming in the coming years as well, right? How do you read that entire transcript? Because currently all eyes are on India. You have tariffs which do come in as a concern. FTAs are being looked at as well. Probably we are fast tracking UK, US, no one knows where it's going. With all of this, how are you then looking at growth?
Look, I would look at it like this, that exports has been relatively, and I speak relatively, obviously exports are very important, but exports is a relatively smaller part of the Indian economy than it is of, let's say, a China or, you know, someone like that. So whilst exports are important, it's the domestic economy, the fact that we have a young population, the fact that 2/3 of our population is below 35 years of age, and all these young people are people who, if they get jobs, will spend money, will consume, and that itself will keep the Indian economy growing. We've seen tariffs came in last year, but the economic growth in the first 2 quarters has been exceptionally high. 7.8%, 8.2%. Maybe for the third and fourth quarter, because of the larger base, the percentage may come down. But realistically, the growth will be dependent more on the domestic economy than on external. I'm not saying external is not important. External is also important. But most importantly, we should be creating jobs within India to make the domestic economy grow faster.
Okay. So when you talk about job creation, how important does job creation and capex go hand in hand? Because private sector capex is something which is left far behind. The encouragement, you already mentioned a couple of points that they need in the form of schemes that need to come in from the government as well. But do you think, apart from manufacturing, there could be any other sectors which could actually drive this?
Services. I mean, Indian economy is largely based on services. Services is the largest component of the economy. Manufacturing is relatively a lot less than what it should be. So it should be all segments of the economy, whether it's agriculture, whether it is manufacturing, whether it is services, everything should be. So we have to find ways and means of creating jobs. And particularly important for us because of what I mentioned earlier, the young population, the fact that we have so many students passing out from schools and colleges every year, and you need to create jobs for them.
Okay. So we're talking about job creation, which is in the domestic market. We're talking about impact of global markets where exports, yes, it is important, but maybe not to that level. Then when you have to add to this the global volatility and trade, because yes, let's not go away from the fact that there is some impact, right? How do you think that the finance minister could prioritize to shield the Indian economy when it comes to financial buffers?
Well, first of all, as I told you, exports are relatively less, 22-23% of the economy. And within that, exports to the US are about 18%. So in terms of the tariffs, the way they are today, the impact on the economy would be, on the GDP, would probably be 20, 25, 30 basis points. Material, but not that material. We saw that when the tariffs were imposed, we cut the GST rate. And with the reduction in the GST rate, consumption has picked up. You will see that across the sector. Whether you look at auto, or you look at FMCG, you look at whatever, consumption has picked up. We have to make sure that momentum continues. And for that momentum to continue, we need domestic job creation. Now, you take housing, for example. Housing is a huge employment generator. It's the third or the fourth largest employment generator in the country, because there are so many jobs that get created, not just directly in terms of construction workers or masons or carpenters or plumbers, but indirectly in industries like cement, steel, paint, power, and so on. So a little boost to the housing sector. Like, for example, I remember in 2015 or 2016, the government had come out with this CLSS scheme, Credit Linked Subsidy Scheme. And we saw a big spurt in demand coming in for a period of 2 or 3 years. Something like that could perhaps be revived. I don't think the amount that the government spent was massive. Relatively speaking, the amount was less, the benefit was much more.
Benefit was much more. You know, when you're talking about job creation, the other thing that comes in is the risks that are associated with AI coming in. One way we are saying we need to create jobs, you have AI which is coming in as a disruptor to job creation as well. Because the conversation now is, if AI comes in full-fledged, what happens to the job creation? How do you deal with that aspect, and what would your view be with the risks associated to AI?
All right, so first of all, I think there'll be some governance. There'll be some rules that the government at some point will come out with on how AI should be governed, how it can be used, and so on and so forth. Today, if you look at any boardroom, one of the items for discussion in most board meetings is on what impact will be there of AI on the company, on the business of the company. A lot of people are reskilling. So jobs which could perhaps become redundant with artificial intelligence. Artificial intelligence will also create its own need for jobs. So you have to reskill the people so that whenever artificial intelligence can really be applied in a much bigger scale, it's being applied today, but in a significantly bigger scale, people are well trained to be able to adopt to it. I think it's a big opportunity. Okay. Let's not look at it as a threat. Let's look at it as an opportunity for India. We were the backbone of the IT boom in the world. And we should be at the backbone of the AI boom in the years to come. Okay. So I think it's a massive opportunity for the tech company.
Budget 2026, the growth agenda.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit on करो जरा। कब से बोल रहा हूँ कोई सुनता ही नहीं।
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our
Good evening. This is the big question on NDTV Profit. I'm Vikram Oza. Now the question is right before you. Should children under the age of 16 be kept off social media by law? Now that question is no longer theoretical in nature. You know, there are countries who've already done it. Australia has already answered that same question for us, becoming that first country in the world to enforce a blanket social media ban for under 16s. And they're slapping multi-million-dollar fines on those tech platforms that fail to comply. So that's the kind of law that has been passed in Australia already. France is the other country. They're moving in the same direction, as it were, following Australia. And now closer home, you have Goa, you have Andhra Pradesh. These two states are studying that very model. Of course, it's in a very nascent stage. They're still considering it. Whether or not they should push ahead is the all-important question. Could there be other states in India that could follow suit? But the concern is real. Global data shows that rising exposure of children to harmful content, cyberbullying, grooming, and online abuse, these are real. Medical experts are linking heavy social media use to higher risks of anxiety, depression, poor sleep, body image issues, all of these, especially among adolescent girls. But critics are still warning that this may be a blunt instrument, this kind of law. Age verification is very patchy. VPNs, those are very easy. And bans could actually push teens towards darker, unregulated corners of the internet, or maybe even cut them off from education, from expression, from support networks, something that they really need. So now that is the real question we're trying to answer. Is this a necessary tool to be able to ensure better mental health of children under the age of 16? Or is this going to prove to be a costly experiment, something that is very hard to enforce as well, which is why we have an excellent panel to take this across to. Let me introduce you to our panel. Joining us tonight on The Big Question, Dr. Harish Shetty is a child psychiatrist. Also joining us is Wilbrod George. He's founder of St. Wilbrod Schools. Great to have you with us as well. And with them, I have Anshul Tiwari, founder and CEO of Youth Ki Awaaz. Great to have all three of you, and we'll have more panelists joining us on this very discussion. But let's get things moving. Dr. Shetty, these medical studies, and including the ones that I was reading, the US Surgeon General's 2024 report, all of them are linking any more than 3+ hours of daily social media use among adolescents to nearly double the risk of anxiety and depression. So from a clinical standpoint, does that justify a hard age cutoff like what Australia is doing? Under 16 ban. Even if enforcement is not the most perfect, do you think it is something that is still required?
Absolutely. I think you have quoted the publication, Social Media and Youth. Now, it is not only Australia. France yesterday passed, a day or two back, passed in the parliament that under 15, they're going to ban social media. If you look at the UNESCO report of July 2026 or 25, they have clearly said that countries are looking to stop media for children by either law or through advice. If you also look at the federal court cases against Meta in the United States of America, many states have filed federal court cases. The Senate called the founder of Meta and told him, "You have blood in your hands." So depression, anxiety, and suicide has increased. And apart from that, across the world and experientially in India, though the figures are not so easily available, large experiments have not been done. It is dangerous. In fact, I see sexual abuse. I see long hours of being on the media, blue light, affecting their sleep and affecting their overall health. So children who grow up with this exposure and with it's not insomnia, but not wanting to sleep deprivation is worse than insomnia. These guys are going to have lifestyle issues before the age of 30. On the whole, it has been seen, and if you look at Matt Reed, the founder of Netflix, he was asked, "What are you competing with?" And he said, "Sleep." So I think the innovativeness of the media attracts children to Instagram, Facebook, and other platforms more than their own parents, more than their own friends, and more than the school teachers. So I think this is the right thing, and the countries will follow. I have written to the Prime Minister to follow Australia's example. I've written to Mr. Vaishnav also to follow Australia's example, to see that we also restrict Instagram and other platforms. Now, you will say that they will not be able to connect with friends. No, they have WhatsApp. They have so many other platforms they can connect. And by the way...
So they don't need this social media. Let me go across to your co-panelists for a moment and get their perspective as well. Benjamin Ram is also joining us. He's writer and former journalist with BBC. He's joining us from Vietnam and he's taking copious notes even as you speak. But Anshul Tiwari, let me come to you before I go across to Benjamin. Anshul, Australia is choosing these fines and they go all the way up to 49.5 Australian dollars, 49.5 million Australian dollars. This is for platforms who, of course, don't comply. So when you look at this as proportionate regulation or not, does it unfairly shift the burden of a societal problem onto the digital platforms? Is that the reality as well, when you are kind of penalizing the platforms?
I'm actually extremely glad that you said that. And there are, two ways in which I think we need to look at this. First is that you cannot ignore the fact that social media is a very integral part of a young person's life, development of their agency, development of their self-expression today. The fact that there are harms that come with being on social media is also absolutely true. So do you completely remove social media from a young person's life or do you regulate it heavily? I would strongly say that, given the fact that in India, there are young people who are developing their own identity based off of communities that they're finding on social media. They are developing their own ability to express themselves because of social media. There is, in fact, a whole generation that has grown up knowing that there is access to the internet, there is access to free expression, there is access to their own, right as a young person to access the internet, and social media is so integrated as a part of it. I feel like the onus should be on the companies, but the onus should not be on young people. And by removing them from social media, by banning social media entirely for young people, we are actually creating a more significant challenge for ourselves, because regardless of what platform they exist on, they could be on WhatsApp, they could be on any messaging tool, you still have darker corners of the internet where they will be found. You still will face a very significant social isolation because we as a society are not ready to face the challenges that young people are really dealing with. We've never been ready. We've never been open to listening to young people. We've often infantilized them. And there is, of course, more technical challenges of unregulated applications, VPN-based circumventions. So a ban, squarely banning social media is not going to really resolve the problem that we truly want to resolve. 100% there are issues like bullying and grooming and other harms that come with being on social media. And I feel like regulation and the job of regulation is to hold the platforms accountable, demand that they create more safe by design, platforms for children. Even in Australia, even though children cannot create accounts on social media platforms, they still can access public posts and so on and so forth. And there is no restriction per se on what is a public post and what is not. There is still clarity that is being sought on that. So I feel like banning social media squarely is definitely not the solution, not the ideal approach to taking it, to resolving these problems for young people. Attacking social isolation as a cultural, societal problem is probably the right way to go about it.
I'm sure Dr. Shetty has a rebuttal to that, but I want to get in Wilbrod George's view as well, because being a school founder yourself, Wilbrod, you see children daily. Tell me about parental consent rules under India's DPDP framework. Does that prove sufficient, or do you think schools are increasingly feeling that voluntary safeguards have failed and now legal intervention is unavoidable, or perhaps you can't do without?
Well, I'm not so sure if most schools are aware of the DPDP Act, and it's super new, and you can see all over schools, every ad that schools put out on social media, be it on Instagram or Facebook or their digital ads, they feature their own students. Every post almost has their, the students' full name, like the first name, the last name, and sometimes even the class and division. So that is, absolutely uncalled for, and it is a clear violation of privacy. So I really think that schools need to kind of up their game and understand how serious we need to take privacy towards. What I'm also seeing is parents, they're almost loving the fact that their kids are online. They're loving to put things about their kids, their kids' achievement, and where they're going for dance and things like that. Parents don't know the perils and the dangers that they're actually pushing their kids to, because the internet has this incredible permanent memory. And when I start thinking about my own childhood and when I grew up with the internet, at that time there was no social media, but there was internet. And what I mean by that is that social media for me is like 2, 3, 4 or 5 different websites. And most of these websites in their user agreements say clearly that it is not for children below 13. Most of them have that. So the fact that a school asks children to get onto Instagram or to any of these platforms itself is in some way contravention of the policies that the company themselves have put in. So that is kind of sad, because a child who cannot, say, be alone cannot think deeply. And a child who can't think deeply could easily be manipulated. And that is something that you, me, a parent, a school owner, a teacher, or a principal absolutely does not want. We want a thinking child.
You want a thinking child, and you think our exposure that our under-16s have to social media is getting in the way. Benjamin Ram, where do you stand on this? Because we've seen France and Australia argue that some protection now, they're saying that some protection now is better than waiting for perfect tech solutions that may come in the future. Is that a pragmatic policy choice, according to you, or do you think it's risking repeating any past moral panics around television and video games? Because Wilbrod just took us back in time when we had limited exposure. Today, it's much larger. Where do you stand?
Your previous speaker got it absolutely correct. We have to regulate systems, not users. So even in China, for example, the Chinese version of TikTok allows users under 14 40 minutes a day, from 6 a.m. until 10 p.m. And that is a stipulated period. There are content controls, there are guardrails to ensure that users are focused on information and they are not going to the dark corners of the internet, to those apps that your previous speaker spoke about. All of these moral panics, there is always perennially the question of how we deal with new technologies. And a complete ban prohibition never works and only drives people to areas of information in which they are not receiving something that is regulated either properly by the state or by corporations.
So, as you're saying, Dr. Harish Shetty, and perhaps you can come in, critics are saying that bans could actually worsen isolation. And there could be FOMO as well, especially for those who are vulnerable, who are neurodivergent teens. From your kind of practice, is the harm from social media exposure today, is it greater than the potential harm of any temporary disconnection?